on, that's the best wake-up music in the business. Good morning, everyone. Bon matin à tous. Welcome to the Explorers and Developers Day. Today, we have another packed schedule of presentations and panels for the day, so we hope you'll join us throughout the day. As usual, before we continue, I would like to thank our gracious and generous sponsors who have joined us once again this year. Many of them have been with us since our journey in 2022. Just a reminder that we will have our Glencore Student Awards and our Chico Initiative announcement at the end of today. The students have been here, of course, for 3 days, and they're very, very excited to come on stage. We will end the day at around 4 p.m. today with our traditional adieu cocktails, which will take place in the Verify Lounge. And now, I would like to welcome Adrian Day, Chairman and CEO of Adrian Day Asset Management, to the stage as your opening keynote speaker today. Adrian is also Editor-in-Chief of Global Analyst, an email newsletter published by the Investment Consultants International Limited. Adrian, the stage is yours.
Oh, thank you so much, thank you. Okay, well, good morning, ladies and gentlemen. I do admire your stamina in being up at this time on the last day. So the title of my talk, as you can see, is Gold Stocks, the Best Is Yet to Come. Some people might say the best, we haven't had anything yet. Well, let's not forget the gold stocks are actually up 40% in the last 12 months. I hear a lot of people complaining about the performance, but that's nothing to sneeze at, as we say. So let's start by looking at why the gold stocks have lagged over their traditional leverage, why that's happened, and then what's likely to happen to change that. So I'll run through the background quickly because I think we all know it. But the main reason that gold itself has gone up over the last 3 years is, of course, central bank buying. And you can see that very clearly on this, even though we've had a bit of a decline in the rate of growth in the last year. These are quarters. The buying is still significantly higher than it was pre-2022 and is likely to continue. And central banks, of course, are buying in order to diversify their assets in the face of dollar weaponization. That's unlikely to change with the new US administration, in my view, and that's as political as I get. The other major factor driving the price of gold has been Chinese buying, private Chinese buying, not official buying. And you can see here that in the last year, 10 months year, Chinese buying has shot up. That's Chinese people buying gold out of concern about a yuan devaluation and a decline in the economy, fragility of the banking system, not allowed to buy crypto, and so gold is the obvious place to buy. Now, there are some other buyers who are concerned about maybe the global fiscal situation and so on. But when you come to gold stocks, traditionally, North Americans have bought, and of course these buyers don't buy gold stocks. Sorry, that's an obvious statement, but I'll just say it. When you're the central bank of Uzbekistan and you want to you want to diversify your assets, you don't buy Newmont, let alone Ajax Exploration. You buy physical gold, and the same goes for the Chinese consumer. When we look at the North American who's potentially interested in gold stocks, or gold assets generally, what is it that attracts them to gold? What kind of economic environment? Well, I've already given a clue. It is the economic environment. And so if we look at where we have been in North America in the last few years, we've had a strong economy. I would argue with just how strong it's been, but certainly the narrative has been a strong economy, strong labor market. We've had high interest rates. we've had low inflation, we've had a strong dollar. Well, I ask you, does that sound like the sort of economic environment that really is conducive to gold buying? No, it's not. It's exactly the opposite. And then if you add on to that a rising S&P and TSX, if month after month after month, the mythical dentist in Oklahoma or wherever opens his brokerage statement and sees his account value go up, he doesn't really care whether NVIDIA is overvalued or Apple's cost of chips is going to go up or whatever. He just sees his value going up and is therefore less inclined or not inclined to look elsewhere to put his money. And so I think, although we ponder and we wonder why the gold stocks aren't any higher, it's not really completely illogical given the economic environment. I don't think it's illogical at all. And that's because gold itself has been driven by non-traditional factors. So let's look at what the interest is. This is the GLD, you all know that, the largest physical gold ETF. And you can see this year we've had a lot of buying as well as a lot of selling. I think it's fair to say that there's been some good buying, but hardly an overwhelming pouring of money into gold. But when we come to, and you can look at various surveys, there's a Bank of America showing that 75% of financial advisors have less than 1% of exposure to gold assets. That includes physical and stocks. I would venture to bet that most of those people are at zero, not at 0.99%. But still, the vast majority have virtually no exposure. Or look at this one that came out 2 weeks ago from UBS, I think, but I can't read it from up here. And this is family offices. If you've got really good eyes and squint, you can see the gold allocation, which again is the same as for financial advisors, just under 1%. So there's certainly no particular interest in gold among investors of all types, family offices, retail, investment advisors, and so on. And this is reflected in the flows. If you look at the GDX, which is the largest gold mining ETF, you can see that up until the middle of May, there'd only been those tiny little, can you see them? Those tiny little green spots. These are daily net inflows, by the way, net inflows. We've had some inflows in the second half of May, but in the last week, they've turned to outflows again. For the year, it's a net, for the year to date, it's a net of $2.8 billion of net outflows. So again, hardly interest in gold or gold stocks. Now, if we look at the performance, gold versus the GDX, and the GDX tends to be the larger miners, larger and intermediate, you can see that the performance is essentially the same. And so when people say to me, oh, when are the gold stocks going to move? When are the gold stocks going to move? I always say, well, which gold stocks do you own? Because, mine, Agnico and Franco and Wheaton, well, they haven't done too badly. I mean, 42% in 12 months is nothing to sneeze at. But nonetheless, we haven't seen the traditional leverage that we see from gold stocks at the beginning of a bull market. This chart here shows various times and various lengths. I just picked different lengths to show, to show that the leverage can be sustained. And we're calculating this from the bottom of the gold price, not the bottom of the gold stocks, but the bottom of the gold stocks. And you can see, I mean, look at 1986. Some of you won't remember that. Some of you weren't even born. But it was a pretty darn strong gold market, let me say, 1996, I'm sorry. And you can see that the gold stocks were up 82% compared with 6% So in other words, the gold stocks did more than 10 times that of bullion. And again, you can see this for all of the different bull markets or short bull markets that I've mentioned. And we clearly have not seen that leverage this year. And this actually is the XAU, which is the senior stocks. When you come to the juniors, it's even worse. This is the S&P TSX Venture Metals and Mining Index. I think they should get a catchy name for that. I can suggest a few, but you can see that there's virtually no movement over 3 years in the juniors. We're seeing a bit of movement in the last 9 months, 6 months, but over 3 years, they're actually essentially flat. And where you do get performance, but the names of these stocks don't matter. I did them almost at random. But you see a few very strong outperformers among the juniors, and you actually see the majority have lost money. The majority of juniors as exploration companies have lost money. The thick line, by the way, is the GDX, just for comparison. So that sets the stage for sort of where we are. But the good news is that the environment is changing in a favorable manner. Canadian interest rates, you already know, have come down a lot. I thought I'd throw something in on Canada since I am here. But, you know, we've got a record gold price, and with that record gold price, we've got record and growing margins. You know, unlike 2004 to 2008, when the price of gold doubled, but the margins actually stayed the same because the price of gold, the price of oil and the price of the commodity currencies moved up faster than the price of gold was rising. So you had a doubling of the gold price, but no increase in margin. Today we have quite the opposite. We've got the price of gold moving up dramatically, and the major cost inputs, even though everyone's complaining about inflation, the major cost inputs are staying the same or going down. So here's a graph that illustrates this, the gold-oil ratio, which has moved dramatically higher. I think that's 3 years, in the last 3 years. And when the ratio moves higher, of course, it means gold is moving faster than oil. Oil's the #1 cost input. If you look at the second largest cost input, which is your local costs, and so a proxy for local costs, not a proxy, but a reflection of local costs of a commodity, of the currencies in the countries in which you have mines, and we call those the commodity currencies, so Canadian dollar, Australian dollar, Brazilian real, South African rand, etc. All of those currencies, I don't need to tell you, have been weak. I know we've had a bit of strength in the Canadian dollar in the last few weeks, but they've been weak and certainly much weaker than relative to gold. Gold has moved up a lot faster. I'll remind you, for those who weren't around last time, 2011, the last peak in the gold price, the oil price was $143 a barrel, that's US. Canadian dollar was trading at a meaningful premium to the US dollar. The Australian dollar was at a meaningful premium. The Brazilian real was one of the world's best performing currencies. And so last time you had quite the opposite, strong, high costs in the background of rising gold prices. But now we've got quite the opposite. And so this is, and this shows you the US dollar peaking. Okay, that's a positive for gold. It does, on the other hand, mean that other currencies are moving up, which we've just seen with the Canadian currency, but still lagging the gold price. And so what we see, this is reflected in margins. We see increasing margins, and these margins have been increasing for 10 years. You know, I wish every time I listen to a conference call for the last 2 years, the CEO spent half the time talking about how their costs are going up and what programs they have in place to control their costs. I don't know why anyone hasn't talked about how the price of gold is going up and the margins are going up. And so the margins now are projected to continue to go up. And so in this background of very high gold price, very strong margins, increasing margins, an improving macroeconomic environment as the US economy slows and we move, and the dollar has peaked and we move towards a phase of lower interest rates, the stocks are just still remarkably undervalued. And I'll just give a couple of examples, if I may. This is Barrick's price to book. Barrick's price to book is in its lowest decile in its 40-year history. Agnico Eagle, which of course is a great company with no particular hairs on it, is trading at close to its lowest decile of its price to cash flow, again, in its entire history. Now, this is perverse because normally multiples expand when the price of gold goes up. You can see that on this graph. In the previous peaks of the gold price, you saw higher multiples. Today, we're seeing these very, very low multiples. And so lastly, to conclude, this is the value of the S&P versus the XAU, the gold stocks. And you can see that the XAU is cheaper, sometimes by a lot, sometimes by a little, but the XAU is more undervalued than the S&P, which again is an extraordinarily rare occurrence. Those of you who've been in the markets, I don't actually see anyone, but I was going to say, those of you who've been in the markets for 50 years, ask your parents or grandparents, they will tell you that this is a very unusual circumstance. Gold stocks traditionally have traded at higher multiples than the XAU, than the S&P. And that's because we're all optimists, right? We wouldn't be in this business if we weren't an optimist. So the conclusion I'm giving you is that this is an incredibly good time to be buying the gold stocks, notwithstanding the fact that we've seen this 40% increase in the last 12 months. They remain extremely undervalued in the context of a very favorable macro environment. Thank you very much.
Thank you, Adrian, for your insight and fantastic presentation. And now I would like to introduce Lisa Davis, CEO of Peartree, who will be doing a presentation on flow-through, a very important topic right now for our exploration groups. Peartree has been a longtime sponsor and supporter and ally of the event, and we are thankful for their continued support. After Lisa's presentation, she will continue on stage to moderate the morning session. Please help me welcome Lisa Davis to the stage.
Thank you, Joanne, and congratulations on another great year. I think the conference is getting bigger and better as we go. So it's been a busy year and actually an exciting time for those of us that work in the flow-through space. It's exciting that we have a newly elected government that seems to be very supportive of resource projects. There are obviously a lot of hurdles to overcome, but it's definitely the case that Canada's position as a leading mining jurisdiction can in large part be credited to the flow-through share regime. This is, of course, our mandatory disclaimer, which I'll let you read at your leisure for just a second. So what I'd like to talk about today quickly is sort of a snapshot of where the flow-through market stands, but I'd like to focus on some developments that have occurred during the year that are still sort of developing as we speak, but in particular, there's been some changes federally to what may be qualified as Canadian exploration expenses for flow-through share purposes, and the 2025 Quebec budget that was released very recently has some significant implications for financing Quebec projects. Before I go on, just a few bits of information about Pear Tree. You can read what's on the screen yourself, but I think it's important moving forward and looking at how much change we're seeing legislatively and judicially, how technically tricky this area can be when it comes to charity flow-through or structured flow-through financing, and how the significant experience that Pear Tree has, having been around since the very beginning, and with a convergence of skill sets ranging from geologists to CFAs to lawyers to tax experts. I mean, we really can sort through all of the chatter and help issuers come up with the best possible financing terms. I don't think too many people here would be unfamiliar with how charity flow-through works, but just as a quick recap and an example, what you see on your screen is just the structure of a charity flow-through financing with an example based on shares of an issuer trading at $1. In this particular case, this would be an issuer that could access the National Critical Minerals Exploration Tax Credit. The issuer would issue shares at a premium of about 30 cents, so $1.30 issuance. Those shares are then immediately donated to charity by the subscribing donor. The charity would be able to sell those shares at a discount to market to an interested institutional or strategic global investor. That could be done at about a 15% premium. So you can see that with shares trading in the market at $1, the issuer minimizes dilution and hopefully can attract an end buyer where there might have been some valuation gap in, particularly dealing with strategic investors that would be attractive to have on your register. So getting on to some of the tricky things in terms of where we are today and changes. What you see up on the screen is a depiction of the critical and strategic minerals in Canada and Quebec. So we've got sort of overlays between jurisdictions and also in terms of categories and what the implications are for what category that you fall into. The federal government, NRCan, has identified a group of critical minerals, which you see on the screen. On top of that, federally, CRA has identified a group, a subset of those, about half or a little bit less of those, which are eligible for the Critical Minerals Exploration Tax Credit of 30%. And Quebec recently in their budget identified a set of critical and strategic minerals which aren't exactly the same. Those are the ones that are in bold print, whereas Canada's critical minerals are highlighted in yellow. And for Quebec purposes, those critical and strategic minerals attract a 45% provincial tax credit. The other thing that's become a little bit complicated is that if you go back to basics to be able to access the flow-through share regime, the proceeds of a flow-through share offering have to be used to explore what's defined as a mineral resource in the Income Tax Act. Usually that's not a big issue. A base or precious metal deposit is a mineral resource by definition. And then there's a few others where the principal mineral extracted is specifically identified in the Income Tax Act, like diamonds, for instance. However, in certain cases, it's necessary to get a certification from NRCan for the mineral that you're exploring to be eligible for the federal well, to be eligible at all as flow-through. So like a recent example we came across with exploration for niobium, NRCan has said, well, it might, if it's a monometallic ore deposit, fit within the definition of a mineral resource. But if it's a complex system that contains other elements, you may have to get certification from NRCan. So just a little word of warning there that some of these things are not as simple as they might be, especially with some newer or critical minerals. So just quickly, I think I've shown this slide in presentations here before. It's been updated a little bit, but based on the exploration expenditure data that's been compiled by NRCan, we know that about half of all exploration in Canada is funded by the proceeds of flow-through shares. On top of that, of the flow-through share financings that are done in Canada on Canadian exchanges, the majority of those funds are raised via structured or charity flow-through offerings, with the trend being that about 3/4 of those deals are done as structured transactions. So we've seen this ongoing, consistent trend where the traditional flow-through financings are a smaller minority of where the funds are coming from. The other consistent trend that we're seeing, and this data is a little bit out of date, but it's the most recent available information from Statistics Canada, which was 2022, is about 90% of all flow-through financing comes from a very small number of taxpayers, about 13,000, who are in a high earning category of $250,000 or more. What's important about that, and these are one of the changes that we're watching for to see how they evolve over the next little while, is that high-income earners can be subject to alternative minimum tax, which is basically a parallel tax calculation that removes certain credits and deductions to ensure that those taxpayers pay at least a minimum amount of tax each year. And there were some changes that were announced, and some of which were implemented in legislation going back to 2023 and 2024. Some of those deny some of the credits, both for CEE deductions and for charitable contributions, which combine to create the result that you need a lot more income to acquire the same amount of flow-through without having to pay alternative minimum tax. There was an announcement in August of 2024 by the Department of Finance to amend the AMT rules that would be much more favorable for flow-through financing. Of course, with Parliament being prorogued and elections and what have you, the end of that story is yet to be written, so we're watching that closely. So just moving on in terms of recent changes, we're happy to see that the Liberal platform plans to expand qualifying minerals for the critical minerals exploration tax credit purpose to include a wider group necessary for defense, semiconductors, energy, and other clean technologies. More, I think, exciting in some ways is an issue that's been plaguing the industry for a long time, which is the view of CRA with respect to what can qualify as Canadian exploration expense, the expenses that you can use the proceeds of flow-through financings to fund. That definition is determined based on a purpose test, so the expenses have to be incurred for the purpose of determining the existence, location, extent, or quality of a mineral resource. And CRA traditionally has taken quite a narrow view of what particularly quality of a mineral resource means, and have always said that that's limited to the physical characteristics of the mineral. And they've also taken somewhat of a temporal view of the mining exploration sequence, thinking that it sort of stops. There's like a bright line and your exploration purpose ends at a certain point. So just a couple of months ago, the Supreme Court of British Columbia, in a case involving Seabridge Gold, came out with a decision, and I really applaud Seabridge Gold for going the distance with this, because one of the problems with the way CRA audits is that they base most of their auditing on administrative positions that have no foundation in judicial law, because there just haven't been decisions. It's obviously very expensive, and most junior companies don't have the resources to go to court over these things. But the Supreme Court of British Columbia came out with their decision in that case, and what it held was that the term quality includes a whole range of economic and operational factors that are necessary to assess the economic viability of a mine, and you can't just look at exploration without viewing it in the context of doing that exploration for the purpose of determining if that mineral resource can be mined profitably. So the court allowed a bunch of expenses that were denied by CRA, including expenses for engineering services that made recommendations for mine design, and those related to water management, tailings control, all kinds of capital and mine operating cost estimates, and even capital and operating costs in relation to processing. So it was a really good thing for the industry. There's still a portion of that is being addressed with CRA, so again, the end of that story hasn't been written, but I think still really important. Finally, I think that, well, the time has passed for an appeal, so again, there's a little bit more to come. I am running out of time, so I just want to quickly say that in the Quebec budget, there were some changes where the Quebec removed certain additional tax benefits that were available when Quebec subscribers for flow-through shares invested in a Quebec project. They have increased their tax credits for corporations, but decreased the ones for non-precious metals, so the critical mineral credits have been increased. One other positive is that these tax credits are accessible for development expenses, so that's new. They have a limit of $100 million over 5 years, but there's a lot of changes in Quebec and a lot of implications in terms of how you would structure a transaction for a Quebec project now. I would just say that if you have any questions, please feel free to contact myself or any of my team whose information is up there. Thank you very much. And now, moving on to my next duty, I'd like to have everyone please help me welcome Juan Carlos Sandoval. He's the Chief Financial Officer of Andean Precious Metals Corp., and he will be joining us for a fireside chat with Matthew Gordon of Crux Investor.
Hi, thank you. Here.
Good morning, everyone. Good morning. How are you, sir?
Morning. Good, good.
Looking good.
Thank you.
Looking good. Right, we're going to have a little catch up, but maybe kind of set the scene for people. Tell people a little bit about yourself and maybe sort of elevator pitch on the company.
Thank you, and thanks for having me. So I'm JC Sandoval, CFO of Andean Precious Metals. We are a company that have 2 producing assets, one in Bolivia. We produce around 4.5 to 5 million ounces of silver a year. And our new asset that was acquired late 2023 called Golden Queen. It's a gold producing mine in California. We produce around 55 to 60,000 ounces of gold.
Right. Okay. Thing that caught my eye, I think, like, might be worth talking about, is the kind of share register makeup.
Oh, let me tell you one thing, because it's an amazing story. It's how the company started. Our founder, who's still the largest shareholder, the executive chairman and CEO, so very committed to the company. He bought about 8 years ago from Core Mining, what still is the largest oxides commercial plant in the country. But he bought it when it had a very short life of mine, less than 1 year, right? But what he realized is the location of where the mine was, and or where the plant is, right? And so we started buying more from third parties. You know, there's hundreds of artisanal miners, cooperatives, other private groups. So instead of just focusing on our own deposit, we started buying more from those third parties. Long story short, it became a great success. So throughout the next few years, we were able to build a very stable production profile, or like I said, around 5 million ounces of silver. So it helped us. We built a very strong cash balance, very strong balance sheet. As of 2023, we had close to $100 million in cash, no debts, no streams, no royalties. So a very strong, clean balance sheet. So that allowed us to start thinking on, you know, what do we do next? We thought it was important to start diversifying ourselves. It was a strong buyer's market, by the way. So in early 2023, we started looking at an asset to buy, and we looked all over the Americas, from Canada, the U.S., Mexico, Chile, Peru.
Yeah.
I mean, you name it. And at the end, towards the end of the year, we decided to buy this producing asset in the U.S.
And back to the share register question. Who else is involved? Because there's some big names in there.
Oh, the shareholders up here.
Yeah.
Oh, yeah. Thank you for that. Sorry. Yeah, we're very unique from that perspective, because our largest shareholder, our founder, he still owns a big chunk of the company.
Yeah.
He owns around 55% of the company. Eric Sprott, who probably you all know, he owns another 15%. So between our founder and Eric, they own around 70% of the company. The remaining 30% is floating. But I believe it's a strong, good argument to say that two of the largest shareholders, they have a big chunk of the company and they're very committed to it. Right?
It's kind of interesting sort of dilemma for you, in the sense that you're building up a big cash reserve, which is quite nice, gives you optionality. But with a kind of share register around sort of 30% of retail, is that what you're saying?
Correct.
Yeah.
Correct.
Okay. Trying to keep that liquidity moving. You've had a kind of good run recently.
Well, yes, no, absolutely. Eventually we would, expect to have more float, right? But my margin, my float, my volume has significantly improved. About a year and a half ago, we were trading 20,000 shares a day. We're up to 250,000. So it's getting better.
Good. Let's talk about both projects, because I think as an investor, and certainly to development and producing companies, we like to sort of understand what the company's intent is in terms of its ambition and so forth. But let's deal with what you got today. Both projects. You want to start in the US or Bolivia?
Well, we started in Bolivia. We moved into the US. We once again have a strong balance sheet. I guess it's, everybody's asking, so what's next for the company? And what we have been saying is we're trying to change the risk profile of the company to being more North American focused, right? So yes, our intention is to both keep growing organically. We have, within our two assets, we can keep growing organically, but we're well positioned to probably make another acquisition, and most likely, we're focused on the North American market. That does not mean we wouldn't look at something outside or in South America, but our focus will be the North America.
Tell me about that, because obviously there's going to be pluses and minuses in different jurisdictions. I mean, Bolivia, is it a relatively easy place to do business?
Well, here's the thing. Whenever you invest in a country like Bolivia, like I've always said, you always need two things. One is that there's certainty, that they allow you to work, that there's no change in laws, changing tax codes, to expropriation threats. From that perspective, Bolivia has been even more stable than many of its neighboring countries, right? Basically that they allow you to work, right? We produce, we pay our taxes, we contribute a lot to our communities. And then the other one, which is as important, is that there are no currency controls. You can get you pay your taxes and you can get your money out. All of our money right now is sitting in bank accounts in the US and Canada.
Right, it must be like different cost structures though, which obviously affects margins.
Oh, well, absolutely. And well, here's the thing as well. In Bolivia, we're not a traditional mine, as I would call it, because we're more of a processing facility. About a year and a half ago, finally, after so many years, we decided to stop mining from our own deposit, to free up that capacity from our plant and keep buying better ore from third parties. So we're more of a processing facility, and we're always going for that refining
Yeah.
margin. And the U.S. is different. The U.S. very traditional.
So you can sort of keep filling that down in Bolivia.
That's the plan.
That's the
Correct.
plan. So it's a very different sort of setup, very different set of skills and team doing that. So North America, we always look at sort of return on capital invested and margins and all of that because we're here to make money and you seem to be making money. Is that a factor of the price of the metals that's done that for you, or what efficiencies are you driving from the operation?
That's a good question. I think it's a combination of both efficiencies throughout our operation and gold prices. Let me give you this example. When we acquired that company in November of 2023, we used an average gold price of $1,900. I mean, we're selling at 30, whatever it is, right? so I'm making an extra $1,500 per ounce of additional revenue that I had not foreseen, right? So yes, the commodity price is a big component of it. But on the other hand, Golden Queen first of all, we invested a lot of money last year, more than $30 million from our own money. So we expect a more reliable operation on the road. Right. And we have a very detailed mine and plant optimization, right. And it's well underway. So yeah, we're working on that.
So just tell us about the current operation and some of these efficiencies that you're driving. What are you working to? Is there more to come, or is it kind of steady state?
Yeah, well, when we bought the company late 2023, we knew we needed to invest. All of last year was a year of consolidation, investment. Let me give you this example. So the truck fleet. We brought a specialist who told us, guys, don't spend any more money because the previous management had not done the right, proper overhauls. And so at the end, we decided to completely replace the fleet, right? So that, we have a brand new fleet, they're more fuel efficient trucks, bigger beds, and things like that should at the end translate into having better margins, right? So it's a combination of a couple of things that we're doing in the U.S. to improve our margins, improve our production and our production profile.
So how many ounces are you
last year we produced 55,000 ounces. We expect something similar this year.
Right, so that's a kind of steady state production on that.
Yeah.
M&A, you talked M&A, every company talks M&A, but you've got cash to back that up. So in terms of the kind of profile that you're looking for, can you tell us about
that's a great question, because everybody's saying, okay, guys, you have two good producing assets, cash flowing, you have a very good, strong balance sheet. I have 100 million in cash. I have 80 million of liquid assets that I can dispose of. Yes, we are looking for, we're looking at an M&A deal, actively looking. We're paying particular attention to the U.S., mostly gold and silver. We can also look at copper. I think that if you buy into the idea of where the energy transition is going, eventually copper will be strong in the midterm. I mean, I wish I could replicate what I did with our acquisition of Golden Queen, buying a producing asset at a steep discount. I know nowadays that's more difficult. I wish I could buy another producing asset, but it comes at a price, right? And there aren't many in the market, and if it's there, it's because of something else happening up above. So I have to open my options, right? We're looking also not only at producing assets, we're also looking at development projects. Late stage projects. We can bear some of the permitting risk, so obviously the construction risk. So we have opened, our options. So we're looking at everything.
Right, and it's quite competitive out there at the moment for sure. So do you think your team has this mentality of we don't mind brownfields, we don't mind fixing things, and maybe that gives you a bit more exposure to a few more projects?
I think we have a very good idea as to where we want to go. Our founder has been saying this all along, and like I said, changing from being more South America to being more North American, producing asset preferably, but you have to be realistic as well as to what you can accomplish, right? Buying a producing comes at a price. So I mean, there are some very interesting projects. What we need to do, Matthew, right now is we need to extend the life of mine of my U.S. operations, and we're well underway on an exploration plan.
What is the life of mine?
It's around 5 years,
5
and
years,
we know
okay.
that's short.
Yeah.
But we have it's one of the reasons why we bought that company. We saw the potential from an exploration standpoint that the company has. And we started that exploration campaign last year. We allocated a couple $1 million last year, a couple of $1 million this year.
Right.
We already made some announcements, and it looks very promising.
Why not more money? I know it's hard to play a lot of exploration at the same time, but given its 5-year life of mine, does the amount that you're dedicating to that suggestive that you don't think there's much
No,
more
I
to be
think this
had?
is the right, I think it's the right approach. Our intention, and like I said, we are well underway on our exploration plan. I think we will, and we have been announcing to the market. I think our expectation is that more towards the end of the year, we will be able to announce at least to have a new internal MRI report, or even probably early next year, a new technical report. And we're quite confident, based on what we are already seeing, that we will be able to extend that life of mine.
Okay, and it used the word realistic there, which I quite like in this game, because it's rare. What do you make of all the executive orders being signed in North America? Is that part of the attraction to go to North America, or do you think that's just talk?
Well, that's a good question. There's always two ways of seeing it, right? What's happening in the U.S., it's creating uncertainties, right? And as an investor, nobody likes uncertainties. It's helping gold prices on the other hand, right? From the permitting standpoint, yes, it is. It is changing. I know that there's a direct instruction to speed up permitting, and we've seen it, right? So actually, on our M&A efforts, we are willing to bear a little bit more of the permitting risk because of what's happening in the U.S.
Right, and again, so come back to kind of margin, obviously, in North America, at these sorts of prices, I guess lots of people are making money, but consensus prices, what, 2,400, I think, at the moment. You've got to have a long-term view on gold. Does that kind of shape your thinking around, well, maybe silver, or maybe copper?
Yes, well, first of all, you always have to think in a counter-cyclical way.
Yeah.
Right? My intention right now is to lower my operating cash cost, my all-in sustaining cost. Right now, at my operations in the U.S., our operating cash cost is around $1,500. It goes to $2,000 all-in sustaining cost because of all the capex that we're investing, but we have a very good margin.
That'll come off.
But we're not stopping there, and our intention, and more towards the end of the year, is continue with that plan I was telling you about, the optimization of both the plant and the mine, and see a reduction on our operating costs, right?
Okay, so the rest of this year, you're in control, you got money.
Yeah, I think
it'll happen at your pace.
I think things are looking good. Like I said, we have 2 good producing assets. We're cash flowing. We have a very strong, good balance sheet for a company of our size. $100 million in cash, $80 million of liquid assets, very little debt. I think we're well positioned to continue, growing the company both organically and probably we'll do an M&A deal this year.
JC, appreciate your time today. Good to hear your story. Thank you very much.
Thank you.
Thank you, everyone.
Thank you.
Thank you, Juan Carlos. Now, please help me to welcome Kyle Frank, Vice President, Exploration and Corporate Development of Troilus Gold Corp. Troilus is advancing one of the largest undeveloped gold-copper projects in Quebec, focused on responsible development and unlocking value in the past-producing Troilus mine.
All right, good morning, everyone. It's good to see some faces here early on the last day of the conference and after dark last night. So if you're new to Troilus, I'll start from the beginning, but if you're following the story over the past couple of years, there's a lot of updates to get through today. It's been a very exciting and busy year, so we'll work through that. There's a lot going on. So this is, for anyone who doesn't know, this is a past-producing, open-pit gold, copper, silver project in the southern James Bay of Quebec. This operated for 14 years, produced 2 million ounces of gold and 70,000 tons of copper during the life of mine. Shut down in 2010, really due to a lack of drilling outside the known resources, so the resources were exhausted. The company at the time wasn't focused on this project. They were building other projects, namely Cobre Panama, globally. So lack of resources, shut the mine down, kind of a forgotten about asset. We acquired this in 2017, went public 2018, and got to work. Sorry, just one more thing. So since then, we've drilled over 300,000 meters, one of the largest drill programs in Eastern Canada, and we're one of the largest developing projects now in the country. So a bit about the timeline. I talked about the history. We've been working on permitting for the last couple of years. We're in the very final stages of that process, which I'll talk about more later in the presentation. We're working on basic engineering right now. Our feasibility has been out for about a year. And we're working on project financing to break ground in early 2027 in the best case scenario. This is a bit of a look at what we inherited compared to what we have now. So on the top, you can see this was really thought to be an underground resource, similar to Goldex, a nice ore body at depth below one of the old pits. And just due to putting the amount of meters that this project requires, built this out to what it is now, which is 13 million ounces indicated and inferred equivalent ounces. So when I say equivalent, about 83% gold, 15% copper, and a couple of percent silver. So southern James Bay, Quebec, about 2 hours from the town of Chibougamau. Chibougamau is 8,000 people. Probably a lot of you are very familiar with Chibougamau. It's a mining camp. It's a logging community, very industry focused. So we're in the Frotet-Evans Greenstone Belt, just north of the Abitibi. And the Frotet, historically underexplored compared to the Abitibi, a lot less exposed outcrop, more till coverage, more boulder fields, generally more difficult to explore, which has left behind a bit of an opportunity. So a closer look at the property, 500 square kilometers in the belt. This is all prospective greenstone belt. We've spent the majority of our time and efforts on the mine site, but we do have numerous precious metals targets across the property, which we're actively exploring in the summer months. So we've just kicked off an summer exploration project as well. We've got teams in the field every day following up on some of these targets. So we still believe that there's a lot of opportunity for new discoveries in the belt, and we're always looking for a new, especially high-grade discovery that could help supplement the mine. You'll see there's two former producing pits, 87 and J. The new resources expand those pits out, and you'll see they're flooded right now. We are working on dewatering as well, which I'll discuss. So this is what was left behind by the past operation. A lot of inherited infrastructure. The mill was dismantled and sold, but basically everything else is in place. So 60 kilometers of power lines, 50 megawatt substation, connected to the grid, 40 kilometers of roads already in place, ready to go. And most importantly, on the bottom right corner is a fully permitted tailings facility, which is ready for operation and has capacity for about half the mine life. So we don't have to worry about civil works to build the tailings facility and build the dam. It's already there. It's ready for operation. So a bit of a summary of the feasibility study. Again, this came out about a year ago, just before this conference last year, actually. And so that outlined a 22-year mine life, averaging 300,000 ounces equivalent produced per year, peaking out year 6, 7 over 500,000 ounces equivalent. CapEx 1.1 billion. This is a 50,000 ton per day operation, so large scale, think Malartic, think Detour, with a low operating cost of under 1,200 an ounce, all-in sustaining cost. So looking at our economic sensitivities, the base case was done at 1975 gold, about $4 copper. You can see the after-tax NPV is just under 900 million with an IRR of 14%. Fast forward to today's metal prices, obviously very different. At 3,300 gold, this is over $3 billion after-tax NPV and over 30% IRR. So very leveraged to the gold price, especially with our high production. Speaking of high production, this is a high cash flow operation as well. Once you get that CapEx paid back, this is a cash flow machine at over 150 million in free cash flow a year at the base case and over 300 million at the current metal prices. So looking at the production profile by metal, we'll produce in gold only 250,000 ounces a year, about 16 million pounds of copper, and 500,000 ounces of silver. So we'll produce gold in two ways. One is a gold doré bar, which is about 30% of the gold. The rest reports to a gold, copper, silver concentrate, and we'll produce about 75,000 metric tons of that a year. So in materials we actually produce, we're producing a copper concentrate. So we're very much a gold leveraged copper project. And the copper is really the key to how we're going to finance this project, which I'll talk about shortly. One other thing to note, I mentioned this early on, but we have kicked off basic engineering. So we're working with BBA, the Montreal team. So they're hard at work in the early stages. We started in February. They're completing trade-off studies, completing an extensive review of the feasibility study, and so with the plan to complete the basic engineering in the fall of this year. Again, this is just kind of project positioning on the all-in sustaining cost. I won't talk too much about this. This is the main takeaway here is we're a post-inflation, post-COVID feasibility study. These are more realistic and current numbers that we've used for our costs. So that's the main takeaway. So the financing. If you follow our news, you've probably seen a lot come out in the last 6 months about financing. So we started reaching out to export credit agencies, both in Europe and in Canada, about this time last year. So in fall of last year, we received 4 letters of intent from EDC, Euler Hermes in Germany, EKN in Sweden, and Finnvera in Finland. In summary, the European ECAs are looking for offtake of our concentrate. This is a really nice, clean con, about 15% copper, high in gold, high in silver, very low in impurities. It's a very attractive con for the smelters. So we've taken those letters of intent, which were totaling up to $1.3 billion in senior secured debt, and have signed a formal mandate letter with 3 lead arrangers. That's EDC, the Canadian Export Development Bank, Société Générale, and KfW. So the lead arrangers put up the money, and the ECAs sit below them and guarantee the money up to 90%. So a great deal for everyone involved. And this is low cost senior secured debt. The mandate letters for up to $700 million. So we're actively, I guess just one more takeaway there, we're actively working on the due diligence on that process, and we hope to have financial completion by the end of this year. And that financial completion will be subject to permitting, but we hope to have the terms agreed to and the structure of the deal finished. Okay, so back to the mine site. I mentioned dewatering. The pits are full of water. We've been dewatering the J pit since August. We're down about 40 meters. You can see in this picture. This picture is about a month and a half ago or so. Still winter up there at that time. Down about 40 meters. This was completely flooded. It's looking like a pit again. The dewatering is going directly into the watershed. We don't have to treat the water. It's neutral pH. There's no suspended, heavy metals or anything like that. We do have a water treatment facility, but we're not using it currently. If we get lower in the pit and we have some suspended sediments or sand or silt, then we will start treating the water. So we expect to complete the dewatering of J pit by the end of this year, and then we'll switch to the 87 pit, which will take about 2 years. So we'll be well ahead of production on the dewatering front. So focused on the local communities in Quebec now. In the construction phase, this will bring 1,000 direct jobs to the north. And once in production, it will bring about 700 direct jobs to the company. So massive inflow of jobs to the north of Quebec, massive influence. And looking at tax dollars, obviously a lot of free cash flow. This is at current metal prices, this will provide over $4 billion in tax to the province of Quebec and just under $2 billion to Canada. So from an investment perspective, we're right in that sweet spot, engineering, permitting underway, all that boring stuff. If you look at the projects that are 2, 3, 4 years ahead of us, they have valuations that actually match their resource and match the type of work we're doing. So we're completely undervalued right now. Looking at Artemis, which has a very similar resource to us, they're a $4 billion company, or $5 billion company now. We're about a $240 million company with lots of room for re-rates as we finish our permitting, finish our financing, and get closer to breaking ground. So just on the timeline, I didn't touch exactly on permitting, but it's well underway. We're planning to file our final environmental impact assessment this month, and then we hope to receive final permits by mid to late next year. That's been done in the province before, and we're confident in that timeline, especially with a brownfield site. All of our consultations and baseline work is done. So again, just to remind everyone, looking to break ground in a perfect world early 2027. So we put together a great team. We've made a lot of changes in the last 6 months or so. Mostly, I'll point out Chantal Lavoie. He's the new chairman of our board. He's a very experienced mine engineer. Just retired as the COO of Iron Ore Company of Canada, so an amazing influence from our board of directors. We also brought in Andy Fortin, who is a metallurgist. He actually worked at Troilus for 10 years when this operated. He then went on to commission Meadowbank for Agnico, and then helped to commission Eleonore for Goldcorp. Very experienced operator. He's in the position of VP operations for Troilus now. We also have a project manager in Denny Rivard. He's built numerous multi-billion-dollar projects around the world, including aluminum plants in Quebec and in Africa. He worked on the REM project with the case in Montreal, if you're familiar with that. This is not a big project for him, so very happy to have Denny as well. So we've built a team to actually take this into construction. Very quickly on capital structure, we're in a good cash position right now. We've got $20 million in our treasury as of our last financials, not including a $6 million investment that Van Eck did in January. On top of that, we just announced a 50 million Canadian debt facility with our financial advisor, Oramet. That's a 1-year term, kind of a bridge facility to get us through the next several months of all the things going on. So in a very good position financially, one of the best we've ever been. We're in a great position to tick all these boxes that I've just talked about and get us to where we need to be. So we're in a great jurisdiction, as we all know. We have the team to do it. This is a large-scale asset that will operate for over 20 years, likely much longer than that. And there's a lot of upcoming de-risking milestones that we're going to put out to the market in the coming months. So thank you all very much.
Thank you, Kyle. Now I'd like you to please help me welcome Peter Ma, President and CEO of Spanish Mountain Gold. Spanish Mountain Gold is developing a multi-million-ounce gold project in British Columbia, targeting near-term production with a strong focus on sustainability and efficiency.
Thank you. Bonjour, bonjour, merci. First of all, just thank you to all the organizers. All the organizers, sponsors, and staff for putting on this amazing event. Truly is a first-class experience and our first time here, so thank you, everybody. Welcome, everyone, and thank you for joining us today for my presentation on Spanish Mountain Gold. We are a single asset company located in British Columbia, Canada, a multi-million-ounce gold project that's rapidly transitioning from an explorer to a developer. Who's the next big gold mine to watch out for in BC? Well, we think we are, and I'll explain to you over the next 15 minutes. Please note the cautionary statement and some forward-looking information and views. Our project is located in a favorable Tier 1 jurisdiction, approximately 70 kilometers northeast of Williams Lake, British Columbia, Canada. We have year-round paved road access to within 6 kilometers of the project site. The company has built long-lasting relationships with the community. Thank you. Okay. With the community and surrounding First Nations who are supportive of the project, and the project's benefits. Nearby infrastructure is excellent with several operating mines nearby in the region. The company has entered stage 2 of the BC Hydro System Impact Study for the new power supply connection. We have over 4 million ounces of gold resources. Besides being highly levered to gold, there are 3 main reasons to invest, or why invest in Spanish Mountain Gold. First, we are anticipating a re-rate after the results of our new mineral resource estimate and new preliminary economic analysis are released. Second, torque. There are some really strong indicators of high grade across our mineral endowment, which extends over 10 kilometers in strike length, which bodes well for future discovery and potential value add. And third, with clean hydroelectric power available, Spanish Mountain Gold represents a unique green gold investment opportunity that is well positioned for a build decision by 2027. We have a new team, board, management, all with the skills and experience to advance this project towards that build decision. A little bit on capital structure. Our structure includes aligned management and key investors making up approximately 35% of our shareholders. We're cashed up to execute on our 2025 plan and on track for completion. There are approximately 56 million warrants outstanding, and if they exercise, it would be likely we'd finance the next stage of project development. This graph here suggests an exciting breakout time approaching for Spanish Mountain Gold, where we could delatch from the explorer trend and really get onto the developer share price performance trend at the top. We think gold price are at record highs are a great time to advance this project. Another way to look at it is market cap divided by measured and indicated ounces, gold resource ounces in the ground. Here you can see the most advanced developers on the left and sort of explorers and budding developers on the right. Spanish Mountain Gold is valued at $14 an ounce in the ground, while the average is around $660, suggesting a 10x re-rate potential. Here we compare the 2021 pre-feasibility study to the new envisioned 2025 PA targets. Overall, we expect to increase gold production and de-risk the project, leading to an executable and permittable project. Little on our 2025 plan and catalysts. As I mentioned, we're all on track. There are 4 main catalysts shown in gold here. The diamond drill program, 10,000 meter program, the drilling's been completed. We're waiting on the final assay results for the K zone. We're on track for a new mineral resource estimate anticipated here in June. And also in June, the new preliminary economic analysis will be released. And fourth and finally, the decision to advance the project in early H2 to a pre-feas or FS. Switching gears a little bit here, our 2025 exploration program achieved 3 main outcomes. The discovery of new game changers at the K zone, the outcropping Tuff, and Phoenix has increased gold mineralization close to the proposed pit. The learnings and validation of high-grade controls continued, and the discovery of very high-grade intercepts about a month ago at the K zone, which I have some slides on, create some interesting new possibilities, signaling potential low-cost open-pit mining as we keep drilling. So our exploration aims to continue to add upside to the project as we advance it. Here's a plan view of the 2025 program, the 10,000 meter program I mentioned. The targets are shown in color-coded dashed circles around the 2021 resource pit, which is the charcoal color. Green represents near-surface targets with low strip ratios. Red represents main zone targets with potential to extend the pit deeper. And then the black target, Phoenix, there on the left, is a new target that was discovered in 2011. It shows some growth potential proximal to the pit as well. It's also important we drill these targets here so we inform the infrastructure footprint of the new proposed mine to avoid sterilization of a possible mineralization and endowment. This is a long section view of the K-zone. You can see some really nice VG was intersected here. Hole 1286 had 139 meters at 4.18 grams per ton, included a record high-grade hit in our entire history, the highest grade hit we've ever had of 719.26 grams per ton over 0.75 meters. Hole 1285 was drilled in a gap in the K zone. It's the one more to your right. That had 39 meters at 0.99 grams per ton. So really nice open pit type material, and potentially changing, our views of how the pit will be developed in the future, and if this continues. The south fault is believed to control this mineralization and extends for another 2 kilometers, and very little drilling's been done on this new interpretation. And in fact, it is a new host rock called a mafic tuff. So we're pretty excited about that and the potential to do some more step-out drilling in the future. This is a long section looking northeast on the main zone, the slipper zone, and the outcropping tuff. So you can see it's kind of extending for 3 kilometers. The pit was 1.8 in the pre-feas. So this is, and the golden soil anomaly goes 5 kilometers, which includes the pit. So it's still kind of early days here, I guess, in some ways, even though we have a strong business case on the pit. What we have to be careful of is making sure the project footprint doesn't sterilize that extension to the northwest. The picture shows some massive sulfides that were intercepted here in hole 1275 on the far left. Sorry, I didn't get that through. Apologies. So on the far left, that's the outcropping tuff target, and the picture shows we intercepted quartz and massive sulfides. So this mafic tuff unit is really prospective, and it's really growing in its importance. At the Phoenix target, we intercepted also that mafic tuff. So, a new host unit in growing importance. The picture shows the presence of quartz, gleanus, phalerite veinlets, and pyrite veinlets that hosted gold. The mafic tuff at Phoenix is, as I mentioned, is similar to K-zone, but it's also similar to the outcropping tuff, and we saw it in the main deposit during our 175,000 meter relog program over the last 2 years. Here's another picture of Phoenix showing all that. We drilled 14 holes in this program this year. It's an amazing target, just right close to the pit. It seems to follow this north-south structure that seems to intersect the south fault where the K zone's on. So where that intersection is also a golden soil anomaly in that 5K golden soil anomaly. So we're excited about that in the future, following up and drilling that. We define the mineralization, and it's open in all directions. We were really targeting just this near-surface open pit target that we saw, but Phoenix is about 1.4 kilometers long by about 400 meters wide, and we intercepted mineralization between vertical depths of 60 to 300 meters, so pretty extensive. We're expecting a maiden resource to come out in June with this new mineral resource estimate, so looking forward to that. Interesting here, we intercepted a lot of flat structures, quartz and sulfide structures, as well as steep. So this, the oriented core that we've been doing is helping us identify some of the orientations of these structures that are grading, and we think will help us define even more mineralization. And that's it. In closing, Spanish Mountain Gold is rapidly advancing to a build decision by 2027. We have a new vision, strategy, plan, a lot of catalysts coming due right to this month. So exciting time. We think we're strongly positioned for a re-rate in an exciting and favorable gold market. Thank you. We appreciate the time for considering this opportunity as we reignite the gold rush in the Cariboo region. Thank you.
Thank you, Peter. Now, I'd like you to please help me welcome Rana Vig, President and CEO of Blue Lagoon Resources. Blue Lagoon is a gold and silver exploration company with a high-grade, near-term production project in British Columbia, strategically positioned for growth in a robust market.
Good morning. Well, thank you. Got a fan right here in front. I like that. Thank you very much. Pleasure to be here this morning. I'll just start with a typical forward-looking statement. Please do take the time to read it, because as you know, I will be making a number of forward-looking statements, and I want you to understand all the risks involved. I will say that I believe that you're going to hear over the next 15 minutes one of the most exciting stories that I can remember anyways in recent times. And the reason of that is because I've been working on this thing for 5 years, and we just hit a major milestone 2 months ago, and that's a game changer. And the stock already has been one of the best performing stocks of 2025, and we're just getting started. So we're very excited about that. And this is the milestone right here. You know, in the last 10 years, there's only been 9 permits that have been issued in British Columbia. And 2 of them, if you look here, 3 and 7, were for coal. I mean, it's incredible every time I say this. So only 7 permits, full mining permits, that have been issued in British Columbia. There's only been 7 in 10 years, and we just became one of them. So we're very, very excited. And people often ask us, well, what does that mean? Does that mean you're going to start in 2 years, 3 years? You need another $50 million? No, we're going to start in 2 months. I've spent the last 5 years, we've spent over $40 million building the infrastructure, and we are at the face of the vein and ready to go. We are in British Columbia. You can see up here in northern British Columbia by the town of Smithers. You can see here the dark area here. This is the property, and it's 22,000 hectares. And the corner of this property here, where you see the square, is the only exploration, the only activity that's been taking place so far. That's less than 10% of the entire land package. This is what the footprint looks like. You can see here, there's the portal. There's 1,000 meters of development that's already been done, and we're right at the face of the vein. You can see here the portal there. You can see we take a lot of pride in it. Not a lot of people have probably seen a portal like that. That's the beginning here, the rescue station that we just put in recently. That's what it looks like on the inside. You can see that's a recent photo, just to show you a little bit of what it looks like here. We got some equipment sitting there ready to go. This is our contract miner. You can see how laid back he looks. He's one of the best miners in the country. One of the advantages that I have is, because I'm not a geologist or a mining engineer, you know, I try to find the very best people that I can to make sure that I can execute in the industry that I'm involved with, because I've been involved in various industries over the last 40 years of my business career. This guy's one of the best, and he lives right in Smithers. And one of the advantages that I have is because the mine site is only less than an hour away from the town, that I get to attract very, very senior people who don't want to be in the bush anymore, you know, who don't want to be in a camp. So these guys can come home every single night to their families, less than an hour drive, which is fantastic. You can read all about some of our people at your leisure on our website, but I do want to point out a couple of people, again, surrounding myself with people who have the ability to execute. This guy here, Yanis Asidos, chairman of our mining committee. He put a company called Gold Source in Guyana, took it from 200,000 ounces to 2 million ounces and sold it to Mako. Steve Cutler here, one of our mining consultants. He's one of the consultants who was at Stillwater, so very specialized in narrow vein mining. And then Peter Bojo, some of you may know him, very, very experienced guy, been involved in over 20 mine openings and reopenings. And again, the strategy being, you know, these people have already seen it, done it, made mistakes. I don't need to repeat those same mistakes. So I use their brain power, you know, to help our team make sure that this thing is going to be a stellar operation and for a long, long time. Some of you may know Quentin Henne from Crescat. They've been a huge supporter. You know, it took me 9 months to get his attention, and this has been the story of our company. You know, and which is why when I bought it, even then it was overlooked. Everyone's overlooked this project. It's been under the radar for many, many years, and no one's known about it, including him, because everybody thought, well, this is just too small. And you know what? I'm new to the industry, relatively new, only been around for about 10 years, so my brain isn't quite contaminated that way. It's not, I think outside the box. And I think, well, what are the possibilities? And it took me 9 months, and finally when I showed him, after a 90-minute technical call, his last words were, "You boys have a hidden gem here." Right? So you can look more into that on your own. So being a business person, my philosophy and my strategy always has been, how do I get this something into cash flow? When I founded this company in 2019, I looked at over 200 projects. And one of the main boxes I needed to tick was, can I get this into cash flow? Because that's how I'm trained as a business person. And I found this under the radar project, and I bought it. And what I'm showing you here on this slide is, one of the things that we did is we have a toll mill agreement with a company called Nikola Mining, who has a state-of-the-art mill. And what I did is, even though we had the metallurgy done, I had all the historical records and everything, I wanted to reconfirm something. So what I did with them is I got permission to get 5,000 tons sent out to the mill. And I did that for two reasons. Number one, to reconfirm the metallurgy. And you can see here, down here, that we sent out 5,000 tons and reconfirmed 9 grams a ton. So this is a high-grade project, 9 grams a ton and 95% recovery of the gold. So that, you know, felt good. Number two, it gave my team, over a course of about 4 months, operational experience. Right? I wanted to, when I was ready, I knew I was going to get the permit at some stage. So when we were ready to go, I wanted no more delays. So it gave us a really great operational experience to be able to do that. And you can see here some of the trucks that we sent out. Oh, there we go. You can see here. So that's our ore, our mineralized material being. You can see the mill in the background there, just to give you an example here what that looks like. I'll move forward. From there, we took that, of course, and you know, that's the conveyor that's coming out of the primary crusher that moves up to the secondary crusher. Again, getting operational experience, getting a feel for everything, see how everything is going to work. And Nicola's been fantastic. From there, they of course make a concentrate for us. You can see those 1-ton bags. You know, that goes into the truck. And what I love is, the minute it lands on that truck, they pay us. You can see over 4 months here. This is our first one here, about $155,000 that we got paid from the mill. Here's the second one here for $431,000. Here's the next one here for just under $400,000, and the final one for, you can't quite see that, but it's $754,000. That's $1.7 million from just 5,000 tons. That was when gold was 1,800. So, you know, it's pretty exciting. Now, we have a starter resource. Here's another business decision that I made. You know, we start at 218,000 ounces. That gives us a 15-year mine life. And people often ask me, well, why don't you have it a larger? Well, I could have had it. I've raised millions of dollars in the last dozen years or so that I've been in this business. But if I raised it 2 years ago to do more drilling, our share count would have been 700-800 million. Right? That doesn't excite me and doesn't excite anybody else. So I knew we were going to get the permit, and I wanted to use the cash flow to then increase the thing, because we have over 1 million ounces just on the one vein that I'm going to show you here in a second here. And that averages about 9 grams a ton. That's our mine plan. You can see that. And again, this is all available on our website. You can read about it there. You can see here we're going to start off the first year at 15,000 ounces, and the revenue and the cash flow looks, you know, pretty amazing, just even at 2,600, you know, gold. Next year, we plan to move to 20,000 ounces. And again, at even a base case of $2,600, the numbers look pretty fantastic. Just moving right along here, here's the property, 22,000 hectares. That's the corner, that's all the focus is in. If I blow up that corner, this is what we get. And this is the main vein. This is the solid line there that you see. That's the 218,000 ounces. We've done about 50,000 meters of drilling in and around that main vein there. And you see here, these are 15 other high-grade veins within that corner. Still, we're talking about just that one corner. And the 218,000 is just that one vein that we're talking about. The dash line here, that's the part of that 50,000 meters that we did. If you look at this here, there's the resource that you see. There's the dash line. You can see all these drill holes It's all mineralized. So we know all we have to do now, that's the low-hanging fruit, is infill drill using our cash flow, and it'll look like this, right? So our path to double to triple the resource is very, very easy. We then went below the resource. We went 150 meters below the known resource, and look at this. We hit over 3 meters of 18-gram gold. And that's multiple hits. You can see multiple hits throughout. That gives us the confidence that we clearly have a strong project on our hands here that can produce. When we plot it all out, you can see it's open to the east, open to the west, open at depth. And this is one of the most important slides. You'll see the dark gray area here. That's our 218,000 ounces. The white here, that's the current mine, and we're going to mine all this out here. The white here, all these dots here, is what I just showed you, the drilling that we did. Between that white and that dark gray is 1 million ounces, we believe, right there. And that's only that one vein, all high grade. So that excites us very much. Very, very easy drilling to move that, advance that. Then a couple of years ago, we had just a kilometer north of that main vein, we had a new discovery. So we're excited about getting that cash flow and following up on that and drill there. You can also see here, this shadow here, this looks like the extension of this vein. So we're going to follow up on that. So there's a lot of activity that's about to happen here as we get going. If you look at the geophysics, you can see here, there's the trend. Our vein is down here, and we have a number of targets that we've identified. And again, we're still only talking with that little one corner there. And if I blow up this number 5, we're very excited about moving on that. And that's this one here. You can see it's clearly a porphyry target. So there's a lot of what we can do here with the project in the short term to grow it. And then, of course, we'll see as the cash comes in. A number of companies are already talking to us. We'll see what the opportunity is. How do we grow this company? You know, I'm new enough in this business to understand that most people that I talk to have forgotten that every large company started with one mine. In 1957, Agnico started with one mine, and today they have 11. So, you know, where do we go from here? Well, at these gold prices, who knows? Let's see what happens, right? The last part I'll tell you is it's very important to have a good, strong relationship with the indigenous community, and we have that. One of the things that we learned very early on is to listen to them and to understand what their requirements are, because no project can go forward without that. And one of the things that their philosophy is the Yinta. Yinta means essentially respect the land and be one with the land. So we understood that, and how did we employ that? How do I translate that to my staff? How do we think about that every day to make sure that we're good stewards of this land and not just business people looking for another ounce on the ground? What I did is I hired a local artist here, Bernice Nichols, and I had her make these giant murals. And these are something that reflects the Lake Babine Nation's culture. We had them framed like this, and you can see here, this is our mine entrance, and we put them right at the entrance. These hereditary chiefs came here and were literally in tears. They couldn't believe that we thought this on. What was the philosophy behind that? To remember every time we enter that property, remember the Yinta. I had them then put on every single building. There's our water treatment plant. Every single building has a different image on it to respect the Yinta, so that every day that we remember that we must respect the land. So these are different pillars that I believe that are the foundation to make a large company. Here's roughly our structure. Crescat Capital has roughly now about 10% of our company. Phoenix Gold Fund is about 6%. Nicola, our toll mill partner, was so impressed last year when they came to the property. They invested $1 million into our company. The president himself has participated in 3 different placements, so it was a great vote of confidence. We only have about, and then myself and my family and a couple of our initial shareholders, we have about 14% of the company. We have a couple $1 million. I've written many checks personally myself, and the rest is the retail base. So there you have it. We're only at, like I said, only about 140 million shares out, so still very, very respectable. And that's about it. So I'll leave you with a last thought, which is really, we're just getting started, and the key for us is cash flow. Keep an eye on us. We're going to be our official opening is July 9th, just in a few weeks, and we're going to be starting this summer and producing and shipping the mineralized material to Nicola. And really, to me, at these gold prices, it's like having an ATM. Thank you very much.
Thank you, Rana. It's now my pleasure to welcome the Copper panel, moderated by Dr. Nicole Adshed-Bell of Kupel Advisory.
Well, I think after that rousing music, we hope we have just a rousing panel as well. I'd like to thank you all. This is the hardy crowd that have stayed to the last day. We'll endeavour to keep it as exciting and entertaining as possible. So today we're here to talk about copper. And I have my esteemed panellists to help me with these discussions. And from my perspective, copper is the critical mineral. It's the foundation of the global energy transition, and yet despite the fact that we're seeing, which will start this year, and everybody agrees on this, a material decline in primary copper price, we are yet to see the underlying copper price increase to the levels that it needs to be to incentivise new production. So today we're going to discuss as to why this is, and I'd like to introduce my panel, so starting from my left. We have Dawn Wellman, who's the manager, hopefully I've got your title right, manager of research and development of Rio Tinto, so we've got the big boys in the room. Next to Dawn, we have Ernie Maas, president and managing director of Cygnus Metals, with their, I'm going to massacre the pronunciation of this, but their Chibugamu? I'll blame it on my accent, copper gold project and lithium exposure in the province that we're in today, in Quebec. Next to Ernie, we have John DeLuce, who's president and CEO of Abitibi Metals, with their high-grade B26 copper, gold, zinc and silver deposit, also in Quebec. And to round out the panel, we have Sam Lee, who is president and CEO of North Isle Copper and Gold, and with their North Island Copper Gold Development Project in BC. So to start off, I think, as I said at the start, that the copper cycle has been shaped by supply constraints rather than demand growth. So starting off with you, Ernie, from your perspective, where do you think we are in the cycle and what needs to shift before we see meaningful new copper supply coming online?
So a couple of things have to happen for new copper supply to come into production. A key one is the long-term copper price predictions. A lot of people are talking about $5 copper price as the incentive price in order for people to build projects. And not all projects require such a high price, but the majority of them do as the projects are getting bigger and riskier as we go forward. And of course, another issue which is quite important is the permitting regimes. Jonathan and I are fortunate enough to be in the province of Quebec, and as we move our projects forward, the province of Quebec has a very challenging, but call it quantifiable process for getting your permit. You know what you have to do, and you just have to go and do it. And there's very little uncertainty in the province of Quebec moving your project forward. And Quebec is not, or Canada is not, a litigious society. And so once you get your permit, it's pretty well a green light to go ahead. But we don't see that all over the world. And that's a really major problem for the copper industry in terms of getting the supply into the market.
Yes, with the average timelines from discovery to production now being in excess of 20 years, and permitting is a big part of the process. That's part of the challenge. So John, you're also in Quebec, so be interested in your thoughts.
Yeah, I think Quebec is certainly a great place to do business, and stepping back, we're at a real inflection point with the supply-demand imbalances now accelerating over the next 5 years. So it's not an easy equation to fix, because higher copper prices, we just can't throw money at this. As you said, the timeline from discovery through to production is so significant at a time that there's been such an underinvestment in exploration, in production profiles. So it's not an easy equation to fix, but I think the demand, higher prices help fix some of these issues with investment. But I think as well, we're starting to see political issues that are affecting supply. in terms of like 50% of copper supply worldwide coming from countries of political instability. So it's about what factors can increase supply. It's not an easy fix. And what risks is there to current supply? So there's a tough balance that we need to look at. But again, another reason why we're thankful to be in such a good jurisdiction.
And rounding out a big copper producing province, Sam?
Oh, you're absolutely right. BC was once Canada's largest copper producing province and potentially a region in the world. This happened, in the 60s and 70s. And we did see this migration outside of Canada to other very, very robust jurisdictions geologically, Chile, Peru, South America, Africa, because you could sanction projects quickly. And that was quite frankly, the regressive nature that Canada had faced is it became almost a pariah state or a pariah region because it took so long to effectively establish the will and consents of the people, the social license. And so fast forward to today, or perhaps even 5 years ago, we're starting to see a little bit of uncertainty in these other regions whereby this political instabilities or the lack of social license has created quite a bit of supply disruption. And so we're seeing this regression coming back into Canada, coming back into BC, for established protocol, for established permittings. And as one of the panel members said, you've got the assurance, once you have the permits, you've got the assurance that you have authority to move the mine forward. So I have always said I'd rather spend tens of millions of dollars figuring out whether something is permittable versus billions of dollars than having it effectively expropriated from me. So it's a very positive environment that we're shifting towards. It's not perfect. But it's certainly matching the rhetoric with action. I'm quite encouraged with what we're seeing in BC and the rest of Canada.
And Dawn, as a representative of Rio Tinto, so one of the largest diversified mining companies in the world, and I think the general investing public and corporates look to the larger companies as in terms of what they're thinking as that can lead enthusiasm or lack thereof for particular commodities. And so what is Rio thinking, as much as you can talk about it, in terms of when would be the right time in the cycle to either make decisions on deploying capital, whether it's from an M&A or advancing development decisions on existing projects?
Yeah, and it's really tough, right? Because the time that we're seeing in terms of when the supply and the demand isn't necessarily lining up with the time frame that we all need to be able to make those decisions. When do we start to, work to bring a mine online, like you said, 15 to 20 years? When do we start to make those capital changes? So, we look at all of the same factors that my co-panelists were just talking about, as well as things like, obviously forecasts and trends in that, but also just looking at kind of the global dynamics and the geopolitics of the situation. And as you started off the session, a lot of what's driving the drive in other sectors right now, which is causing the demand for copper, is being driven by climate change. And we're evolving from a technological perspective very, very quickly in new spaces, clean tech, AI, those types of things, all of which are increasing the demand for copper in particular. The challenge is the pace. The pace at which that demand is occurring and the pace at which it is aligning or not for us to actually bring those online, because like we're saying, we're not actually seeing the signals yet, but it's because right now we have a bit of capacity within the supply, and so at some point that capacity is going to be exceeded, and then we're going to get a really strong demand signal, and we still have the runways that we have in order to be able to get that ramp in production. So it's a really difficult balancing that we all have to work through.
And oftentimes, I think because you have such an inelastic response to immediately price pressure, so you tend to get these very big swings in terms of capital deployment in the system.
Agreed.
So John, Abitibi is advancing its high-grade B26 deposit, and you have a fully funded 20,000-metre drill program, a strong balance sheet, and so you're aimed at resource expansion and new discoveries in 2025. It'd be great to understand your experiences of working in Quebec in terms of the regulatory environment and the permitting regime, and how you found that in terms of an ease of doing business.
It's been excellent, and it's when trusted with family capital, we wanted a jurisdiction that we knew if we had success, it's a risky business, that we would be reflected alongside our shareholders. We had a bad experience in another jurisdiction where we made a discovery, but then we couldn't permit it. So all our efforts were in vain. But at the end of the day, Quebec has, in terms of where we're at, earlier stage, the drilling, the drill permit process, ATI process, consultation process is very straightforward. We're turning around permits on a 45-day basis, faster in our case because we are actively engaging with our First Nations and municipality partners. So there is a clear framework within the permitting sector, and we also have so much support from the government. We have Quebec institutional funds that have really been the lifeblood of the junior mining sector through this tough market conditions. We have larger funds like Investment Quebec, Case de Depot that are there for larger infrastructure projects. So really it's a very well supported province, and not all provinces are equal in Canada. So I think it really sets a competitive advantage and really removes some risk from what is quite a risky junior mining business.
Absolutely, and I'm curious, obviously your present CEO and your family officer is a very sizable shareholder. We live in an industry where capital is scarce, particularly at the junior end of the scale, and I'm sure there were many opportunities that you could have focused your attention. What about Abitibi focused you?
Yeah, I think really from our view, we're not perma copper, we're not perma gold, precious metals, bulls, but we see a significant opportunity over the next 5 to 10 years. So we're also taking capital out of industries like real estate that we felt were quite overvalued in the Canadian markets. But really, we wanted more exposure in critical metals and precious metals. And really at a time in the junior mining space that we feel that there's a lack of prudent management of capital. So I think we need to do a better job in making people money and having a better return and efficiency on our capital allocation. So that was part of what drove us after 25 years in the private mining markets to step in and have a flagship company for my family office. So it's a big part of the opportunity and finding an asset that we could really build a real company and team around. But again, the opportunity that's here.
Thank you. Ernie, Cygnus is advancing late-stage exploration assets, also including Quebec. And I think what's an interesting thing to point on is we have these discussions around jurisdictional risk, and that we have Canada and Australia and the States that are perceived to be low risk, but risk really manifests itself in different ways. And I think you made a point, John, earlier about you're in one jurisdiction and then permitting became a challenge. And so interested in your observations too, as someone who's worked around Canada, or your experiences in Quebec in terms of your ease of doing business, and just talk a little bit about your strategy and forecast news flow for this year in terms of what you're hoping to achieve your exploration programs.
Sure. Our project in Chibougamau, which is a 5.5-hour drive from here, location to the northwest. It's a town which is a mining town. 7,500 people. Started as a mining town in the 1950s, and there's been 17 past producing mines in the area. And we're looking at a restart of the mining camp. Our project's probably the lowest capital intensity project in the copper world. And we're at a point now where we've done a PEA, or a preliminary economic assessment, but at the same time, with the merger of two companies, Doré Copper and Cygnus Metals, we've put a refocus on exploration, and we are currently testing a lot of the targets which at the Doré level we just did not have the scope to look at everything. We've done a massive amount of document scanning, over 120,000 documents. We're doing compilation of all those documents and generating new drill targets, and we're going to have some pretty interesting news coming up. So our main news flow will be on the exploration side of deposits which we currently do not have a resource, so we're going to be issuing new resources on a couple of our deposits. We're a copper gold project, and right now in our PEA, 85% of the value is copper, 15% of the value is gold. However, a couple of the deposits we're working on currently, the ratio is almost flipped.
Right.
And so that gets us back to the historical camp, which produced about 3.2 million ounces of gold and 1 million tons of copper, is really a 50-50 copper gold camp. And so that situates us really well with the current environment for copper prices and gold prices. And so just getting back to your question, the the work that we're doing is a combination of exploration drilling at some of these deposits which we have in our sites, but also we're continuing to do infill deposit at our flagship Corner Bay deposit. We currently have 8.6 million tons at about 3.4% copper, making it arguably the highest grade copper deposit in North America. We're infilling that deposit now, and the infill work is going really well, but in today's current capital market, if you announce a 3 meter at 4% copper intercept, which fits in really well with your current model, it really doesn't move the needle. So we're countering that with kind of the more interesting exploration results.
So is it fair to say that investors or potential investors are responding more to the exploration excitement versus the true economic aspects of a development project?
Yes, definitely. And at one point, the company will make a decision where we're going to say, we're all in now for the feasibility study and getting to a final investment decision where we can translate the value in the ground into a project which would be a free cash flowing business. And at current copper and gold prices, all of our projects on paper look fabulous.
They do.
And the issue is the capital markets are not recognizing that. So our share prices are relatively depressed, and it's challenging for us to raise the money at the rate we need to accelerate. And that gets back to Don's initial point that we've got this disconnect where the world wants all this copper for data centers, for electric vehicles, for electrification, and the three gentlemen here, including myself, we're trying to satisfy that need, but our hands are tied because we just cannot go fast enough because we're limited by the capital markets, and governments do step in, such as Quebec, and we really applaud Quebec for doing that.
Sam, with North Isle, North Isle has absolutely broken the trend of the Lassonde Trough. You released a PA earlier this year, and not only has your share price not gone down, which is what usually happens, it's gone up, and you've had incredible share price performance. And so it'd be great to hear your perspective on what's resonated with investors about the story, and also just touch on your experience in BC as a jurisdiction with respect to the ease of advancing permitting and maybe some of the complications that have happened more recently around the jurisdictional side.
Sure, and you're absolutely right. The answer to the question is that simply we're second to none on the most important metrics that people care about from an economics perspective. The PEA is not an ordinary PEA, it is quite an extraordinary PEA. At analyst consensus pricing, not at spot pricing, so that's $21.50 gold, $4.20 copper price long term. This yields a $2 billion after-tax NPV with a 29-year mine life, a 29% after-tax IRR, and a 1.9-year payback. So think about this, a $2 billion NPV project with a 1.9-year payback. It's got a 1.7 times NPV after tax to CapEx. So when we talk about capital intensity, it's the question of, is the amount of NPV, is the breadth of the project good enough, strong enough to substantiate the CapEx that you're spending? We are second to none on that ratio. In addition to that, when you see a 29-year project, you very rarely, if ever, see an IRR after tax of 29%. The longer the mine life, the smaller the IRRs. That's just the nature of the model. That's why small 8 to 10-year gold projects usually have 30+ IRRs, but 30-year+ projects usually have about 15 to 20% IRRs. So from every single metric, from a capital intensity, from a return, from a materiality perspective, this project is second to none. You will not see another project that's defined. That's why the market is getting excited about this. And then coupled to your second question around BC, so how do you then take this this project parameter and execute it into a vision, that vision into reality? Well, if you look at our board, we are stacked with 2 mining Hall of Famers, Dale Corman and Alex Davidson, who just joined our board. We have an individual, Kevin O'Kane, who's worked out over 35 years at BHP. He built Escondida, which is the largest gold copper project in the world today. And then we have Martino Di Ciccio, who's the president and CEO of Montage, someone who's building a gold project in Cote d'Ivoire. So this is a leadership group that is entirely aspirational, but has all the experience to execute those aspirational goals. And what we have decided collectively as a group is that because of the political environment in British Columbia and in Canada, where we are now seeing 18 projects that have been high priority projects by the BC government, critical metal projects, we are one of those 18, and now have seen 4 projects that have been publicly expedited. Our objective is to be in the next announcement, the NDP announcement, around projects that are going to be expedited. So for that, that's quite a Herculean task, but based on the leadership of our team and our experience and our proven ability to make money for our shareholders and to do right by our stakeholders and landholders, we are very confident we will achieve this.
That's great. So I want to just move on to, we're going down towards the end in terms of time availability, but a topic that's near and dear to my heart, and M&A and strategic consolidation. And I think typically you tend to see very predictable behavior depending on where you are in the cycle. And so we live in an environment where I think you've heard with the 3 smaller companies here that all have assets that have very material strengths and should be advanced, but we're in a capital constrained environment. And so as we look at this, the thing that I ask myself is majors, I'd be interested in your thoughts on this, Dawn, is majors tend to acquire when prices are escalating. I would say most large companies don't tend to be contrarian investors, and so sometimes that can be a symptom of almost of being at the top. And so in our industry, smaller companies, one business plan is obviously that you aim to be taken out by a mid-tier or a large-sized company. But also there's an opportunity, I think, for smaller companies to get together and basically form a super junior, and your marketing pitch would be, well, we're going to control all future supply. And if you want access to that major company, then you're going to have to come and pay up. And so, Dawn, from Rio Tinto's perspective, what attributes do you think are key when you're evaluating copper projects, potentially either for partnerships or for acquisition? What do you focus on most? Is it size? Is it scale? Is it jurisdictional risk? Is it permitting timelines? Is it grade? Is it ESG credentials?
Yes. I mean, all of those things get factored into it. I mean,
Right.
we look at every one of them kind of on a case-by-case basis. We have a strategy. The opportunity has to fit within that strategy in some way, shape, or form. It has to align with our values. It has to align with our business objectives. And so we look at all of those factors.
Right.
In no particular order. I mean, they all factor into it.
It seems to me too that a lot of larger companies are outsourcing their exploration, and they're outsourcing it to the juniors, but the challenge to that, in my opinion, is that juniors need to constantly be raising money, and shareholders react to drill results. And so this very long-term commitment to train scale exploration that I would argue the majors did in a much more proactive way in the 1990s. It seems to be less of that now. So what are your thoughts on?
I think it's both. I mean, for us, we do have in-house exploration, but we do also look at juniors as well. I mean, they're a very important part of the equation as well. So for us, it's a bit of a mix.
Right.
And my opinion, but I think that's healthy. I mean, I think we do need to have some of that in-house expertise so that you're constantly, fitting within that strategy. You're constantly working on that strategy, moving things forward, doing that in-house exploration, not just relying on what's coming forward from the juniors. So I think both is kind of the right mix.
Right. So I'm going to open up to the 3 of you, and you can all jump in. But again, despite record high gold prices, very strong copper price environment, we're yet to see the share price love flow down into the junior sector. Capital is still scarce, it's hard to access. And so how do you navigate this world where there's a propensity and a desire to drive your project forward, but in doing so you may not get rewarded for the market? And so how are you thinking about that as each of you running your companies? Ernie?
In our case, we did a merger with an Australian firm to get listed on the ASX, and we're dual listed. And one of the reasons for us wanting to do that is we felt that on the ASX, we were rewarded with a re-rate on our project, and it did occur. Our project maybe tripled in value, market cap, because of that re-rate, so that's one of the things we did. And being on the ASX also gave us access to a different pool of capital.
Yeah.
But one of the more important things is the Cygnus company is part of a kind of a loosely knit group, and they have a very good street credibility in Australia, and so that gave us access to other capital. So that's how we responded to the value trap that we were in at the time.
Oh yeah, we used to see Australian companies coming to Canada for the re-rate, and now it's the reverse. So yes, I think everybody forgets that there's this huge pool of capital with superannuation funds in Australia. So John?
That's a great point. The ASX in history has led the Canadian markets. Hopefully we're there once again. But I think from our perspective, the key thing is staying well ahead of capital and tapping in. There's not a lot of institutional capital around for the small cap space, but there's some very targeted funds that have a long view on copper, especially copper gold deposits that are there. You got to build the relationships with them and get in front of them. But switching for a second, part of what excites us is the fact that traditional gold miners are now getting very aggressive in the primary copper space. So we are opening up the potential suitors of success at Abitibi as to, okay, who are our potential partners down the road? Not just traditional base metals producers anymore. We have examples this year of traditional gold miners investing across the copper space. So it's a great sign of flows of capital. The majors are performing extremely well on a cash flow basis. Eventually, after neglecting exploration for quite a while, it's going to trickle down into what is few quality development opportunities in the junior sector.
Yeah, I mean, some of the gold companies have probably, their marketing has been, I want to be a copper company when I grow up. I'm not sure that that's actually going to happen, but I think the attraction to that sector is very long duration assets. And Sam, you have a very long duration asset at 29 years. The average gold mine lasts 10 years, and obviously there's resource and reserve replacement, but maybe you could just touch on your thoughts as well.
Yeah, sure. Maybe I'll address that first because it's a really interesting segue into it. So I know that this crowd, I'm sure, knows Dr. Norm Keevil, Chairman Emeritus at Teck. He wrote a book called Never Rest on Your Oars. And in that book, he actually describes how Cameco evolved, right? And it actually evolved through gold. There was Hemlo. It was these very high-yielding gold projects that effectively helped facilitate the growth of this massive base metal copper conglomerate. Well, that's exactly our strategy. That's exactly how our PEA is configured. It's effectively a gold project. It's 70% by revenue gold that has the higher margins, 65%, 70% EBITDA margins upfront in the first 6 years, and then bridges into the much larger gold copper proposition that gets you that 29 years. And you're seeing this variation on a theme just expand through the industry with pretty much every single gold company looking to establish some copper exposure because the merits of copper is that it has so much longevity. It has breadth, it has 30, 40, 50, 100-year mine lives. This is sustainable. This is the definition of sustainability. And so if you have gold, which is, in my mind, copper is the critical commodity, well, gold is the critical currency. Right? And if you have that critical currency, you could contract your cost of capital, you trade at a premium, you're able to access capital more fluidly to effectively bridge to that longer term proposition. My background is investment banking, and for decades we were always wondering what it would take to get the generalist investor to invest in our industry. Well, it's copper. It is copper because it's relevant, it's big, it's substantial, it's investable, and it progresses to a narrative and a direction that the world is going towards. You have to solve a problem always, and the problem in this world is electrification. How do we substantiate this need for energy? It's through electrification, and copper is king. So that's my comment on the copper gold aspect of it. But I also want to encourage people that what we're seeing today, right now, is actually terminology in investment banking. When the ducks quack, feed them. We've now seen 4 very significant deals in the market. Today was just announced a Firefly deal, which is an ASX, TSX listed company, and the significant portion came from Australia. It was over $50 million, from what I understand, is doing quite well. We had Arizona Sonoran just raise another $40 million that essentially was driven by a $20 million lead order. So that's about $130 million they've raised for a copper developer, early stage, PEA stage project over the course of the last year and a half with a strategic 9.9 investment. So it segues nicely into my final comment, which is the answer to your question finally. The answer is through partnerships. Whether your partnership is established through institutions, and in our case at North Isle Copper and Gold, we have over $5 billion institutions that are in our story, that support us, sticky money, long-term. They put it into the illiquid funds. They're not going to sell. Franklin Templeton is our lead institutional investor. Whether it's partnerships through strategic cornerstone investors like Michael Gentile or Donald K. Johnson or our chairman at 10%, or insiders, we own over 20% of the stock. Whether it's through consortium groups, and I'll just, because of recency effect, I'll reference the Nico Eagle deal, or sorry, excuse me, the Foran deal, where they bumped up against a $350 million capital overrun for, I'd say, a very critical project for Canada, right? This is the newest copper mine that is being developed today.
And Sam, we're running a bit over time, and we have our next speaker. 2 seconds.
Partnerships. That consortium bid brings a brand that establishes a base, that establishes a safety net, that is able to support the risks that are inherent with mining.
Couldn't have said it better myself. So apologies for running slightly over time. We have a great panel. Please reach out to them if you have any further questions. Thank you very much.
Sorry.
Thank you to everyone on the copper panel. My name is Michael White. I am the president and CEO of IBK Capital Corp. IBK Capital for the last 35 years has been focused on the funding and advising of exploration, development, and production of minerals globally, metals. Today I'll be your chair for the next hour and a half, and I would just like to thank Joanne Jobin and her entire team for putting on such a spectacular event, as always, and we look forward to many years to come. So, up next we have Kenorland Minerals. I'd like to say, have everyone give a very warm welcome to Zach Flood. He's the president, CEO, and director of Kenorland Minerals. Kenorland is a leading North American project generator focused on early-stage exploration with strategic partnerships across high-potential mineral belts. Please give a warm welcome to Zach Flood.
Thank you. All right, we're going to switch gears here and talk about grassroots gold exploration in North America. So this company I'm presenting is Kenorland Minerals. I'm the president and CEO. I co-founded the company in 2016. We focused on project generation across North America. Our primary target commodity is gold, although we do have exposure to copper, nickel, and some other critical metals. When we started the company, we wanted to be focused on finding new mineral deposits. So that requires you to go out in areas that haven't been heavily explored, come up with new concepts, new ideas. It takes a really creative team and unique individuals and culture to do that and be successful at it. Early on, we partnered with a Japanese mining company, Sumitomo Metal Mining, here in Quebec, and made a high-grade gold discovery in the Frotet-Evans Greenstone Belt north of the Abitibi. So I'll talk about how we made that discovery. That resulted in us in a joint venture with them. At some point last year, we converted our interest in the joint venture to a large 4% net smelter return royalty on this deposit. And I think since then the market's taken a lot of notice to what royalties can be worth. We saw recent transactions like Origin royalties get bought out by Triple Flag there for over 400 million. Franco just bought a royalty on Côté for $1 billion, and Great Bear Royalties was another recent success in the space. This map just shows kind of where our projects are located and the amount of ground we're covering. We have over 2 million hectares of exposure in North America. So, to be successful again at exploration, I think you need to be covering a lot of ground, testing targets continuously, killing targets continuously as well. Unfortunately, this business is extremely high risk, and the failure rate is extraordinarily high as well. This year, we are a project generator, so we come up with these projects. We bring in third parties to fund the exploration. Typically, these are bigger mining companies. Sometimes we partner with juniors as well. In 2025, we're operating over $40 million of exploration across the portfolio. Around 31 million of that has come from third parties through these farm-out agreements. And again, all mostly focused on early-stage exploration. There's up to 6 drill programs testing new targets on, these are maiden drill programs or early-stage follow-up programs. All of this exploration is focused on targets that we generated through large-scale systematic exploration. So I'm just going to focus on the discovery we made in the Fro-Ted Evans Greenstone Belt. This project came about in 2017, and over a number of years we developed a grassroots target that we then drilled, confirmed a discovery, and then have since then been advancing. And I'll walk you through how we did that. So this is kind of interesting. So we noticed that there was a large swath of belt up in northern Quebec that was open for staking. We're always looking for areas of low exploration maturity, so that brought us up here. Also, you want to be in areas that have high geologic prospectivity. So Troilus is a big gold deposit in the belt. That kind of proved to us that there was the potential for large endowment. And we thought maybe there was at least one other gold system in the belt. So we staked the ground in 2017. We were a small private company at the time, had a few $100,000 in the bank account. So we immediately turned around and tried pitching this and bringing in a partner to fund the exploration, which that partner was Sumitomo Metal Mining. They began funding the exploration in 2018. We began with a regional till geochemical sampling program. These lines here you see are about 1 kilometer spaced apart, covering 56,000 hectares of belt. There was a target that appeared in the southern portion of the project there. You see the Renault target on the map. Over the next year and a half, we acquired some more ground. We dropped some ground that we sterilized, and we completed a large amount of infill till sampling. And it became very apparent that there was a big dispersion plume coming from an area that had no previous drilling or mineral occurrences. So we followed up looking for evidence of gold in bedrock or boulders. In this area, there's no bedrock exposure. It's all covered with glacial till and a shallow lake in the area too. But what we did find were a number of high-grade boulders running up to 400 grams per ton. We identified quartz veins and diorite, so we saw what the style of mineralization was, and 400 grams per ton is a pretty rare number to receive from the lab, so we knew we were onto a very high-grade gold system. The first drill program in 2020, 8 of the 15 drill holes intersected high-grade gold mineralization, including 11 meters at 18 grams on hole 7. We didn't know at this time which way the orientation of the veins were going and what we were really onto, but over the next few years, we continued to drill this off, and today there's around 130,000 meters of drilling into it, over 220 drill holes. We've identified multiple parallel shear veins hosting high-grade gold over 2 kilometers in strike length down to over 1,000 meters vertical depth, and the system's still open, it's still growing. At this stage now, Sumitomo owns 100% of this project, and again, Kennerland holds a 4% NSR. There's a 0.75 buy down for $13 million, leaving us with a 3.25% uncapped royalty. This is a cross-section through Renault, so the discovery began with the R1 veins up in the shallow parts of the system, and over the years, as we pushed the drilling deeper, we kept discovering additional parallel shear veins. And over the last couple of years, we put some really deep holes, over 1,500 meter deep holes down there, over 1,000 meters vertical depth, and continued to make new discoveries. So there's only a few holes in the lower parts of the system, but even those have hit grades like, or intercepts up of 4.5 meters up to 12 grams. So there's a good indication that the system will continue to grow. Here's another view. This is a long section. Again, just highlighting those deep holes down there, all intersecting high-grade gold mineralization, wide open for expansion. I think what we see here is clear potential to a multi-million ounce resource of high-grade gold. By the way, this project is located about an hour drive north of Chibougamau, right off the Route du Nord. You can drive a two-wheel drive, Honda Civic into the camp. So it's got great infrastructure, and we work closely with the Mistissini First Nations, which is a very organized pro-development First Nations up in the James Bay region. So what are the milestones ahead of us? We have a number of them. There'll be a maiden resource estimate at some point in the next year, followed by a preliminary economic study. All of this is leading towards a decision that Sumitomo may make to develop a decline down to about 300 meters for a bulk sample. So as these milestones are hit, I think additional value will be unlocked in terms of the royalty, and as the market and other players gain confidence that Sumitomo is serious about developing this, that royalty becomes a very rare and quality asset. And this just is a map of where the royalty coverage is. It's over 36,000 hectares of ground. There's a 1 kilometer AOI. So what's next outside of that royalty? I mean, we're continuing to deploy the same exact strategy all over Eastern Canada, looking for other gold systems. We have 500,000 hectares of ground in Ontario at various stages within the pipeline. South Uchi is a project that we have optioned to a private company, completed a maiden drill program on another grassroots target early this year. Waiting on assays for that, and then the projects elsewhere are either at the regional stage where we've identified large-scale gold targets for follow-up exploration, and the Cowcash project over by the Beardmore-Geraldton Belt is newly staked, and we'll be completing a regional first pass till sampling program there this summer. So just to look at another example here, South Uchi in the Red Lake District, it's about 80 kilometers to the east of Great Bear in the Lower Confederation Lake assemblage. We option this to Oronova Resources, where we hold 15% equity ownership, 30% carried interest to PEA, and a 2% uncapped royalty on the project. So that gives you an idea of the types of deals we're structuring. Multiple years of systematic exploration identified a large-scale gold geochemical anomaly in the central part of the project. Again, similar to Renault, there was no previous gold occurrences in this area and no historical drilling. This is exactly what we're looking for, and why we continue to do this type of exploration, is to identify the signal of a potential gold system that hasn't been discovered yet. So, like I said, we completed a maiden drill program there in the first quarter, 14,000 meters of drilling that Oronova funded, and we'll be putting out complete assays on that in the next month or two. These projects elsewhere in northwestern Ontario in the Wabigoon and Quetico areas all had first pass regional geochemical surveys completed on them last year. I won't draw your attention to the Flora project in the top there. On the left-hand side is, again, that regional geochemical survey data with, you can see the gold assays there. So we've identified another large-scale, 7-kilometer-long coherent gold and till anomaly in an area with no previous historical drilling. On the right-hand side, this is what Renault looked like at the same scale. So you can see that in terms of a comparison. We'll be following up on the Flora target this year to get it to drill stage, and then likely be drill tested early next year. And then the Cowcash project, newly staked in the portfolio, 125,000 hectares of ground. We'll be completing the first pass till sampling up here this summer. The Ayuichi project, this is 230,000 hectares of ground up in the Opunaka sub-province in the James Bay region. Sort of outside the box geologically, but there is evidence for gold systems in these high-grade metamorphic rocks. And we'll be completing a first pass till sampling program there this year as well. And also staked this year was staked or acquired was the Atlantic project in New Brunswick, covering 150,000 hectares of Devonian volcanics, which our perspective, I think, for epithermal gold and potentially intrusion-related gold systems. Puma exploration has been having some success with Kinross just to the north of us. Really, the belts that had not been heavily explored for gold and no real systematic work done. So again, we'll go in here and complete that first pass regional till sampling program and see what comes out of it. So I guess you can see, what our strategy is. We don't get married to any one project. Really, the goal here is to just continue to generate these projects, find new targets, get them drill tested, do it in a capital efficient manner, and hopefully come up with other discoveries. Through this business model, we've managed to sustain our share structure quite well. Over 9 years of exploration, we still only have 77 million shares outstanding. We've got $25 million in the bank, so we're really well capitalized. And operating all this exploration does generate a revenue stream for us through management fees and other cash payments and such. So this really helps keep us going without having to dilute shareholders all the time, which is a really important point there. And lastly, in terms of share structure, this is often overlooked, but one of the most important aspects of investing is knowing who your shareholders are and what their investment timelines are. And luckily, we have a lot of long-term quality investors. Even here in Quebec, lots of the Quebec institutional funds are participating. Caisse de dépôt, SIDEX, FTQ, NQ, all hold share positions. We have other institutions like Euro-Pacific, Adrian Day, and some really well-known individual shareholders, John Tognetti, Chairman Emeritus of Haywood Securities, and Paul Stevens down in San Francisco, and Rick Rule, of course, is a big champion for the project generator space and royalty companies. And then two strategic shareholders, Sumitomo Metal Mining owns 10.1% and Centerra Gold with 9.9%. So yeah, keep an eye out for us. We're going to continue doing what we're doing. There's always exciting news flow, and again, that royalty, I think, is what's really adding a lot of value right now to the company. So cheers. Thanks, everyone.
Thanks, Zach. Next up, we have Chris Donaldson. He's the Chief Executive Officer and Executive Chairman of Valkia Resources. Valkia Resources is a newly formed exploration company focused on battery and precious metal projects across Canada's most prospective regions. Please welcome Chris Donaldson.
Does this work, or is that? Oh, there we go. All right, perfect. Well, this is pretty cool. The looks like the Northern Lights behind us here. Valkia actually is short for Arna Valkia, which is means buried treasure under blinding light, which is the Northern Lights. So I like the backdrop here. As mentioned, I'm Chris Donaldson. I'm the CEO of Valkia. We're a relatively new company focused on gold exploration in Finland. We trade on the TSX Venture under the symbol OZ or OZ. I will be making some forward-looking statements, so if you are going to make an investment, please read this before you do so. Okay, so what do we have? In September, last September, we completed a purchase of 5 properties that we own 100%. They're exploration properties. We're right in the heart of activity in the central Lapland of Finland. That's a greenstone belt, and it's an area that is becoming globally significant for gold production and exploration. It's anchored by a mine called the Kittilä mine. which is Europe's largest gold producer, and it's owned by Agnico Eagle, and we are adjacent to that mine. Our main project is one called PANA, P-A-A-N-A, and we have a discovery on that. We had a quasi-discovery when we obtained the project, and we just did a program, completed that in March, and proved that out. We are embarking on a new exploration program this summer and have some walk-up targets that I'll get in today. This area is unique, and as you'll see, in that there's a real concentration of majors in a small area, about 100 square kilometers. We are adjacent to Agnico Eagle, as I mentioned. We also have B2 Gold and Orion in the area, Kinross Gold, and one of the best discoveries and stories really in the space over the last 5 years is Rupert Resources. We're about 60 kilometers from their Akari mine as well. We also have two joint ventures. Rupert is earning in on 2 additional properties, up to 70%. They're active on that now. They're about halfway through the earn-in. We also had some legacy assets in Victoria, Australia, in and around the Fosterville mine. And a company called S2 Resources, who we actually purchased these assets from, are earning in up to 80% of that. And they've just started their drilling campaign as well. So for an early stage gold exploration story, we got a little bit of meat on the bones, or quite a bit of meat on the bones. We've got a fantastic team around it. My background is on the corporate development and finance side. Worked for a number of years with a company called Western Copper and Gold. Helped bring in Rio Tinto, and then came off to start running this company. I won't go through all the directors, but I'll point you to George Salamis. Many of you may know George. He's been in the business a long time, but he cut his teeth in Finland. In fact, he lived in Kila for a year. He was a vice president of exploration for a company called Reeder Hayden, and from 1999 to 2006. And they started at about our stage. He was able to take that from discovery, put a resource on it, and sell it to Agnico Eagle. That project that he had is now at Kittilä, which is Europe's largest producing gold mine. He's our lead director. He wanted to come on board. He sees a lot of similarities between what we have and what he was given when he started in 1999. We also have Mark Bennett. Mark comes from S2. S2 is a spin-out of Sirius Resources. He built up that company and sold it for $1.8 billion. Mark's PhD, Geo, 2-time Prospector Award winner in Australia. And he had the foresight to assemble these projects that I'm going to show you in 2014. So we have a first mover advantage, or he had a first mover advantage that we're taking or able to take advantage of. And you'll see that we actually have what I believe is the dominant land position for exploration projects that aren't already controlled by a major in some way. Our chief geologist is Dr. Chris Leslie, a very talented geologist. He was part of the Blackwater discovery, and he leads our efforts from Vancouver. Craig Perry, that many of you know, he's taken many juniors. I think he's at 5 now from our stage to over $1 billion market cap. NextGen, IsoEnergy, Visa Silver, Skeena, to name a few. He's our largest individual shareholder. We are fairly tightly held. We've got about 32 million shares out. The transaction that I did, we bought for $7 million, $1.5 million cash, $5.5 million in share consideration. So that 44% you see there, that's S2 Resources. Those shares are locked up. 10% is owned by management. That amount is growing. I've been buying out of the market. We don't have a lot of money, and as such, we have just launched a financing yesterday to help fund us through the summer, and I can talk about that if we have time at the end or afterwards as well. So S2 will get diluted down after this next round of financing. So what we're looking at here is about 100 square kilometers in the Lapland. You see the postage stamp in the bottom left. This is north. This is Arctic Circle or above. Everything you see in red is what we own. You see the whole area is anchored by that Kittilä mine, which is 9 million ounces at 4 grams. Our main project is Pana, and as you can see, we've had some good hits, 7 meters at 12 grams, 20 meters at 4 grams. So we've got a good discovery. We've got something excellent to work from. The other companies in the area, baby blue is all Agnico. In gold, you have Kinross Gold, which is an exploration property right next to us. Just south of us in kind of the salmon color, that's B2 Gold and their JV with Orion Resources. And then, of course, Rupert in the bottom right there, and their Ikari deposit, which they've got about 4 million ounces at 2 grams, and they're well on the way to starting to build that out. It will be a mine one day. One thing to know about this area is it's all covered by till. So there's an extra step in exploration. You'll do your geophysics and soil sampling, then you do base of till or bot drilling into the bedrock. If you see the pathfinders there, then you'll go deeper and do the diamond drilling. So on Pana, we've only had about 15,000 meters of drilling. Only a third of that is at any kind of depth, but we've already had 300-gram meter hits, so it's been very effective when we are able to drill. Companies are focused on these shear zones. Rupert and B2 are focused on the Circus shear. We're focused on these north-south trending shears, the Musta shear, which comes up through Pana, and the Kittilä shear, which goes through our Palvinen project up through Kittilä and our Rover project as well. The big takeaway here, what attracted us corporately to the area, was just that concentration of majors and how few juniors are actually operating in the area. And of course, the other thing is just the mineral endowment that is there. These greenstone belts around the world tend to house many multi-million ounce deposits. All the guys in the area use the tagline, this is like the Abitibi 100 years ago. It has only been explored in earnest for the last 35 years or so, and really with any real gusto in the last 10 years. So we expect that distribution of deposits to increase as we move forward. We like Finland for a lot of reasons. The area that we're in is fairly remote. It's active with logging, so there's road access right up to site. There's 5G on site, but you don't have a lot of neighbors, and you're not so remote that you need to have a remote camp. It's not helicopter supported. All the infrastructure is there. Of course, the mine, Agnico's mine, is 14 kilometers away. I'll talk a little bit about the Pana project, which is our flagship. As you can see there, all the base of till drilling in baby blue. There's been about 2,000 holes poked in that. And it's divided into two target zones, Arnavalkia West and Arnavalkia East. Our focus has been on the west side, which is a 1.3 kilometer anomalous anomaly that's there. The east anomaly is actually 3 kilometers. As you can see from the bottom, most of the work has been done on the west side. That's where we focused on our last campaign and where we'll focus primarily on our summer program as well. One thing George Salamis wanted me to do is take those base of till results that we have, and also take the ones that he had at Kittilä when he started in '99. And a couple of takeaways. One, we have very similar grades, and the potential for scale is there. The other takeaway is that it appears that till, there's not a lot of transport to it. And that's evidenced by when we underlay the current pits from the Kittilä mine, it seems to be that the mineralization is relatively in situ. So what you're seeing if you see it, mineralization in the soils and base of tills, chances are it's right underneath as well. So if we're looking at the west target here, I'm going to eventually show you that long section A to A prime. And what you notice is that this area, Kittilä started open pit and then went underground. Rupert is proposing the same. So you got a potential bulk tonnage situation. So you see long sections of lower grade punctuated by these high grade plunges that are there. For example, 65 meters at 1.5 grams, punctuated by 4 meters at 18 grams. And you see the rest of the results that are there. So we potentially have the same situation. One thing that came out of the recent program is that we appear to have 2 different styles of mineralization. And so we've got 2 zones now, the Honka zone, which is more Kittilä style. It's associated with a little more arsenopyrite. And you've got the Koivu zone, which is the new zone that we have flushed out. And it appears to be more Ikari style and associated with just more pyrite. The benefit to that, it seems to hold together a little better, a little more continuous, and should be easier for us to quantify as we move forward. If we look across that long section, this is all the drilling that's been done. And the good news is that everything that you see there hits some kind of mineralization, so we know we're in a system, and it's a good system. The story is they started with that FAVD 40, hit 10 meters at 5 grams near surface, went deeper and hit their best hit at 4 meters at 18, went 600 meters out and hit 65 meters at 1.5 grams as well. You do see that most of the drilling, though, is quite shallow, and we're just starting to go deeper now. That Koivu zone that you see there, we have some logical targets. That one in the middle was the initial drill hole. We went above and below that. What we're excited about is that it appears we've got about 200 meters of continuous mineralization there. Our logical next targets are to flesh out this zone and check up dip and down dip, and of course at depth. It appears that there's a series of stacked parallel shears that are there. We've only gone down to about 350 meters. Keela is modeling down to 2,000 meters right now. And so, yes, our planned program is to focus in on that Koivu zone initially, and then to check the extents of it as well. And that'll be phase 1. Phase 2 will be doing a little bit more target generation across the eastern anomaly, and also up at our Rova property as well. Of note, Rupert had some great results in their first hits, but it really was their 4th target that really made that project run. Running out of time here. So as mentioned, we do have a financing. I just opened it up yesterday, so happy to talk to anybody about that. I think for gold exploration story, we're certainly in the right postal code. We've got, there's a reason why all these majors are in that area. People like Finland. They're chasing after these multi-million ounce deposits that are prevalent in greenstone belts. And we certainly have a good discovery, and we'll be able to flesh that out this summer. So thanks for your time, guys. And thank you for the conference organizers for having us. Take care.
Thank you, Chris. Next up, we have Bob Wares. He's the Chief Executive Officer of Osisko Metals Incorporated. Osisko Metals is developing 2 of Canada's premier base metal projects with a focus on copper, positioning itself as the future supplier for the energy transition. Please welcome Bob Wares.
Thanks, Mike. Alors, bienvenue tout le monde. Je vais présenter aujourd'hui en anglais, puisque la plupart de nos invités sont anglophones, mais si des questions posées en français, gênez-vous pas après la présentation. Donc, as many of you know, Osisko Metals is basically the base or critical metals branch of the Osisko Group. We've done very well. For those who know us, we've done very well over the years in the gold space, but metals is entirely focused at this point on developing 2 projects. Point project in Northwest Territories, which is joint ventured with Appian out of London, and Gaspé Copper, which we own 100%, acquired by from Glencore in 2023, is advancing rapidly. Last fall, we published our latest resource, sitting right now at just over 800 million tons, pit constrained at 0.34 copper equivalent. So that's copper, moly, and silver. And in third category, 670 million tons at similar grade. So we're looking at a very large system, low grade, with potentially scale and excellent potential for fast-track development into a bulk tonnage copper operation, which could become actually Canada's biggest operation in the eastern seaboard. So it's located in the Gaspé Peninsula. It's a brownfield site, an old Noranda asset, which was mined for over 45 years. Shut down in 1999. Big advantage is that infrastructure is still in place. The site is located in the central Gaspé Peninsula. This is a view towards the east, and you've got a 97-kilometer paved road to Deepwater Port for potential export of concentrate. Power is still on site with power lines, substations, and the mining town of Murdochville is still sitting beside the former operation. So mine closed in '99 as a result of 65 cents per pound copper price. Fortunately, those prices between 1990 and about early 2000s, copper was really a rock bottom, forcing closures of several operations in Canada, and fortunately Gaspé Copper wasn't spared. But in its day, it was actually a very spectacular operation, one of the biggest underground mines in Canada, room and pillar mostly, but spectacular room and pillar operations, pillars over 35 meters in height, accompanied also by a small open pit. They had 12,000 ton per day mill and their own smelter, which was part of the Naran division in the 50s, following up on Horn and Kit Creek. The new team was re-merged after the sale of Windfall, Osisko Mining 2 Goldfields for $2.2 billion. So now we're all focused on advancing Gaspé Copper. So we raised $107 million last fall. We have about 95 in the till right now, and we're proceeding with a 110,000 meter drill program at Gaspé Copper with about 8 drills. The new share structure is looking like this. The financing brought in a good 50% institutional interest in the space. A lot of institutional interest now for developing copper projects. Strategic corporate investors and management still holding about 10%. The coverage has done very well since last fall. Now we've got coverage from Canaccord, Hannam Partners, National Bank, Scotiabank, and Velocity Trade. So the property was acquired in 2023 through a non-clawback deal with Glencore for US $25 million payable through issuance of a convertible note, which will mature next year, in which case we'll issue about 40 million Canadian in 40-cent units, which will grant Glencore a share plus a half warrant. And also, once we hit commercial production, a milestone payment of 20 million US. Work commitment over 4 years was fixed at 55 million. Glencore retains offtake on 100% of copper concentrate production for life of mine, and retain a royalty which averages about 2% across the property. So this is the state of the property right now. The white outline are the claims, the original mining concessions in orange, and our entire resource, which I mentioned before. 800 indicated, 600, over 600 inferred. It sits entirely within the old concession. And the state of the property, this is a bird's eye view where we're at now. Glencore spent about $150 million remediating this site in the last 10 years. So the old smelter's gone, the mill is gone, and only the garage administrative building is still standing. One small water treatment plant to treat effluent from the mine site. There is no acid effluence in Gaspé Copper because the whole deposit is hosted within a calcareous limestone sequence. So this plant is uniquely to treat a failed attempt at heap leaching by Noranda in the 70s. Annual cost is about $250,000, so it's not a material cost. So the resource, as I mentioned, came in. We essentially allowing us to triple the resource from the May 2024 estimate. So now we're sitting at over 9 billion pounds, all categories included of resource copper. So it's a very significant copper resource. At this scale, it's actually comparable to what's left at Highland Valley in BC. I'd like to point out, however, that within this larger resource, there's still about over 500 million tons, grading a significantly higher grade, about 0.54. Strip ratio now sits about 1.5, but we've optimized the whittles since last fall. We're down to about 1.1 strip ratio on the project. So this is again focus on the footprint area with a view to the northwest. It's a simply dipping calcareous sequence. The Copper Mountain Porphyry system focused on the pit, and skarn horizons moving up dip towards Needle Mountain down here. And that is the focus of our drill program right now. This line here, which is where our current resource sits, is what we're going to drill into measured and indicated resource. But we'll also expand the drill program between now and the end of the year to deepen, test a deeper resource here with the idea of having a larger pit-constrained resource. And that work is in progress and should be completed by December. Right now the plan is to release a new MRE by February 2026. And we're very excited because to date, we've published these holes, and all the holes we've released so far since we started a drill program are outside the current resource. This is the 1.5 billion tons I was referring to previously. We already have clear success in going deeper between the two skarn horizons. In green, it's the C zone, and E is the E zone. So very exciting. We're off to a good start, and we'll be firing non-stop news flow at drill releases till the end of the year. Metallurgy came in last year with 30 tests. Average are very good. We've got a clean moly con, clean copper con, 92-94% recoveries in copper, with about 26% average copper grade in the concentrate. Molybdenum running between 65 and 70, with close to 60% moly in concentrate. And to date, we have no deleterious elements. So we're very happy so far with the metallurgical results. We've got a $2 million additional MET program this year to test recoveries on an expanded program that will include about 80 samples. On the community engagement and social licensing side, we've had continuous meetings in the last 3 years with local community, including, of course, the town of Murdochville, and also with Micmac First Nations. Things are going well. We're currently negotiating an exploration agreement with the Micmac, and surprisingly, no NGOs have voiced their concerns yet. It was quite surprising since we're 2 years into the process, but I'm sure they will show up at some point. But safe to say that we have excellent community support on the project. So bottom line, we're on a 7-year timeline to get to FID. We're in this box here right now, completing the drill program, new MRE and PEA in 26, and we're shooting for a feasibility by the end of 27 or beginning of 28, and shooting for final public hearings. In Quebec, it's called the BAP, for the beginning of 29, hoping to get to FID by the end of 29. So it's a bit ambitious for a timeline for Canada even, but with a bit of help from Mark Carney, I think if he manages to shrink the federal process, I think it's realistic. I can safely say that the federal process is much more arduous and long than the provincial process. And since this would ostensibly be a large operation, we are subject to both processes for permitting. But if all goes well, we'll be at FID by, which is final investment decision, by the end of 29, and then proceed to a 2-year mine build with potential start of production in 2032. When I say large scale, right now our preliminary trade-off studies suggest that probably be maximum NPV on an operation which would be 160,000 tons a day, which would make it by far the largest mining operation outside of BC. So peer group comparison, gas-based copper sits about in the middle right now in terms of development grades and size compared to other projects in the Americas. So it's, I'm hoping to make it to Tier 1, of course, but probably this will be a top Tier 2 asset. Hard to make Tier 1. Tier 1 is defined, of course, by a minimum 5 million tons of contained copper metal in the ground, with potential production of 200,000 tons of copper metal a year. If we can output this at 160 a day, we'd be producing about 140,000 tons of copper metal a year, which is still very significant, certainly for a Canadian operation. So in terms of reserves and resources, in terms of grade, actually, we do compare to other producers. We compare to Copper Mountain or Highland Valley. A lot of people concerned on this project about grade, but you have to keep in mind that low grade is manageable with scale. Secondly, Quebec has a huge advantage over other provinces simply because of relatively cheap power. A large-scale operation like this is very energy intensive. We're hoping to get 8 cents a kilowatt hour over the long term, which makes a large-scale operation a lot cheaper relative to other regions in the Americas. So we have a strong balance sheet. We have certainly a good track record of shareholder return. So far, we've done very well, if I say so myself, in the gold space for our shareholders in the last 20 years. And we intend on doing the same thing in the copper space for those investors who like copper. We do own, at this point, one of the largest undeveloped copper assets in the Americas. And we will keep fast-tracking this operation with the objective of getting to FID in 2029. Thank you for your attention.
Thanks, Bob. So next up we have Mal Karvovska. Mal Karvovska is the Vice President and Corporate Development, is the Vice President, Corporate Development and Investor Relations of Nucor Gold Limited. Nucor is advancing its flagship Enchi Gold Project in Ghana, West Africa, with a focus on unlocking value through exploration and resource expansion. Please welcome Mal to the stage.
Thank you. I'm a little bit shorter than everybody else, so I'll get that out of my face. That's not this.
So it's going to be with the remote?
No, can we get the verify up and running, please? Thank you. Perfect. Thanks for your patience, and thank you everyone for joining today to hear about Nucor Gold. Once again, my name is Mal Karvovska, and I'm the Vice President of Corporate Development and Investor Relations for the company. At Nucor, we are advancing our Enchi Gold project in Ghana. We do trade on the TSXV, ticker is NCAU. Please note that I will be making some forward-looking statements, and I do encourage you all to take a look at the disclosure on our website. At Nucor Gold, we are advancing our Enchi Gold project in Ghana. This is a proven team with a track record and one that has strong alignment with its shareholders. 15% of the equity is held by the board of directors and management. Our Enchi Gold project is underpinned by economics. We released the results of a PEA study mid-2024 that highlighted the development potential for an open pit heap leach project. We're now advancing that towards a pre-feasibility study, but we're not losing sight on the longer term potential at Enchi, given the district scale exploration that exists and given its location on a prolific gold belt. In terms of the team is led by Luke Alexander, President and CEO. He is a financial background, capital markets, over 25 years of experience in the mining industry. Notably, he spent 12 years in London in institutional sales, so he built very strong relationships with institutional investors as well as with corporates. You may see Greg Smith walking around. He is our VP Exploration. He is a geologist with over 35 years of experience, specifically drilling out these large-scale deposits on greenstone-hosted belts. Myself, VP Corp Dev and IR, come from a finance background as well. Importantly, this company has been founded by Doug Forster and Blaine Johnson. You may have come across them given their strong track record in the industry. They were behind Newmarket Gold, which had a high-grade discovery in Australia and then sold to Kirkland Lake Gold, as well as Calibre Mining more recently, which went from exploration to production to multi-mine mid-tier producer before being acquired by Equinox Gold recently. So given that track record and the relationships that the group has, you see that reflected in our share ownership. So alongside that management and board, 15%, very strong institutional ownership. About 55% of our stock is held institutionally with long-term value-focused funds, such as Franklin Templeton, Aegis Financial, and Ruffer. Alongside that, we have strong capital market support with research coverage from both Canaccord as well as SCP. In terms of that corporate snapshot, basic shares outstanding, 255 million. About 175 million Canadian market cap currently. But importantly, we are fully funded. So as of March 31st, our cash balance was 15 million Canadian. That not only funds the 35,000 meter drill program that we have underway, but it also funds the completion of a pre-feasibility study next year and all our corporate G&A. And importantly, in addition to that, we have the potential for proceeds of 14 million from the exercise of warrants that are all well in the money and expire in September and then in February. So with that 14 million of additional cash that we fully anticipate will come in, we can be strategic in terms of increasing our drill program and continuing to advance the development of our project. Our Enchi Gold project is located in Ghana, in the southwest corner of Ghana in West Africa. Ghana is a phenomenal jurisdiction. It is Africa's largest gold producer. It's the 6th largest globally. It has a stable democratic government that is pro-mining, pro-development. It has skilled mining labor. It's English-speaking. But importantly, look at who's actually operating in country. That really speaks to the quality of the jurisdiction. You have 4 major senior gold producers with gold mines in Ghana. Zijin's the latest addition to this, given their acquisition of Achim earlier this year. And then Newmont. Newmont continues to deploy capital into Ghana to increase their exposure. They're currently investing about $1 billion into Ahafo North to expand their footprint in Ghana. It is one of their main gold mines and producers of gold within the portfolio. So in terms of our Enchi Gold project, we did release the results of a PEA study in mid-2024. It highlighted the development potential for an open pit heap leach project. At a $3,000 gold price, those economics are 971 million US after-tax NPV, 136% IRR, and less than a 1-year payback. That's really driven off the fact that this is a heap leach project, which has low upfront capital. Not only are you not building a mill, but contract mining is very standard in West Africa, so you're not buying a mining fleet. So all of that keeps your capital, your upfront capital, very low. The PEA also highlighted a robust production profile for us to build on. So 122,000 ounces per year over a 9-year mine life, generating 1.1 million ounces life of mine. Importantly, we believe this is really just a starter, a base case. Given the exploration potential across the project, we think not only will we extend that mine life, but there'll be plenty of opportunity to fill in those later years through exploration. And importantly, what this PEA highlighted is that all of that can be done through cash flow. At a $3,000 gold price, our PEA highlighted after-tax cash flow life of mine of almost 1.3 billion US. Not only does that fund all of your sustaining capital, but it leaves plenty of cash flow to redeploy into exploration of the project. Lastly, with this PEA, it provided very significant leverage to the gold price. It highlights Enchi's leverage. When you look at the valuation of the PEA at $3,000 gold, that generates an after-tax NPV of 971 million US. You now compare that to our current market cap, which is roughly 130 million US. We're trading at roughly 0.15 times the value that has been defined in this PEA study. So we truly believe that as we continue to de-risk and define the merits of our project technically and advance it to a pre-feasibility study, that this multiple should contract, that our market value should more accurately reflect the value that's been defined of the projects within the economic study. And importantly, this does not include any of that exploration upside that I will talk about. So we see this as real blue sky potential longer term. So Enchi sits on a prolific gold belt in the southwest corner of Ghana, Enchi's on the Sefwi-Bibiani Belt, which hosts a number of operating mines with multi-million ounce gold endowments. So Newmont's a Half-O mine. That's the mine that they're investing another $1 billion into for expansion. Over 20 million ounces defined to date. Asante's Bibiani and Chirano mines located to the north of our Enchi project. That has an endowment of over 10 million ounces. At Enchi, we believe we've only just started to scratch the surface. 740,000 indicated with an additional 970,000 in the inferred category. We think there's a lot more room to grow. So in terms of a snapshot of our project, Enchi, 248 kilometers squared, 40 kilometers from end to end, and 5 deposits currently identified on the project. So our 2 main deposits are Siyum and Boyne. That hosts about 80% of our current resource, followed by Nyam, Kwachikru, and Tokase. Importantly, all of these are open along strike. There's parallel structures that have been identified at all of these deposits, and also they're all open at depth for exploration. We then have a number of targets where we've drilled, but we have yet to define a resource. So Arati, Kojina Hill, Siyum South, and then layer in the additional exploration potential of multiple targets that have been defined through trenching, soil sampling that have yet to be drilled. We believe there's a lot more room to grow on that near-surface open-pittable heap leach resource. The second leg of the exploration stool really comes from looking at the depth potential that exists at Enchi. This is a comparison of Enchi to Chirano on a long section. Chirano is a mine that's been in operations for over 20 years now. It's located 50 kilometers to the north of us along the same belt that hosts our deposits, and it has over 5 million ounces of gold endowment defined to date and growing. When you look at Chirano, it started as a series of open pits. Over time, with exploration and drilling, they defined these higher grade chutes to depth. They're now mining down to about 800 meters vertical, 1 to 2 grams per ton. You look at our Enchi project, most of our drilling has been in that 100 to 150 meter vertical depth, with only a handful of holes going down to 350 meters. So we see a lot of potential to grow the resource longer term through defining that potential that exists for these higher grade chutes. And we are actually starting to see that. We are starting to highlight this proof of concept that exists at Enchi. So our Nyam deposit, our third largest deposit, this is where we've done most of our deeper drilling. And what you can see here is looking at the higher grade mineralization that's been defined on this deposit, looking at a long section. You see the pits that constrain our current resource at Nyam, and you can clearly see with all the drilling that we've done that we're starting to define these higher grade chutes. Recent results from the past few years include 5.8 over 7 meters, 5.6 over 8, 6.6 over 4 meters. This was drilled after we completed our last resource estimate. So we believe that with systematic exploration and further drilling, we will continue to define the real potential that exists at depth at our Enchi Gold project. In terms of what we have underway currently, we do have a 35,000 meter drill program underway that is again fully funded. The first phase of that drilling has been focused on resource conversion. Our focus right now is to take Enchi from PEA to a pre-feasibility study, and a key component with that is obviously taking your inferred ounces and improving them up to a confidence level of indicated. So that first 20,000 meters of drilling that we have completed and we have reported has been predominantly focused on our 2 main deposits, Boyne and Siyum, focused on that infill drilling. But importantly, with that infill drilling, we've actually achieved multiple goals. Not only have we seen this mineralization continue wide zones with higher grade intervals, we're also seeing mineralization outside the limits of the pits that constrain our current resource. So we believe that we'll see resource growth with this drilling that has been completed and that will be completed. So these are a few of our more recent results from last month at our Boyne deposit. Again, that is our second largest deposit currently identified at Enchi. KBRC 352, that encountered 2.25 grams per ton over 56 meters, including a higher grade interval of 3.83 grams per ton over 15 meters. KBRC 357, 4.4 grams per ton over 24, with a higher grade interval of 9 grams per ton over 10 meters. And importantly, both these holes intersected mineralization outside the limits of the pit that currently constrains the resource. This is highlighting the resource growth potential from that drilling that we have completed at at Enchi and at Boyne. So we're very encouraged and very excited about the drilling. These are another set of holes from that same drill program. Once again, you're seeing higher grades, wide zones of mineralization encountered outside the limits of the pit that constrains the resource estimate. Diving into a long section of Boyne, this highlights all the drilling we've completed. With that 20,000 meters of drilling at Boyne to date over 2024 and 2025, what's clear to see here is that we are encountering mineralization outside the limits of the pits. In gray, these are the pit shells. That contains our current resource estimate. These drill highlights clearly show mineralization outside of the limits of those pits. So we're very excited that with this infill drilling that we're completing, that we're also focused on seeing resource growth. And we will be completing a mineral resource update alongside that pre-feasibility study that is underway. So in terms of our key takeaways and what investors can look for going forward, we do have a 35,000 meter drill program underway. The first 20,000 was focused on infill. We'll now look at completing some earlier stage exploration drilling, and also we will look to do some drilling on those deeper, higher grade targets that exist on our property to continue to define the longer term potential that exists at Enchi to host a much larger project. We're funded for all of that. We're funded for a pre-feasibility study. We are working towards commissioning that pre-feasibility study later this year, currently working through geotechnical, hydrogeology, metallurgical test work, all the technical work you need to push go on a pre-feasibility study alongside a resource update, targeting release and completion of that pre-feasibility study in the first half of 2026. And as a reminder, at Nucor Gold, this is a team with a track record and one that is aligned with its shareholders. We have very strong capital market support and institutional support, with 55% of the equity held institutionally. Our Enchi project has an established resource in a multi-million ounce gold district. We believe that we have a much larger resource potential on our project through exploration, but we're underpinned by economics. We're advancing the development of our project towards a pre-feasibility study and construction, as we have very, very robust economics that we're excited to then redeploy through the cash flow into exploration to define the longer-term, larger-scale potential of our project. Please do follow us on social media. We'll put out some great content out there. And if you have any questions, please come find Greg Smith or myself at the conference, or reach out directly. Thank you so much for your time today.
Thank you, Mel. Okay, we've had a slight change in schedule. We'll have Pasofino Gold Limited up next. So I would like everybody to please welcome Brett Richards. He's the Chief Executive Officer of Pasofino Gold. Pasofino is focused on advancing its Dugbe gold project in Liberia, one of West Africa's most promising gold development projects, in partnership with the Liberian government. Please welcome Brett to the stage.
Michael, thanks very much, and thank you everyone for hanging around. I know I'm probably one of the last presentations, but I love your stamina. I'm going to talk a little bit about Pasofino Gold and our project in Liberia. As Michael alluded to, we are listed on the TSX Venture Exchange under the ticker symbol VANE. We have a market cap today of about $60 million, and Pasofino has one asset. We own 100% of the Dugbe Gold Project in Liberia, and we've had it alongside of our former parent company, Hummingbird Resources. We've had it since 2009. We own 100% of the project, but the government owns 10% free carry interest. The project has 3.9 million ounces of gold, and we have a fully definitive feasibility study done on the project that we'll talk about a bit more in a minute. But it was done in 2022, and our efforts going forward are about updating that feasibility study, given, if nothing else, the significant difference in the gold price environment over the past 12-24 months. We also have one of the largest land packages of any mining company in West Africa. We have over 2,000 square kilometers under license, of which we currently use about 8% of it for our footprint of the project.
We just raised $5 million last week. We closed a non-brokered private placement, and the use of proceeds is really designed about to update the feasibility study. Nothing more. We're not drilling. We are simply going to update the feasibility study and get this through its next stages of development, which are going to be project financing and ultimately to a construction decision. We've got 127 million shares out, and management and insiders own almost 68% of this company. We have about a 32% free float. That's why we have very low liquidity, but we, management and our major shareholders who are on the board control 60% of this company. We have a board consisting of 3 of our major shareholders and 3 of our former board members. And also we have an agreement with our shareholder I'll speak about in a minute. But really, as an investor, you know, it's really about why are we here? And you guys are here because you want gold exposure. You want to hedge against inflation. You want a risk-adjusted return, blue sky. You want everything. And in this gold price environment, I think this is a project that can give it to you. And I think Pasofino can make people money. Look at where we are headed with regards to the gold price environment. You know, certainly the banks calling $3,000, $4,000, $5,000, $6,000 gold. I don't believe it as strongly as maybe the banks do, but we are in a very, very strong environment for gold price run, and quite frankly, $3,000 was kind of out of our belief a year ago, and here we are sitting at $3,350 today. When I look at our resource and the stage of development we're at, you know, typically 10, 15 years ago, we would get $180 an ounce for reserves. We would get $80 for M&I. We would get $20 or $30 for inferred. And if we did the calculation based on our mineral resource inventory of, you know, 2.7 million ounces of reserves and the remaining and indicated and inferred, you know, we would have a valuation of $558 million. So starting at a starting point of $60 million today, you can appreciate that there is significant upside to where we could be trading prior to production and going into production. As I mentioned, our major shareholder was Hummingbird Resources. Now it is a bank and a private equity arm of a bank called Nyoko Resources. And we signed a 2-year kind of cooperation support agreement with them a couple of months ago, whereby they are obligated to fund the 50% of their interest in the project for the next 2 years. They are obligated to bring 50% of the project financing to the table. They are obligated to, we have a standstill agreement where they cannot make a bid for the company for 2 years, and neither can I sell it for 2 years. So we have a governance model that is very, very balanced. And what it has done, it has almost forced all parties to behave in the right way for the project, and that will be in the right way for all shareholders, and that is to advance this as quickly as possible and get this into production as quickly as possible. Back in 2022, the project economic outputs from the feasibility study were quite compelling back then. $435 million CapEx and a $564 million post-tax NPV at $1,700 and $761 at $2,100. And we can sensitize that up, and I'll show you what that looks like today, because ultimately we're not really changing the size, scale, or scope of the feasibility study. We're simply updating the costing, and we're updating kind of the gold price environment we work in. So this optimization study is really about updating the economics to a bankable level. This is our mineral resource inventory at our 2 pits, Dugbe F and Tucson, where we have in aggregate around 3.9 million ounces. So we have the study completed. We have all of our permitting ready to be submitted for approval, and we will do that in the 3rd or 4th quarter of this year in alignment with updating our tech report and our feasibility study. But this is a large asset. This is a large land package, and the potential here to have a generational size mine is quite obvious. So, you know, one of the things I look for as an investor, I look for size and scale, and yes, I look for grade and metallurgy, and I look for access to infrastructure. And the Dugbe project ticks a lot of those boxes. We have to build a lot of our own infrastructure, but it's very, very doable. I think the most, I'll say, under-talked about story in Africa generally, and West Africa specifically, is about Liberia as a investment case. Liberia is one of the most stable countries in Africa, and one of the reasons is because of its connection to the US. It has a very large US embassy. It has a lot of US diplomats and expats there. It trades in US dollars, and it speaks English. On top of that, they have not complicated their, I'll say, framework of taxation or their framework of ownership. There are only 6 operating mines in Liberia. 4 of them are iron ore, 2 of them are gold, and they're all very, very large operations. But they allow for companies like us to enter into a mineral development agreement, which is much like a mining convention, which lays out your framework for the next 25 years. And we have a mineral development agreement in place since 2019. So this is, I can't speak enough about Liberia. This is one of the most favorable jurisdictions I've ever worked in. I built 4 mines in Africa, greenfield. I've built 2 brownfield, and I've worked in places like the DRC twice, Mali, Burkina, Sierra Leone, and Guinea. And by far, Liberia is one of the most attractive jurisdictions geopolitically, and the support we get from our joint stakeholders. The project is about 76 kilometers away from a major port, and that port is called Port of Greenville, and it's about an hour flight or a 6-hour drive from Monrovia, which is the capital. So we will bring all our gear in by water into the Port of Greenville and then truck it down a 76-kilometer road to our site. But you can see the size of our land package completely contained within Birimium geology, and the expansion ability for us to, and I'm not here to grow a big gold mining business. I want to get this into production. I want to make this as profitable as possible, and I want to keep it in production for as long as possible. We'll make strategic decisions what we do with our free cash flow down the road once we are de-risked. But there is quite a bit of infrastructure that needs to be built here, $40 million of collective infrastructure, about 10% of the capital. And some of the trade-off studies we're going to be doing during this update to the feasibility study, we will be looking at things like outsourcing our power to bring our CapEx down, recognizing it's going to bring our all-in sustaining costs up a bit, but we will be looking to de-risk this project from a construction standpoint as much as possible. We will also be looking at contract mining, and we'll be looking at contract administrative services wherever we can. Just the all-in sustaining cost of this project from the previous feasibility study are at $1,005, $1,005. I would sensitize that up to today's environment, probably going to be closer to $1,200 or $1,300, which feels about right. And our CapEx maintaining that $400 million number. So I feel that we're kind of going to be in a space where we're not going to have material changes to the economic inputs and some of the economic outputs, with the exception of revenue and net present value and IRR. Just an overview of the mining strategy, fairly simple stuff. And this was all kind of developed from the previous feasibility study. Process flow sheet's quite simple. It's 5 million ton a year. Right now it is whole ore leach. It is crush grind, ultrafine grind, and CIL. And it's fairly simple, although the recoveries from that process are about 83%. And we're going to investigate whether possibility of introducing flotation in year 3, once we are debt-free, we can finance flotation, possibly bring this up to closer to 90%. But you know, we need to do some mass pull studies and some met test work. This is probably the most interesting slide, what I like on the chart. You can see the second column is really the the economic outputs at $1,700 gold, where we ran the last feasibility study. And you can see the post-tax NPV at 524. It's 5 million tons. This project will do 171,000 ounces a year for 14 years. However, it'll do 200,000 ounces a year for the first 5 years. It's got a 4-to-1 strip ratio, 1.3 grams, and as I mentioned earlier, 83% recovery. But you can really see how this starts to gear up when we start to talk about using different gold price assumptions. Really doesn't affect many things but revenue, because we are not going to take the view that we want to change the resource model. We don't want to change the mineral resource inventory that we have right now. We don't really want to materially change the mine plan, because the scope of what we feel we can build is being driven by CapEx. And if we start to look at all of these nuances to build the ultimate project, the most optimized project, we would be looking at $700 or $800 million. And we want to keep a project where we can control and build ourselves. But this really does gear up at $2,700 gold. We have a post-tax NPV that's 4 times CapEx. So, and at $3,300 gold, you can imagine it's 5 and 6 times post-tax NPV, and the IRR is close to 70 or 80%. We'll update all these numbers when we get through our feasibility study update. That is going to take us about 7 or 8 months. I fully expect that we'll have an updated tech report and an updated feasibility study by early Q1 of next year, file our NI 43-101, and in parallel, we will have been working on project financing. Keep in mind, I have a bank as a major shareholder who have committed to participate in the project financing, so it makes my job a little bit easier for the next, certainly when I go to raise project financing. Just some of the activities we're going to do. And one of the optimization studies we're going to look at is flatlining the production profile, and that will come with some resource development drilling we will need to do in the, from day one. But over the next 12, 18, 24 months, and 36 months, you can see a path where we have 8 to 10 months of updating the feasibility study, 24 months of construction. This is probably one of the projects in this room, in this conference, that's closest to production, but the valuation differential between being valued on inventory of ounces in the ground today, we are valued at $15 an ounce, to transitioning in the next 36 months to being a multiple of free cash flow. Those two valuation differences are quite tremendous. If we do $300 or $400 million of free cash flow a year in full-scale commercial production, as per the feasibility study, that's a $1 billion company, and we're a $60 million company today. So scope to increase value, create value for investors. This is the project that you won't find very many like this. So anyway, thank you for hanging around. Thank you for your time, and Michael, thank you for the thing.
Thank you. Thanks, Brett. Okay, that leads us to our fireside chat. I'd like to welcome to the stage Luke Norman. He's the co-founder and chairman of US Gold Corp. Luke, if you could follow me, we'll have a seat. So you can sit right here.
Thank you.
All right, well, welcome to the stage.
Thank you.
Yeah, it's a pleasure to have you here, and thank you everybody in the audience for attending. US Gold Corp, fairly new company in the grand scheme of things. Shovel-ready permitted project, gold and copper in Wyoming. Maybe you could start by introducing yourself and telling us a little bit about the team.
Certainly, great idea. So again, my name's Luke Norman. I'm the executive chairman at US Gold Corp. I'm also co-founder of the company. Our entire design was to go ahead, make a discovery, and bring it to production. So to do so, obviously you need people who know how to extract minerals from the ground, and our CEO is George B. That's his surname, that's not an initial, B-E-E. And George built most of Barrick's large production today, so again, I think we've got a pretty qualified individual at the helm. And yeah, we're going to go and continue to do what we've done from day dot, which is generate shareholder value.
You've got mining royalty on your team.
We
You've
do.
also got Bob Schaefer, right?
Yep,
Hunter
Robert
Dickinson.
Schaefer.
Yep.
HD, ex-chief of PDAC.
Yes, absolutely. And I noticed Joanna Fipke too.
Yes.
Yes,
Yep.
Dynasty there.
Yes, very famous surnames.
So your stock's been doing very well in the past 52 weeks. You're up almost 3 times.
Yes.
You have a very tight share structure, and you're listed on NASDAQ, which, for mining companies is a little bit of an odd duck, but clearly doing well for you.
Yeah, well, all of those points are pretty unique to a junior mining company. Tight share structure you don't hear too often anymore. By tight, we mean literally there's about 14 million shares outstanding on the company. So you can imagine we've all invested in TSX venture companies previously. And look, the reason why we went with NASDAQ is my previous company was a company by the name of Gold Standard Ventures. And myself and Jonathan Ord, who's the CEO, we put in the hard slog and we worked the thing up from TSX so ultimately onto the New York Stock Exchange. And by the time I finished my tenure at Gold Standard, we were pushing 90% US-based shareholders. So with a US asset, I just figured, look, why beat the middleman? Just get right onto the main exchange. So.
Well done, very well done. Okay, well let's dig into the project, if you don't mind. It's the CK Gold project. It's in Wyoming. It's permitted and shovel ready. I went through your summary, and you're on track to produce 110,000 plus ounces of gold equivalent, and that's gold and copper. So maybe you just want to tell us a little bit about the project, its feasibilities, the capex,
Absolutely.
Net present value.
So first I'll caveat. So yeah, we will always be in that sort of 110,000 ounce per annum production range. What is not truly indicative of the deposit is the years of mine life. So we wanted to establish something that was going to be palatable for the public investment community, which is a minimum of 10 years of production, and from there see if we could actually permit it. Because another unique factoid about this project is it sits next to or abuts a state park in Wyoming. So, these are kind of scary conversation topics. Now, fast forward to today, and we are fully permitted. That was never an issue through the permit process, but I could understand why investors might have had some concern about it. So where I'm going with this, there is a lot more upside to the deposit than the 10 years of mine life that's represented in our reserve report. But again, we established a reserve, and then we followed a process. So, in Wyoming, we're on state ground, and we are one of the only junior mining companies out there with a fully permitted shovel-ready project in North America. And the reason being is we didn't have to deal with any of the federal nexuses. So none of the US government agencies, and clearly in Canada we have the same issues, I want to say, backlogs of federal permit process. So a really, again, unique, I use the word a lot, and I apologize to everyone, but a really unique set of circumstances that allowed us, within a 4-year period, to take the science test of a project all the way through to what will soon be bankable, final feasibility, shovel-ready, fully permitted project.
And so I guess that comes with a lot of social license then. As you said, you dealt with the state, you ticked all the boxes, you have your permit. Maybe talk a little bit about the community, your relationship there.
Absolutely. Well, you've got to imagine. So my accent's from New Zealand, even though I live here in Canada. My business partner, who's our CEO, has an English or British accent. You can imagine us showing up in the government halls of Wyoming, Cheyenne, Wyoming. It was going to be a challenge. So we were very fortunate enough to have, as a director at the time, talking of famed names on a board, we had Ryan Zinke, who was the previously Secretary of the Interior for the Trump administration 1.0. He was also the commander of SEAL Team 6 with some ungodly number of confirmed victims in his path. So when he picks up, yes, we'll leave it at operations. So when he picks up the phone and introduces us to local government people, etc., they answer and they listen. So we got very early, we got a chance to meet with all levels of government in state, and then we had a standalone website that was just for the community that would explain the method of processing, because we're not smelting on site, there's no cyanide, It's a very, very simple, clean type of mining operation, right down to resonance from blasting. All sorts of information was there. Air quality, how we're going to manage wastewater, where our water was coming from. I could go on for a long time here. But we were constantly updating the community, and then we'd do town hall sessions like this. We would have conversations with them, but ultimately on state ground. So we didn't have a lot of headwind. We just felt that, yes, social license is extremely important and when you're in a community-based project.
How long did it take to move through those steps?
Well, it would have been, they have very set guidelines. This is what I love about dealing on the state level versus the federal level. They have time frames. Within 12 months, they said, from us filing our permits, we would have a yay or nay. Now, we actually delayed the process because we added in an additional permit along the way, which is called an industrial sightings permit, which is kind of a give back to the community that allows them to put in infrastructure, bus stops if need be, hydrants for fire, whatever else. It allows them to deploy capital into that. So we completed an industrial sightings permit as well as our permits to mine. So I would say all in it took us around 2 years, which is still tremendously.
Oh, that's very fast.
Yeah.
Very, very fast.
Yeah. And look, they're just as stringent as any federal agency would have been, but we're dealing with people, boots on the ground, real people, 2 blocks away in their office, that if there was a question around something, the way we filed it, the way we completed it, they would pick up the phone and ask, not just go, all right, you got that wrong, back to the bottom.
Sure, sure.
Yeah.
So you mentioned that you've got a 10-year mine life, which you will extend.
Yes.
And but you're already thinking and focused on your environmental impact of the area and
Absolutely.
the benefits that you can bring through that impact, so positive impact when ultimately you decide to wrap up the operations and move on.
Again, isn't this a unique conversation? The positive impacts of a mine, you would think this is oxymoronic kind of discussion, but it's very true. So being abutted to the state park, which is Kirkgardie State Park, hosts 2 water supplies or reservoirs that are man-made, and they also host huge amounts of recreational sites around them. Now, like every township in the US, it's growing. Well, not every, but like most, it is a growing community, and they have more and more demand for water containment. Their plan is to increase the dam heights within the park to meet those future demands, a very expensive undertaking, but it also floods out all the recreational sites. So you can imagine the Parks Board are really concerned about that. They have a partnership with the local water supplier, and ultimately the water supply takes precedence. So we are going to have a minimum, based on the 10-year reserve, 86-acre by 700-foot deep hole. Now that would more than double the pre-existing, and basically by proxy become an extension to the park. So yeah, and I could go on, there's a slew of other benefits to this project, including our waste material that we've since uncovered, no pun, realized that there is a usage for that as an aggregate source. So there is just an array of positives around this project. It's quite exciting.
That's fantastic. I mean, that's the way to build a mine next to a park, the synergies that you can bring to the table to benefit the park itself. So let's just jump back into the numbers then, and timelines. When are you going to be in production?
So once we complete final feasibility, which will be end of 3rd quarter this year or early 4th quarter, we are then geared up to go and take capital. Now, we're already receiving terms sheets from an array of different interested parties, from people who want to buy our concentrate to people who want to either stream or royalty, the typical offers of capital on very favorable terms. But our last step, is to take this through that final process, that bankable feasibility. Why? Because George, again, has successfully built gold mines all over the planet. He's doing things right, checking the boxes. From there, it would be an 18-month process. Again, I just want to reiterate something very important. We are shareholders, so we're aligned with our investor. Now, what does that mean? Word salad. What it actually means is we're very, very much motivated to minimize the dilution of the stock. And you can see that with 14 million shares out, that we're not going to just go haphazardly raise the 300 million or whatever the final number comes in at, by diluting our equity. So we are taking into consideration large swaths of debt, which is what you want on a project that has such great economics.
Very robust.
Very
yes.
robust economics. And look, copper and gold, I'm sure, we're here in Canada. I'm not sure if everyone's aware, but in the US now, copper and gold have now joined the critical minerals list, which means the federal government have an active interest in supporting and helping promote copper and gold production within the US. Well, given that we are already permitted, there is opportunity now for us to talk to the feds, to talk to in-state government about very opportunistic loans, etc. There's grant money out there for US assets. So we're just taking our time, but again, just know that if you invest in a share of US Gold Corp, that we're very focused on minimizing dilution.
Well, that's fantastic. As you said, spoken by an owner to other owners of the company. Now, that's great. So your current numbers in terms of feasibility of the project, we're done at 2,100 gold.
Correct.
But I noticed that at 3,000 gold, those numbers double. Just about double.
Finding a community where I can use this at hockey sticks.
Yes, yeah. Do you want to just go through the net present value of the project, IRR? I mean, the numbers are robust.
I will, but it does. It starts to get heady. I mean, we look at our base case. We're a conservative company. We want to be. We really want to know what's happening with this opportunity. There are other things we could have done, different mining processes we could have brought in that would have made it slightly more risky as to whether it would get permitted. Well, just as with that, we've been very, very conservative with our approach towards, how this thing pays back. Why? Because we don't want to find ourselves in a whipsaw market where gold's correcting, copper's correcting, and people say, oh, that was a marginal asset. No way. So you'll see on our, if you go on site, to our website, and take a look at our presentation, you'll see a sensitivities table where we value it all the way down to $1,300 gold and sub $3 copper. How does this thing stand up? It still generates cash flows. So on the upside, gosh, if we started bringing in, we're SK 1300. Sorry, so the reporting protocols in the US are different than NI 43-101 in Canada. So we don't get to talk about inferred ounces, for example. But if we brought another 1 million ounces of gold mineralization below the pit, like as we envisage is there, you're talking about NPVs that are running well over the $1 billion mark. And we're $175 million market cap approximately today. So a lot of upside.
And under those standards, you're at 1.6 million ounces?
1.6 million ounces in reserve, correct.
Yeah, no,
and the spread, because we talk gold equivalents, just for simplicity, the spread is about 70% of the economics right now in gold and 30% of the economics in copper.
Okay. So you mentioned $170 million market cap.
Yep.
That's US dollars?
Yes.
Yes. And where do you see that going in terms of value as you move towards production?
I can't answer those kinds of questions. Where's the stock price going? I don't know. I could and should imagine much higher. I can imagine that there's a lot of interested parties looking at a fully permitted, shovel-ready project like ours and thinking, shoot, we would like to bolt a project on like that right now. So I adamantly believe there is a heck of a lot more upside to the stock. And if any of you take a look, you'll see in our chart, it is a fundamentally driven accretion in terms of our value right now. Around the end of November last year, we announced that we had our final permit in hand. Early December, Eric Sprott and Terra and a few other interested parties became invested in the company because, basically a de-risked asset. And we continue to accrete higher, and you'll see there's days where we trade up and then we'll trade off abruptly. That's just the nature of being on a digital exchange like NASDAQ. So I guess where I'm going with this is you don't have to chase the stock. Be patient if you are considering an investment in our company, but ultimately we are heading higher.
Well, I can say it. I fully concur. I think you're in the perfect spot in terms of where you are vis-a-vis development and ultimate production. I also think from a market perspective, you're in the perfect spot for new shareholders to come into your company, because not only do we have growth in the undervaluing value of the metals, gold and copper, but also I think that we will correct as we transition into a bull market back to previous valuations, which on a P to NAV basis have dropped from 1.5 down to 0.5, which gives you a three
0.3.
times lift. Just,
Yeah.
well, okay, sure. I'm keeping the math simple.
Okay.
So there's a built-in possibility for a 3 times lift, all things remaining the same. So fantastic. Look, we're out of time, but thank you so much, Luke, for joining us. Wonderful, and please go to US Gold's website and enjoy the ride through to production. Thank you.
Thank you, everyone. Cheers.
Test. Alrighty, guys. Good afternoon. Almost afternoon. By way of introduction, my name is Cole McGill. I'm a Director of Equity Research at Stifel Financial. Have been with the company for 6 or 7 years prior to the GMP acquisition, and before that I worked in an exploration role with Newmont in their Global Exploration Solutions group down in Australia. We've got a pretty awesome panel for you guys coming up, and then an action-packed afternoon, so stick around. But next up, I'd like to introduce to the stage Assistant Deputy Minister Paul Carter from the Department of Industry, Energy and Technology, Government of Newfoundland and Labrador, along with the members of the Newfoundland and Labrador Spotlight Panel. Guys, give it a round of applause for Paul.
Good morning. Thank you very much for the opportunity to be here today. My name is Paul Carter, and I'm with the provincial government, the Department of Industry, Energy and Technology. I'd like to take this opportunity to thank our conference organizers, Joanne, for this special invite for the province of Newfoundland and Labrador, and also as well some of our active mineral exploration and development companies who are joining us and will be talking with during our panel session here today. I'd also like to take the opportunity to thank Angie Stockley, who has arranged much of this on behalf of the province, together with our marketing and promotions team with the department. And one thing I would like to say is also a quick thank you, and doing it before I perhaps ever run out of time, is to say thank you to the IET staff back in Newfoundland and Labrador, who always work tirelessly to advance mineral development within the province. So let's get started. I'll try to be brief. We got a lot to talk about with our panel, and I'm sure there's going to be lots of exciting discussion as we go forward. So I just get the slides going. Okay, Newfoundland and Labrador, top-tier jurisdiction for mining, exploration, and development. We're very proud of that, and we regularly rank within the top 10 jurisdictions globally around the world. And we're very proud of that. We've done a lot of work to get to that place, and the importance of being able to stay in that place and ahead of the curve is a priority for us. In 2025, we're expecting a great year, approximately $6 billion worth of mineral shipments to be produced in Newfoundland, and which is increasing from last year when we had approximately $4.6 billion worth of production. And this is being led by Vale underground mining, new nickel production coming on stream, new gold production coming on stream this year as well, and certainly higher iron ore output from existing operations. Our employment is expected to remain around 8,000 persons, which is very significant for our economy. And exploration expenditures are going to be somewhere in the order of about $260 million. The province is a stable, low-risk jurisdiction with a long history of resource development, and one where people work together to ensure that things get done. This is a slide I'd like to, perhaps a safe harbor statement. These aren't mines in waiting, but they are certainly illustrative of the potential that exists in Newfoundland and Labrador, and the richness of the potential that is there for further mineral discovery and development. Anybody who might be aware of the geology of the province, it's quite impressive. It is a continental collision zone, which is the foundation of its complex and mineral-rich geology. I don't know if many of you have ever had the opportunity to come to Newfoundland and look at the landscape, but certainly if you were ever able to go to Rosemore National Park, and you'll see the inner mantle of the earth towering above the landscapes, and perhaps one of only 3 places on the planet to see such a wonder. The Torngat Mountains of Labrador contain rocks that are estimated to dating back to approximately 3.9 billion years old, amongst the oldest on the Earth, and presence of geological formations and mineral systems not found anywhere else in North America. The province remains largely unexplored. Significant areas, such large, vast landscapes, rugged landscapes, and remoteness. We've hardly scratched the surface, and this is what is beneath us and creates our significant mineral potential. We've been a world-class jurisdiction for mineral discoveries and developments. If you go back to our history with the Green Bay, Bay Verde area, copper gold district, iron ore mining at Bell Island, very close to St. John's, where we extended mines a lot of kilometers underneath the Atlantic Ocean. The Buckens district, high-grade base metal production with active exploration currently ongoing as well. The Labrador Trough, 70 years of production thus far. And of course, the Voisey's Bay nickel, copper, cobalt mine near Nain on the coast, towards the coast of Labrador, and its Long Harbour processing facility operations. Perhaps a model from the modern mining world to follow. Rich Indigenous engagement and participation in the project, and at the end result, a very low carbon, perhaps one of the lowest carbon nickels available in the world, built and put together because of innovation and a switch in hydromet technology and development. It's something that we should be very proud of, now transitioning from the ovoid to underground operations, which were commissioned this year. The province has a rich and generational mining experience. It's been a part of our history for almost 200 years. The province has a skilled workforce with deep experience in mining and logistics, and generations of workers and supportive communities that form the backbone of the industry. Newfoundland and Labrador offer strong labor pool and local support that reduces risk. We have a very mature supply and service sector, and we have very innovative people. You don't live on the coast of Labrador or on an island in the North Atlantic and not be creative and innovative. We've done a lot and we've accomplished a lot in terms of our place in the country. And if you look at where Newfoundland and Labrador resides, it's in a very strategic location. You know, I don't have to say too much more about it. You can see the shipping lanes, you can see the deep water ports, you can see the transportation corridors, and you can see the proximity to differing jurisdictions around the world. Our current operating and developing properties are something to be very proud of, and we have a strong pipeline of operating, restarting, and developing projects reflecting long-term growth and investor confidence in the region. Construction is nearing completion at Caliber's gold mine, Valentine Gold Mine, the province's largest gold project thus far, with first gold expected this year in 2025. So we're very proud about that. I'm very proud of the work of the group at Caliber and a recent merger and acquisition occurring with Equinox. Maritime Resources is reactivating the Hammerdown Gold Project in the Green Bay area and is also supported by the restart of its Pine Cove gold mill. Firefly Metals is advancing a major restart at the former Ming copper mine, aiming to add more than triple the previous production that the operation used to deliver. There are additional projects in the province that are developing across gold, copper, critical minerals, supported by infrastructure and permitting momentum. Great Atlantic Salt, and in St. Lawrence, Canada's fluorspar. Significant opportunities for reprocessing of tailings and byproduct recovery from existing operations, and extensive exploration ongoing across the province for many, many minerals. We released our critical minerals plan in 2023, our critical minerals advantage, in response to the global green energy shift and to position the province as a reliable, responsible supplier in the global clean energy supply chains. The province hosts 34 critical minerals, of 50 identified across global critical mineral lists, including Canada, the US, Japan, Australia, South Korea, and the United Kingdom. We produce some of the lowest carbon nickel and the highest purity iron ore, essential for battery technologies and green steel making. Our plan focuses on participation in international supply chains and building partnerships where the province holds a clear strategic and geological advantages. The strategy promotes early-stage exploration and de-risking. Investment through public geoscience and programs like the Junior Exploration Assistance Programs are key pillars as we try to de-risk the industry and for investment and our investment partners. High purity iron ore. Newfoundland and Labrador was perhaps one of the first jurisdictions in the world to designate high purity iron ore as a critical mineral. And we successfully advocated as well for its inclusion in Canada's national list. Labrador West alone hosts approximately 50 billion tons of iron ore that has already been identified. It's essential for high purity and direct reduced iron and other low carbon steel technologies. The region is supported by existing infrastructure, including rail, access, and ports, which enable efficient development and export. We're seeing new investments in the high purity iron ore sector. Champion Iron's Kami project, recent investments by Nippon Steel and Sojitz out of Japan. Vale, you see interest in a new project up in Cyclone in the Menehek region of Labrador near Shefferville, Iron Bear property. And of course, Julian Lake, which is a major underdeveloped deposit where the mineral rights reside with the Crown, representing a strategic development opportunity for those interested in participating in this global supply chain. It is time to truly unlock the Labrador Trough, and I think it's consistent not only for Newfoundland and Labrador, but also for Quebec as well and our partners there. Central Newfoundland. What else can I say about it? It's experiencing a wave of discovery and development. The region hosts significant gold systems supported by favorable geology and decades of geoscience data. Over dozens of companies are actively exploring or advancing projects. New discoveries and resource expansions continue to attract investment and attention. Central Newfoundland is supported by local processing capacity, workforce readiness, and growing infrastructure. And it is truly becoming one of Canada's next great gold districts. The opportunity is just getting started. If you look at this graphic, you see the gold occurrences in the region, and you can actually, underneath it, you will see the gray areas. Right now, Central Newfoundland is approximately under 35% of the land base is under active mineral claims. Expecting approximately 167 million in exploration expenditures on the island this year. We're also seeing significant investments in the region in terms of investments from differing countries. Australia for both gold and copper, which we're very encouraged by and very thankful and appreciative that other jurisdictions are really taking a look at Newfoundland and Labrador. Over 90% of Newfoundland's electricity grid is generated from renewable sources, primarily hydro, making it one of the cleanest grids in North America. Recent MOU between the provinces and the utilities to further develop the Lower Churchill, Upper Churchill resources recently being advanced. And it is this renewable energy advantage that supports low carbon mineral development and value added processing. We have an active effort underway in terms of converting wind to hydrogen in the province, and I can only imagine what this might look like if we are successful and hydrogen is actually available in the province for metallurgical purposes. And I go to perhaps my last slide, but a few things I'd like to say here in the collaboration front. The province is blessed with an active mining industry, NL, and is an active industry association representing the sector's interests and helping identify workforce development priorities. A strong prospecting community is supported by the Newfoundland Labrador Prospectors Association, with ties to training and early stage exploration. The Canadian manufacturers and exporters, NL plays a key role in supporting industrial capacity across the mining sector. This province has such a strong base of service and supply companies that do support the regions, the companies in the regions. We are often very active and engaged as well in collaborating with our federal government partners on infrastructure and necessary requirements to unlock opportunities. This discussion happens quite frequently, and we participate in regional energy and resource table discussions. I'd like to conclude by saying, there's a lot happening in our province, and a lot of it is driven by our mineral potential and our experience. But it's also, very important, the people who have an interest in resource development and the wealth and generation that can be created by mineral development. So I'd just like to say thank you. I'd like to say thank you to the prospectors, the junior explorers, the developers, the operators, and their investors for their continued confidence in the province's mineral sector and choosing the province as a good place to do business. We are truly appreciative of this. So with that being said, that's perhaps enough for the bureaucrat, but I think it would be great that we now kind of transition into the panel discussion along with my colleagues, and perhaps, they'll stress test exactly what I just said to see if it's all true. Thank you very much.
Thanks, Paul. Those were very insightful and interesting comments, and I think you will hear that reinforced and reiterated here in different ways with the panel, which is great. I'm Angie Stockley. Thank you for joining us, and thank you to Joanne and team and the organizers and sponsors for all their supports as well. I'm from a multi-generational mining family. I'm the president of all our mining enterprises. I'm also on various nonprofits, specifically in the prospector community as executive and board participant, and I get my boots on the ground as well, including ones like these sometimes. Not as effective or efficient, but it gets the job done. I'm very pleased to have this panel with me today. I count them among my peers and friends, which is very fabulous, and it's wonderful to have good women representing at the executive level here as well. I'm going to go down the panel. I'll just have everyone go one after each other to give a little bit of information about themselves as an intro before we get into the questions. Daniela?
Sure. My name is Daniela Dimitrov. I'm the CFO of Calibre Mining. Calibre is developing the Valentine Gold Mine in Newfoundland. And we're really approaching the end of construction and about to pour first gold at the end of, towards the end of the third quarter. It will be Atlantic Canada's largest gold mine, and couldn't be more thrilled to be in Newfoundland.
All right, my name's Darren Cook. I'm the CEO of Firefly Metals, and clearly based in Australia, but our heart's in Canada. We're currently redeveloping and re-establishing the historical Rambler assets on the Bay Verte Peninsula in northern Newfoundland, and really think that we've got something special on our hands, a large-scale, high-grade copper mine that we can get into production pretty rapidly. So, yeah, very excited to be part of the emerging story in the province.
I'm Flora Wood, VP IR and Sustainability for Altius Minerals Corporation. Altius was started in '97 by a group of university students from Memorial who were studying geology and staking land and reselling it in order to put themselves through university to pay their tuition. That actually turned into a company that started at well under $1 million in market cap, and it's $1 billion now, and really is true to its roots as a Newfoundland and Labrador project generator, and now a provider of capital to companies on the panel and throughout Newfoundland and Labrador.
Garrett MacDonald, President and CEO of Maritime Resources. We are working in the Bayvert Green Bay District of Newfoundland. We are actually pouring gold right now. We're a story of a junior company that's been through the development, soon the development process and the permitting process. So we do have a processing plant called Pine Cove. It's now producing gold, and our next project to come online is our Hammer Down Gold project. It's a high-grade open pit development project, small scale, high margin, coming online later this year.
I'm Jeff Spinoga. Can you hear me okay?
Oh, you're not.
Oh, okay. Sorry. Can you hear me now? Oh, there we go. I'm Jeff Spinoga. I'm the CEO of Exploits Discovery. We're explorers in Canada. We've got great properties along the Alberton Fault with our big brother and friend, Newfound Gold. We've been exploring there for about 4 years, and we've had a couple nice high-grade gold discoveries.
And I'm Keith Boyle. Hello. I'm Keith Boyle. I'm the CEO at Newfound Gold, and we have I'll say a significant property package in Newfoundland. We've measured it. It's 2% of the island, so quite significant. And we've got a resource that just came out in March, and our PEA is just getting done. And so we'll see what kind of project that we're going to develop in the province.
Thank you, everyone. I'm going to start with some questions that are focused around why Newfoundland and Labrador is such a great jurisdiction. And the first question is for Darren. Darren, I know you have benefited already from the well-run permitting system and responsiveness of the parties that are involved in those processes. How important is that to you as you move forward and advancing your project?
Yeah, look, having really a clear and timely permitting process is critical for investment. Investors want certainty, and they want a quick pathway to realising profits. And the reality is we're competing for capital, not just in mining globally, but against other industries as well. So it's absolutely vital that we've got a clear pathway to getting approved so people can see returns on their investment. And you know, the support that we've had from the Newfoundland government is absolutely next level. I would say that there's no better jurisdiction on earth to get that done, and that's recognised by our investors. And to the point where just overnight we've announced an $80 million capital raise. That would not be possible without a great jurisdiction to work in.
Great, thank you. Garrett, you're next. I know you have the Hammer Down advancing to production soon. How important has the process efficiency been for you?
Yeah, the same as Darren's comments. It's critical. We would not have gotten this far at all with a smaller project, mind you, without having that certainty and that responsiveness with the province to get things done quickly. Right? In our business, especially for junior mining companies without any revenue, we're relying on investors' generosity to support the efforts to build a mine, and that has to happen, honestly, very quickly. So otherwise, that investment can go somewhere else. So we've got a window to get things done, and windows within the cycle of the commodities that we're chasing. It's been a great experience for us. We were able to get through permitting for our Hammer Down project quite quickly, and that's made all the difference for us completely.
Great, thank you. Keith, with you leading the new management team at Newfound Gold and new to our jurisdiction relatively, has there anything that has been surprised or impressed you relative to the efficiency of processes in Newfoundland and Labrador?
Yeah, the right word is impressed. So I guess there's, I mean, when you talk about jurisdictions, once you have the geology in place, now it's about advancing the project and speaking to colleagues. I've known Garrett for quite a while, and right away it was, there's a will in government to do that. And when you can start discussions early, and we have, is start so that your project develops, evolves in the design phase, as opposed to doing all that work and then getting kicked back. Oh, and then you got to start over again. And doing that. If you can start up front and have that dialogue right up front, we've started that dialogue. Well, it started actually before I started in the year. And it's been evolving that way. And I think that's the first part. And then the second part is the community support, unparalleled. Like, just, we've not heard a no, call it. It's been, ooh, I have a concern. Then there's the will on the company side, responsibility on the company side to address those concerns. But there's a will and a want to have the projects there. So you have those two in place, fantastic.
Amazing, thank you. Daniela, from your perspective, you have an advanced project as well, and I know that the local hiring requirement is very important in the jurisdiction. I wondered what your experience is with the supports for that.
Absolutely, and I want to add on to what my colleagues have said. I mean, we could not have had a better permitting experience in the jurisdiction, and so we're obviously farther along. And about the Pour Gold, all of our major permits are in hand. And when I think about the Newfoundland government from a permitting perspective, what comes to my mind is solution-oriented, and which is, I think, what you've heard from everybody, but I just wanted to echo that that's been our experience as well, and again, we're much farther along on that front. From a labor perspective, and it's interesting, we're having the discussion in the context of where we started the conference, and talking about Canada and some of the trade barriers coming down and labor mobility barriers possibly coming down. We've had an interesting experience. 95% of our labor is local, and we do have an agreement with the government and the local communities to maintain an 85% local labor requirement and meet certain either or put best efforts in to meet certain either diversity criteria. And we've talked about Newfoundland's mining history. But some of Newfoundland's labor has gone out west, and we've worked to incentivize to bring labor back to Newfoundland, and of course there are a number of people that commute, fly in, fly out west, and so the ability to really return home and be much closer to family is obviously a very important element and an attraction to labor. What I think will be interesting as the barriers are removed and as the focus becomes around building infrastructure, not just in Newfoundland but in other provinces, how will that competition for the labor progress, and what do we, as participants in the province and the government, will have to do beyond what we're doing in order to make sure that we're able to compete.
Yeah, no, absolutely, and that's very impressive local engagement there. And I know Newfoundlanders, we want everybody to come home, so the locals very much support and appreciate that. Flora, from your perspective, you had mentioned the deep roots of Altius, really foundational in Newfoundland and Labrador, and a lot of the early work that was done there. What's your perspective on the province support and how that plays into the fact that Altius still maintains a very significant presence and headquarters there?
Thank you. I feel underqualified to speak because Altius has 18 people and 4 of us are non-Newfoundlanders. So I'm sorry that you're getting one of the 4 who's a non-Newfoundlander and you're not getting Brian Dalton, the founder. But having said that, St. John's is the only place that I can go where the daily market wrap-up on the radio covers 3 things, and they're not the price of gold, the S&P, or the TSX. They're the Dow Jones, Fortis, and Altius. So we are absolutely accepted in the community, and we've received the kind of support province-wide and including Labrador that basically keeps a company there for this many years, never a change in the head office. And as a capital allocator in the royalty space, our CEO will say that it's being in St. John's that's kept him from making reckless, bad decisions in the depths of the sort of manic depression that you can feel being on Bay Street. So St. John's has been great for us.
Excellent, thank you. Paul, I'm going to come back to the workforce question with you now, because I know the government is doing a lot to support and obviously has that top of mind. I wondered if you could give us some insight on what's happening there.
Yeah, thank you. Yeah, it is. I mean, we all recognize, that there's a lot of economic development activity taking place across the province. Mining is one, but also the electricity sector, wind, the hydrogen sector. And, as a government, we've been quite active in terms of engaging with our partners, wanting to get a good assessment of the workforce, where the gaps might be, where government supports might be required to kind of accelerate education and training. And there's lots of good examples of things that have been happening. The College of the North Atlantic being very nimble in terms of developing new programming, mining technician programming, digital twinning, mine sites, virtual reality, research facilities and institutions. And similarly, engaged in a conversation with Memorial University on an approach to their, vision around critical minerals, education and training, mine engineering. So these are all kind of things we're looking at, and certainly been very interested in supporting Mining NL, the industry association, and trying to secure, significant capacity funding, for them to take a significant strategic role in that workforce assessment planning and how do we fix things, if there are gaps.
I'd like to add something to that. I went to Minex, about a month ago now, and I was quite impressed. There were at least 3 booths dedicated to the trades. And if we're talking honestly about who do we need, there is the trades.
Yeah.
The others are small numbers.
Yeah.
We can train the operator, but the trades. And I was really impressed with the focus that these different organizations had. They recognized we need help in those areas and to support what the government's doing.
Thank you. Now I have a special question for Jeff, because he's been making some big moves and some big acquisitions, and he's operating in my hometown area. So what I want to know is, are there messages that you would like to reinforce about your long-term commitment to Newfoundland and Labrador?
Oh, great, Angie. Honestly, it's we've picked up a couple option agreements, property in Ontario and a couple properties in Quebec. So it's great to be in Quebec and talk about those. So, yeah, we don't have a resource in Newfoundland, but we've got access to an exposure of like almost 700,000 ounces now. So it's great. But I got to tell you, when I first joined this company 4 years ago, I just fell in love with the people. I fell in love with I'll tell you a story, and this is, you go visit the projects, right? You're new CEO and so forth, and we're driving along and seeing veins and visible gold, which is all great. And then we went off on the highway, and then just before we got off the highway, there was some garbage on the side of the road, and so our exploration manager, gotta stop, threw the garbage in the truck, and I go, was that our garbage? He goes, no, we just do that stuff, because they care. They truly care, and it was just a fantastic story. And And even I was there a week, and even though I go to Newfoundland quite a bit because of what we're doing there, I spent my 30th wedding anniversary there. So we went back to Newfoundland and wanted to spend the money in Canada and so forth. So we're super pleased. But honestly, us having Ontario, Quebec, and Newfoundland world-class jurisdictions is just fantastic. Yeah. Thanks for the special question.
Now I'm going to move on to strategic enablers themed questions. I'm going to start with Garrett. He's got the Pine Cove Mill and Nugget Pond infrastructure there for processing. And how have those assets, what are the implications of those in shaping your execution strategy?
Yeah, so we own 2 processing facilities, I guess, in Newfoundland. One is called Pine Cove, which we are now operating, and we're just kind of commissioning the plant really for the main event, which is our Hammer Down project. We hired, I think, probably 40 people back to work. The mill was on care and maintenance for a couple of years, and it's running again. It's like having an ATM machine that's actually pumping out gold bars, and which is very cool for a junior mining company that's been through a few lean years of difficult capital markets. We do have a gold circuit over at Nugget Pond that we picked up a few years ago from a company called Rambler. Share the site with Darren and the Firefly guys, and I think that's a really strategic asset for the district for processing gold from either our deposits or others. It's a really important thing to have there, and so our business plan is to look for options to use both. Right, as a company, we'd love to be able to see both of these plants running, growing production profile, starting with our own Hammer Down project first, and then growing from there. So we took a risk a few years ago, as a company without any cash flow, to be buying mills and taking on a little bit of debt without cash flow. That also is a little risky, but it's worked out, and I think we're arriving now at $3,400 gold at a very good time to start something. And I think long term, those 2 process plants are going to be around for a very long time, and lots of room to expand, optimize, and be available for other things throughout the province, I think. Yeah.
Thank you. Keith, you're in a very enviable accessibility situation with your Queensway project. I wondered if you could speak to the advantages there.
Well, I keep mentioning it in all my discussions. Is the one advantage is you can grab your Tim Hortons on the way to work, and it's not even cold by the time you get there. So it takes literally less than 20 minutes to drive to the site. Our offices and core shack is right off the end of the airport in Gander, or the airstrip. So, proximity to town, you're in town basically. And what that provides is, easy road access. Shipping, there's a port 70 kilometers away, so you got a deep water port. You can bring whatever you need in. You've got access by road. People, the homes are there, so you're not in a remote camp. You don't have to worry about all that infrastructure that you have to build. And then at site itself, well, there's 2 main power lines that go right over top of the resource. We have the problem of moving the power instead of having to build these long power lines into the site. So, having my previous job where I was in the really remote Amazon jungle, where you had to build your power plant and everything else, this is a cakewalk, so to speak.
Sounds great. You've got pretty good in your jurisdiction as well, Darren, with the same Baby Vert Peninsula like Garrett, but it's a deep mining route area as well, lots of support and infrastructure. How does that play into your decisions and progress?
Yeah, look, it's a dream come true to work in a place like Bay Verde. I've spent a lot of my career in the outback in places like the Tanami Desert, which is 600 kilometres inland from Alice Springs, and there is nothing there. Whereas now we're 8 kilometres from a beautiful town called Mings Bight. We're 14 kilometres from Bay Verte. You've got accessibility, you've got workforce, you've got, as Keith mentioned, the power, like energy for mining is a major contributor to success. And the fact that you can get green energy way cheaper than what you can get in a lot of other jurisdictions. Is a massive head start, and we've got a workforce that wants to live residential, and we will encourage that as much as we can, and obviously work with the province to start preparing for the influx of people that we're going to get in our regions. I mean, you look at this panel, and the great thing that we've got coming up is so many development projects. Like the pipeline in Newfoundland is so much better than what it was like 5-6 years ago. So, we're really going to focus on building our community. We don't want to do FIFO, and I think that what's there now is the basis to form a really good workforce, bring people back home, as you said, Ange.
Wonderful. Danielle, as your project accelerates, what level of coordination are you looking for from the province and the locals and the different entities from an execution and a strategic enablers perspective?
Sure. Yeah. No. We were, as I mentioned, we're just getting at the tail end of construction, and all the major permits that we need to operate are in hand. When the feasibility study was done for Valentine in 2022, there was always a phase 2 expansion contemplated, and that was construction on that was going to start in the second half of 2027, and the mill was going to be expanded from 2.5 million tons per year to 4. And then construction was going to take place in 28 with operating in 29. When we acquired Marathon Gold and therefore became the owners of Valentine Gold Mine, we spent a little bit of time last year at looking at opportunities to perhaps looking at different scenarios, so including up to 5.4 million tons per year, as well as the opportunity to potentially accelerate that expansion. And we're allocating some capital to do some basic engineering this year and looking at those opportunities. And of course, we've got to get the first gold across the line and have a successful ramp up, which I'm quite confident we will have. And we look forward to working with the province in looking at solutions and what that might look like. And we've sort of updated the market on how we're progressing on that, and we look forward to that. And again, lots of activity going on in the province, of course, with our colleagues here and others.
Yeah, it is great. It's fantastic to see the things advancing to, those strategic stages that are much more exciting than. My next questions are around the competitiveness of the jurisdiction, more, relative to others, or what keeps people there. So my first question there is for Flora. So Altius is a little bit different than the other companies here that are more explorers with the royalty-based, emphasizing project generation and partnerships type approach. I know there's obviously coming from a strong exploration background as well, but how does the overall collaborative regulatory model create strategic advantage for you? Again, that and shapes your decisions to stay and commit in the province.
It's a good question. I think it was really interesting to see your map earlier because we have about 46 exploration stage royalties, and the vast majority of them are in Newfoundland and Labrador. So the mineralization deposits on your map really show how prospective the Newfoundland and Labrador is. And through that, we've had partnerships where we're both a royalty holder and typically an equity holder, including follow-on equity investments with juniors, including TRU, Churchill, CanStar, Cantera, High Tide Resources. We were a 30% owner of Rambler for the same Ming mine that Darren's talked about. So it's really more of a question of why go elsewhere? So we have gone elsewhere. We've been in Finland, Australia, Chile, Argentina, but the province is so prospective, and there's been such good such good collaboration on the permitting side, and with being able to find other capital who'll come in with us. We're in some of the very big capital projects, so in the Labrador Trough, Iron Ore, that it's really been a unsurpassed area to operate.
Yeah, that's great. Thank you. You definitely hear it. It's a rare mix that you find in the Newfoundland and Labrador jurisdiction, which is, I'm certainly biased. I'm from there, but it is true. You can hear from all these people that aren't necessarily from there and don't have the same local commitment as me. Keith, again, you're coming in with a bit of a fresh perspective. So compared to other jurisdictions that you've worked in, what really stand out as the advantages for you in Newfoundland and Labrador?
The community support, full stop. To me, when, again, you're always looking for the naysayers, those that in opposition, because then you'll strategize around what it is you have to do to advance your project with that in mind. And so when you don't have that, when like that just doesn't exist at all, it just makes it so much easier to advance your project in a constructive dialogue, first with the regulators, and then the government, and then with the communities, where they come at it from a point of view of, hey, we actually want jobs. Although we have this concern, you can have the dialogue around addressing the concern, and then, oops, you move on, and you're still advancing, and you're going forward. You're not always backpedaling, and that shows up the minute you get off the plane. Well, in fact, when you get on the plane, because the people getting on the plane, half the plane is full of people flying from Fort McMurray or Detour or somewhere else, and as soon as they spot you, they say, hey, you're in the new, hey, when you start, hey, we want to come back home. That's the kind of reception you get.
Yeah, but coming back home definitely excites people. You'll hear that over and over again. I was going to say, again, being in that community and very actively involved, you will find that all stakeholders, no matter who they are very supportive. They may have questions, as Keith said, but those questions are answered and resolved very quickly, and people want to move forward. So that it's a quick pass, as long as you're willing to have the conversation, and it's mutually beneficial understandings, and everybody enters the conversation in that way. So it is like a fantastic.
I was just going to add one community open house we had, and this is actually a good example of what occurs. One person said, hey, your drilling program, you're damaging the environment, you're doing this. Well, it was actually somebody else from the community that was up to speed, and they said, no, hang on, they follow the rules, they do this, it's so-and-so, so get your facts straight, and then, we'll keep going. So when you have that kind of dialogue, and you're not even the one supporting the project, it's really easy.
Great. Jeff, you have a really interesting multi-jurisdictional perspective as well. What are the key things for you that stand out about the Newfoundland and Labrador jurisdiction?
Well, yeah, it's again, we talked about permitting. Permitting's been great for us in terms of and I think that everyone sort of knows a bit of everyone, if you know what I mean. So if you have good people doing your permitting, and there's a lot of trust, it seems to go very easily, and because there's that, that caring there. So so in terms of the jurisdictions that this is just all new, really, just happened in the last 3 weeks, but no, it's great, because again, Newfoundland is really like the early days for the Appleton Fault. Keith's doing a great job over at Newfound. We call him our big brother, kind of finding all these gold zones and now resource and so forth. And we've got claims on the same sort of fault line. So it's super exciting to kind of watch this unfold, like the early days of the Abitibi. Can you imagine, like 100 years from now, writing books about what has been happening now? So I'm not sure if we'll have a place in history, but I think certainly it's like the early pioneer days, if you will, right? So it's very exciting, yeah.
Thank you. Darren, what about compared to the Australian mining jurisdiction?
Yeah, well, Australia is very much like Canada. Then every state is like dealing with a separate country. They've all got their own nuances and own regulations, and some states are harder than others. And I think it's fair to say the same thing occurs in Canada. What I would say compared to my home state of Western Australia is that it seems to be getting more difficult to get permits. It seems to be taking longer and longer to get things done in Western Australia than what it used to. There's a lot more federal oversight starting to come into play. And comparing that to the attitude that we're seeing in Newfoundland, obviously the jurisdiction here is very, very supportive from a provincial perspective. I would say, the feedback we get from Canadian investors is, oh yeah, Newfoundland, that's great, best place to be. And on the federal side of things, we're hearing some really positive rhetoric out of Mark Carney and the new government about streamlining permitting and processing. So I think if the politicians follow through with their words and actually follow through with making that process a lot more streamlined and getting projects developed, then I think this will be, beyond doubt, better than a lot of the jurisdictions in Australia.
Daniela, what about from your experience, and especially coming from that more advanced stage?
Certainly, again, incredible experience. And I think as we look forward, and I talked about this at the opening of the conference, there's a lot of desire. There have been a lot of announcements in Canada, and it seems like there's a lot of energy building around not just mining, energy security, sovereignty, the Arctic. So permitting and capital being put to use in mining and infrastructure. And so as I look at Newfoundland as a province, I think about, there will be a competition again for capital, for people, for creating an economic environment where you can operate. And I think just the fact that we're having this conversation and the fact that you are here, I think is tremendous to continue to put the spotlight on the province and continue to attract people and capital in the jurisdiction. I had some colleagues that came from Australia and their capital providers, and they came earlier this year to just drive around through Newfoundland, not necessarily to look up a specific company because they were looking to invest in a specific company, but actually just to understand more about the rocks, the jurisdiction, the permitting process, the people, the trades. I just met with someone else recently that was just looking at the jurisdiction as to a potential investment. So there's definitely a lot of interest in the jurisdiction on that. So I think the province has done a fantastic job in telling the story.
Great, thank you. I want to pop over to the topic of the Labrador Trough very quickly with Flora and with Paul, because it has been mentioned briefly by both, but it's a very interesting, significant mineral belt, and all the explorers on the panel are operating on the island of Newfoundland, and the Labrador Trough is in the Big Lands, as we call it, in Labrador, so the mainland part of the province. But it's a world-class, high purity iron deposit, and so I'm very interested in getting your perspective on what's so important about it and Altius involvement there, and then Paul's perspective on the government support and how important it is to the government as well strategically.
Mm-hmm. Thank you. So just to start, I think looking at GHG emissions worldwide, the hard to abate industries, the ones where it's the hardest to actually make a dent in GHG intensity, it's steel making and cement, and steel making accounts for 10% of GHG emissions. Around 85% of that actually comes in the iron reduction and processing. So if you can affect that somehow, then you can really move the needle. So the Labrador Trough iron ore GHG intensity is already in the somewhere between the lowest decile to the lowest quartile. And there's technology and hydrogen activity underway that you'll probably talk about that can even move that further. Our own involvement is we were very early staking the Kami project. We drilled it in 2003 and vended it out. This is how long and punishing cycles can be, but it actually went bankrupt, held by a junior Champion bought it out of bankruptcy. So now in the hands of Champion, it's a 9 million ton per annum, high purity iron ore deposit. It's expected to come after the current Champion initiative, and the great thing is it's got capital. So Nippon Steel, the fourth largest steelmaker in the world, and Sojitz are backing it with around 549 million of funding before Champion has to put forward their construction spending. And to Altius, we've got a 3% gross sales revenue royalty. This would double our existing revenue, so by far the single most important royalty in our portfolio.
Thank you.
Yeah, it's really interesting. I mean, I think our objectives are pretty clear as a government, what we'd like to see happen with the Labrador Trough and, further development in the region. And it's really quite ironic, Flora, because when I first started working with the provincial government, it was in an executive capacity. It was in an office in Labrador City. And your predecessors, or some people who are still with the company, were one of the first customers through the door. And they were staking the claims on known resources in the region and then, envisioning what might happen in the future. I mean, this shift, the green steel phenomena, I mean, our time is right. It's the right time to be really looking at this. And I mentioned earlier our colleagues in the province of Quebec. I mean, collectively, there's big infrastructure that exists, but there's big infrastructure that's needed to truly unlock it. So, we're all go for it, and we'd love to see. It's one of our economic backbones in terms of the mining sector right now. But these are very expensive developments. They're billions of dollars, order of magnitude, and you got to get it right. So we're very excited, encouraged.
Thank you. Danielle, I had another question for you relative to, again, your advanced stage big project. Are the policies and government responsiveness keeping pace with your development? And
absolutely. As as I said, all our permitting is in hand. In addition, we're very committed to the province. We're investing about $20 million in exploration this year, and we expect our spend on that to be at least around that in 2026. So we, similarly to others here, have a large property package. We've had some great exploration results to date, and along with continuing the construction last year and this year, we've made sure that we're allocating capital to exploration. When we look at our mine plan, we've got a 14-year life and using only about less than 50% of our reserves. And so we've got the mineral inventory already to support increased production and a longer life, but we continue to invest in exploration, and because we're just thrilled to be there.
Great. I know, Paul, that it's very important with that keeping pace, as I mentioned, that's top of mind with the government for sure, and there's a lot that you're doing. We talked about the workforce and how you're ensuring that the government is supporting that, but what other areas is the government actively working in to make sure Newfoundland and Labrador stays ahead of the curve and a top-tier jurisdiction?
Yeah, sure. I mean, if you think about what's ongoing right now and some of our policy objectives, we've recently revised the Quarry Resources Act, to get more modern, to make it more efficient, to expedite and assist with permitting. We have a Mining Act and Mineral Act currently under review. We see lots of opportunity perhaps for, where there might be duplication between the two acts in terms of regulatory processes. There is perhaps opportunities that they can become one. And this is just a couple of things that we're looking at. Adding more people where necessary in the organization to assist with the amount and the volumes of work that are taking place. So, while we're doing well, we recognize there's always room for improvement, and, certainly willing to work with industry to, make necessary steps and changes to kind of make the projects happen. So.
Great. I know we're supposed to wrap it up here, but I'd like to give the panel an opportunity to do one bullet point comment if there's anything you haven't had an opportunity to say that you'd like to say, Daniela.
Solution oriented.
Yeah, I'd say let's get building.
Yep.
Watch Cami, and after that, Julian Lake.
Newfoundland gold production, high grade, high margin, low capital, and quick to permit projects. It's a great jurisdiction to be in.
Great jurisdiction, early days of the Abitibi.
Yeah.
People.
And for me, I guess it would be collaboration and partnerships and working together to get the job done.
Fantastic. Thank you, Paul. Thank you, esteemed panel. Thank you, audience. And definitely thank you to Joanne and her whole team and all the people involved in organizing and supporting, sponsoring this event. Absolutely fantastic.
I just want to thank Angie. I call her the informal ambassador for Newfoundland and Labrador. Honestly, she just does a fantastic job. So round of applause for Angie here.
Thank you.
Okay.
Terrific. Thank you, everyone.
Thank you.
Okay, thanks everyone. Would also like to say thanks to Paul and to Angie for putting on a fantastic panel, shedding kind of a spotlight on the opportunity within Newfoundland and Labrador, the province, and kind of the opportunity that it offers. So next up, I'd like to introduce to the stage Mr. Darren Cook, CEO at Firefly Metals, who's developing the old Green Bay Rambler project within Bay Verde in the northwest peninsula of Newfoundland. So Darren, stage is yours.
Thank you very much, Cole, and just like to also thank Cole for his work that we've been doing at Stiefel. They've just initiated coverage on us, and we look forward to having Stiefel as part of our journey moving forward as we build that relationship. Look, absolute pleasure to be here in Quebec City again. Great conference, and it seems to be getting better every year. And I've got some pretty exciting updates on our Green Bay Copper Gold project in Newfoundland, and it's great to come straight off the panel to talk about this project. I don't have to really spend too much time talking about what a great jurisdiction it is, because everyone's just heard it from numerous different companies, but cannot state strongly enough how critical that support from the government and the community is in terms of what we're trying to achieve on the island. So our project here, just to summarise it up before we get into the detail, is high-grade copper and gold, and it is one of the most impressive VMS systems out there. So far, our resource contains about 1.2 million tonnes of copper equivalent, and it's growing. It's still open. As has been mentioned here previously, we picked up the ashes of the old Rambler assets, and we'll talk a little bit about what happened there and what we're doing differently. But the key point here is that there's been over $250 million worth of infrastructure invested already, and that's money we don't have to spend. Critically, that is money that will be helping us get off the ground as soon as possible, so it's money we do not have to spend. And if there's anything that people are to take away from our group and our company and the people involved, we're very impatient people and we want to do things quickly. So the rate at which we've developed the project, the rate at which we've advanced in only the first year and a half of having ownership has been astounding, and it's a really credit to the team that we've got on the ground in Newfoundland, the geologists, the engineers, the former people that worked at Rambler that have remained. It is a real credit to them, the speed and at which we've been able to do this, and the passion which they bring to work every day of the week. So look, just a brief overview of the company, and I won't bore people with too many of the details here, but we're in a very, very strong financial position, and the one point that I'll make here is that cash balance at the end of the last quarter. We had 68.5 million Australian dollars in the bank. Just overnight, we've announced a financing of 77 million dollars Australian to add to that pool. So really exciting times for us. It future-proofs us in terms of our plans to bring this project back into production. It future-proofs us in terms of our ambition to make more discoveries in the area. And it really is a strong show of support from all the financial institutions that have contributed to the belief in this project and what we're doing in Newfoundland. The benefit of this project, there's no streams. There's no offtake agreement, which will be critical in terms of developing this project moving forward. Importantly, there's no debt. And we have very, very strong institutional support on our register, headlined by BlackRock out of London. It's amazing. That's a major resource fund that invests in our company in Newfoundland. So that's a big bonus for us. 60% of it is institutional. And just recently, we've dual listed on the TSX. So, we're no longer an Australian company. We're just as much Canadian as Australian. And a lot of, excuse me, a lot of this capital raise that we've got moving forward is about building liquidity in Toronto on the TSX. So what we'll see is more trading and more opportunity for people to buy shares in Canada. So where we're sitting in Newfoundland, and we spoke to a little bit of this on the panel, is we have great infrastructure, really easily accessible location, access to deep water ports, access to hydropower. We've got the Deer Lake Airport an hour and a half's drive away, so the location for a mining operation does not get any better. The support that we've had from the community has been second to none. The support we've had from the government has been astounding, and it's really good to see that people want us to bring this thing home. They want us to get it into operation. The workforce is amazing. So many people that have migrated out west want to come home to Newfoundland. And, with all the projects that are being developed on the island, there will be ample opportunity to bring people back to the island. What we have at Green Bay is already the ingredients for a large-scale, world-class copper mine. And, copper's not getting easier to find. When you actually look at where the global copper supply is coming from, a lot of the developments that are out there at the moment are these large-scale porphyries in South America. They cost billions and billions of dollars to bring online. From discovery to production can be 20 years. We are well positioned for low capital and quick production with what we're trying to do here at Green Bay. But we have a rare combination of both scale and grade with this particular deposit. It's a world-class VMS system. We've got the resource up to 60 million tonnes, and it is still open. It is still growing, and we're investing heavily in the drill bit to make it even bigger. So we currently have 6 rigs underground and 1 on surface, so 7 rigs on site. And with that recent capital raising, we will accelerate our regional exploration and add at least 1 and possibly 2 more surface rigs to really make discoveries in the district. So, we've got a mineral resource to underpin a long life mine. The surface infrastructure, I mentioned that in the introduction, really good platform to go. We've got water treatment plants, we've got workshops, all of that money that's been spent. And one of the benefits of buying an historic operation, this was producing until March 2023, is that we've got an underground mine that we can already access. We can drive in a truck and get 900 metres underground already. And that gives us a head start in, firstly, the amount of money we have to spend because we don't have to get access to the bottom of the mine and the ore body. But it also gives us time. Like, the time to develop that is incredible. So it means we can bring things back online a lot quicker. And we'll have a look at some of that in future slides. Processing capacity, We want to build a new mill here, and I'll explain why that's critical to making this project work. But the ore itself is very simple metallurgically. It's very easy to extract. There's 96% recovery historically, no deleterious elements, and there is a huge market for copper concentrates at the moment, particularly from an Atlantic province where it's really easy to access markets in smelters in Europe and in other places, even Asia. We've been getting interest as far as Asia in terms of getting our concentrate from Newfoundland to their smelters. So everything's in place for a great deposit. One of the questions we often get asked, because we did buy it out of administration, is how did such a great asset end up administration? And the work we did on this technically to convince ourselves that all of those problems were solvable, there has been nothing that we've seen since we've been operating there in the last year and a half that's changed our conviction on that. This is a great ore body. Nothing wrong with the ore body, it was just what people did to it. So the first problem was the debt spiral. The previous operators could not raise capital. They kept taking on layer after layer of debt, couldn't pay it back, had a gold stream on it, so lost further revenue. The way that that's been solved is through the insolvency, and I know it was really hard on a lot of the people during that insolvency process, but it's the only way that this deposit could work, because if it had that burden of debt still remaining, we couldn't get it back up and running. So I know it was painful for a lot of people, but it was necessary, unfortunately. And the thing I said to the local people when I first arrived was the only way we can make that right is to make this work. So there'll be jobs and there'll be future business opportunities by making this mine into the large-scale mine that we believe it can be. The ore body infrastructure mismatch was another thing, and we're not finance people running this company, we're actually miners, so we spent a lot of our career working underground in open pits, doing exploration. We understand the business. And what was really clear when we did the due diligence on this was there was a massive mismatch between the infrastructure and the scale of the ore body. And to put that into perspective, when we bought this thing, the resource was 40 million tonnes. The mill, which was 40 kilometres away, built for a little gold deposit, was only 500,000 tonnes per annum. So it would take 80 years to actually process the resource that they had. With the drilling that we've invested, the 90,000 metres that we've done to date, we've already increased it to 60 million tonnes. So it would take 120 years to put it through that mill. And I feel pretty good for my age, but I'm not going to be here in 120 years. So we want to build a bigger mill on site and really bring forward and increase the scale of the production. So that's the plan, build it on site. And then the last one was the inadequate ore definition. When money's tight, the first thing that gets cut is drill rigs, first thing that gets cut is geology, and they're essentially mining blind and making a lot of mistakes. So, investment in drilling is something that we do, it's something that's really important to us, and that's the way that we'll make it work. So when we look at the scale of this ore body, this is just a long section, and it is amazing. Like, normally VMS systems can be quite discontinuous, quite potty, but that massive sulfide zone that sits on top, which is the high-grade copper gold there in gold, that now extends over 3 kilometres, and that's starting to get into the same realms of deposits such as Kidd Creek. It's starting to get into the same strike length that you see at things like La Ronde. There's not many of those things around. So with the ore body that we have that really high-grade copper gold sulfide zone on top. But then beneath it, we've got this bulk zone of large-scale copper veinlets that bulk out to be around the 2% copper mark. And that's amenable to bulk mining. And that means that we need the bigger mill to change the mining method to get the lower unit costs and make the economics of this project work. But you can see some of the holes that we've drilled recently are some of the best holes that we've had in that deposit. 86.3 metres at 3.7% copper equivalent true thickness is unheard of. So, we've got a great platform to grow. It's still open. We've got 2 rigs drilling further down plunge extensions, and we expect a resource update later this year to show that growth occurs. We've put out some holes in front of our existing 60 million tonne resource. You can see some of the hits there. We've still got 25 metres at 5.1% copper equivalent. Another hole out in front in that massive sulfide zone had nearly 13 metres at nearly 7% copper equivalent. So the ore body continues. The geophysics that we've done down plunge shows that it continues. And with this latest capital raising, what we're going to do is accelerate that growth. We're going to continue to drill, continue to expand the resource, and really demonstrate the world-class scale and grade of this deposit. The key use of funds that we're going to have for this capital raise will be to really accelerate the regional potential. And the thing we know about VMS deposits is that they never occur as orphans. They're always in clusters. There's always more than one. And the Ming mine that we just looked at the long section of is just one of 8 historic mines that were mined up until the 1970s that we have on our ground. You know, we've got the historic Tilt Cove mine. When we look a bit closer to home, we've got the Rambler Main mine that was mined between 1964 and 1967, and we've got the East mine. And the Rambler Main mine is all part of the same system. It's on the same geological contact. Up until when it was mined, they mined 500,000 tonnes, but the gold to copper ratios had slipped around a bit. So, you know, that particular one was 4.7 grams per tonne gold produced and 1.3% copper. It was only mined to 200 metres below surface. Gold wasn't worth much back in the 60s, and they were more interested in the copper. So they stopped mining 200 metres down. Our first 2 holes from the surface exploration hit 10 metres at 5.7 grams gold and 1.3% copper. The next one down that extended it to 200 metres beyond the old workings, nearly 13 metres at 4 grams gold and 0.5% copper. So we're just starting to unlock the potential of this. And when you compare it side by side to Ming and the scale of Ming and how extensive that deposit is, you look at on the left-hand side of that image where Rambler Main Mine is and where our new hits are. We're only scratching the surface. There's no drill holes down plunge of this. So we're pretty excited about what the exploration future holds. Then all of a sudden you're talking about a hub and spoke model, 2 mines feeding a mill. And you know, the possibilities are endless for us. The value drivers for us is continued resource growth. You know, we believe this resource you know, will grow significantly over time. We're spending a lot of work upgrading the resource for our mining studies, so converting it from inferred into measured and indicated, making those new discoveries. All I can say is watch this space, because the rigs are out there at the moment. Our team, led by Crispin Pike, is doing a great job unlocking the potential of the district, and yeah, I'm really looking forward to some of the results coming back that we've drilled. The global scale, that rare combination, again, pretty exciting to see. And we've spoken at length on the jurisdiction, so I don't need to say more about that. We wouldn't have come halfway across the world if we didn't believe in the jurisdiction and the geology of what we're dealing with. Key things for us to look out for: resource update later in the year. We'll be putting out our first economic mining studies late this year, and we will be moving to feasibility very rapidly. We're also in the EA process, and hopefully we'll get some good news soon on that front and be able to get constructing there and bring those jobs back to Newfoundland as soon as we can. So thank you very much. If there's any further questions, we'll be around the conference for the rest of the day. And once again, thanks to the organisers. It's been a fantastic conference, and look forward to seeing everyone in the near future. Thank you.
Thanks for that, Darren. Appreciate you walking us through some of the upside with Pickle Crow and the gold and the copper in Green Bay. Next up, moving right along, would like to welcome Garrett McDonald, President and CEO of Maritime Gold. Going to walk us through the Hammerdown project in Newfoundland and then the development ahead.
Okay. Good afternoon, everyone. My name is Garrett McDonald from Maritime Resources. Really happy to be here and tell you about a new gold project that's coming online this year in the great province of Newfoundland and Labrador. It's actually one of our machines that's digging today at our mine site, so how about that? Okay. Key points for investors. This is an investor conference, so we're going to tell you why you should be owning Maritime stock. We just raised $20 million to fund the development of the project. We're fully permitted to construct the project. We have our own processing plant that is operating. We're now pouring gold. We actually are, at a small scale, the only gold producer currently in the province. We have a very high-grade asset called Hammerdown, which was a former mine that operated back in the early 2000s when, if you remember, gold was $280 an ounce, $300 an ounce. I was working for a gold producer at that time, and I was pretty confident I was going to get fired, so I left Timmins, and I ended up in Fort McMurray when oil was $17 a barrel. So here we go again, back to the Hammer Down project at a gold price 10 times what it was back in the day. And so we're putting all of this together to start gold production this year, generate cash flow, and grow the company kind of step by step, working our way up through into what we hope is going to be a 100,000 ounce a year producer. This is our peer group. I often compare ourselves to some of these other companies that are in a similar situation where they're ramping up a production or into production, new mines, or maybe they're just, they're starting, they're just about to get going. I think for the last few years, this is I've seen investors have been looking for scale for a long time, looking for 200, 300,000 ounce a year projects. But there's a nice little niche here for the sub 100,000 ounce a year group of companies that can get into production quickly with very low capital, with lots of upside from there. So I think with the gold price coming to where it is now, but almost $3,400 an ounce, cash flow is certainly on the minds of investors, and that's exactly where we're positioned now to be one of the only few companies coming to market in Canada with a new producing asset this year. Newfoundland and Labrador, we just had the panel discussion, which I was really happy to be part of. Our project here is up in the northern part of the island in the Bayvert Green Bay district. We own the Hammer Down project. We actually own 2 processing plants in the area. So this is a little different for junior companies to have these mineral processing assets. We bought these a couple years ago, and we've been taking advantage of what's available. So as we first came in here a few years ago, we looked around and said, okay, what do we got? We have a high-grade deposit, and there's processing facilities in the region. Okay, we all know how long it takes to permit and build and finance a brand new mill, new tailings facility. These are big capital items for most companies as they develop projects. And here they were sitting here. Okay, so we actually invested quite a bit of money into these assets. We now own them. The one on to the northwest corner there is called Pine Cove, which we bought a couple years ago. That's the process plant that we actually turned on back in February. We hired probably another 40 people back to work, and we've been processing gold since really since March 1st. And most of that material is from some stockpiles that we located around the mill site. We actually found close to $2 million of gold in the mill through the pipes that we cleaned up in some of the tanks, which was a really lucky find there. So long term, as I mentioned, we'd like to get to 100,000 ounces a year in the future. We think there's mineral potential certainly to do that, but we're starting first with our Hammer Down project, which is down to the south there, hauling the ore directly to the Pine Cove mill, which is now operating, and that is the plan for 2025, which so far so good. We've restarted the mill. We've hired people back to work. There's a great workforce locally. We don't have a camp. People are home every night, which is a big advantage for a company like us that is trying to start up a new project. Those are our first 2 bars that we poured. That's kind of fun to show this to you guys, because last year I was talking about this, and well, here they are. So good progress there. Second half of the year is all about execution, Hammer Down development. Our mine geologists, or our geologists that work for the company now, are now turned into mine geologists. No more exploration until that thing's running. That's the direction for now. We have a lot of exploration potential, I'm just joking, but there will be that as well. But the focus here is on the mine ramping up this year. Some of the milestones along the way over the last couple of years, I like to say that's our share price graph. Actually, ours might even be a little bit better, but that's the gold price. But along the way, my point is here that we've just been steady progress, working our way up through the studies, the permitting, the acquisition of infrastructure like the mills, strategic investments, Firefly Metals. Darren was just here, was one of our investors, working our way all the way up through recently a $20 million financing just after PDAC to fully fund our project for this year. So great progress for a little company. This is the Hammer Down project. This is what it looks like. Richmont was here back in 2000, 2004. Very low gold prices, very high cutoff grade, 8 gram per ton cutoff. So if you can imagine, it was a 15 gram deposit, ran for 4 years. We're looking at it as an open pit There's about 110 narrow veins, of course, so if you can take them all at once, you've got a nice wide zone here. We do have some selective mining in some of these veins as well. That's actually a picture of the mineralization from last week at the mine site. So this is a very low capital project to get off the ground. And we're not trying to be the biggest, meanest gold producer out there right away. We're going to start in pieces, 50,000 ounces a year from a high grade 5 gram open pit going to a mill that's already running. That's how we get going. That cash flow will then help us invest in exploration, looking for other projects to get to that 100,000 ounce a year target. But we're going to do it step by step. One of the key de-risking steps for us was the grade control drilling that we did recently at Hammerdown. So for a small company to get into production, you really have to understand the ore body. This is a very well understood ore body and drilled. We did another 273 drill holes in a very small area in the first year of what we think is a production profile here for the mine, with some fantastic results. We want to highlight some of these. 12 grams over 28 meters, that's at surface. But you don't see that too often in an open pit. So that was really nice to see. The metallurgy is great. We're getting about 93, 94% recovery expected at our plant. And this was a very good thing to do. We're now updating the mine plan to include some of these great results. Interestingly, since this was an old mine, it was cut and filled, right? So there was some backfilled. All the stopes are actually backfilled. The backfill material itself is actually ore. And we're seeing about 2 or 3 gram per ton material in the backfill. At the time when Richmont was mining, that was waste, 8 gram cutoff grade. So it's a little bit of upside here. It's coming out of the mine anyway, so we think this is going to be a big win for everybody. The key to, I guess, all of this is, as I mentioned on the panel discussion, is the Pine Cove Mill. So we now have the ability to generate cash flow. Cash flow is important, $3,400 an ounce with your 73-cent Canadian dollar. That's pretty impressive. So we now have that ability to send ore to the mill, get it through the plant, pour the doré bars, and sell them. So this is the Pine Cove facility. It's been on care and maintenance for about 2 years, and as I mentioned, in February, we turned it back on. We brought people back to work. It's got a large in-pit tailings facility, which is good for well over a decade, or maybe even 20 years. A 1,300 ton a day process plant. Behind the mill, you can see all of the, I'm sorry. No, we screwed that up. Okay. We're going the wrong way. There we go. Anyway, the mill is there. We got a big tailings facility. There's a really interesting feature with this site too, is the port. Okay, there's a deep water port that actually has a company involved in producing aggregates from the waste dumps from the old mine. They crush it, they wash it, they size it, and they load it onto Panamax-sized ships, 60,000 tons a shot down into Florida, recently as far as Guyana. So it's a good solution to getting rid of waste rock, okay? It actually opens up the area for us. So that port is a very important strategic, I guess, piece of infrastructure for the region. There's plans potentially to expand it. There's a great option to export materials from that port, such as copper concentrate. There's even opportunities, we think, to bring materials in long-term to process at that site. So this is a very, very interesting site, and we're happy to be going there. This is our first gold production from our Pine Cove mill. We restarted, like I said, a couple months ago. Stockpile material just lying around the plant site. We were able to clean that up, get people back to work, get people trained, and that was the big advantage of doing this, was to get everyone ready for the Hammerdown project coming online later this year. Of course, we were able to see some gold production, which is great. We've made an investment as well into the plant already. We actually bought some new equipment to give us some extra grinding capacity. This arrived here from a long drive from northern part of the Yukon. We bought some extra equipment to come in and improve recoveries and increase throughput for the Hammerdown project. Hammerdown is about an hour south of the mine site, or sorry, of the mill, but even at the mill itself, there are lots of opportunities for growth. We can see several targets just around the mill site here. The mill is on the bottom left corner. Other deposits that just, certainly at these gold prices, haven't been looked at enough. There's a lot of exploration potential. Now that the mill's running, these deposits just have to cover the cost of development. There's not a big capital, chunk of money that they have to overcome. So that really opens the door up for all kinds of potential here around the mill site. Really, anywhere within, I would say, 100 kilometers of this mill is now, I think, kind of open for business and should be looked at. So a little bit on exploration. All I can tell you here is that Maritime, over the last few years, we haven't done a lot of exploration, not too much. We've focused the company on development, getting to cash flow, and the timing couldn't have been better. We're arriving here at $3,300, $3,400 an ounce, and now we're ready to go. Permitting, financing, operating mill, things are starting to line up really nicely. But we do want, of course, to start exploration and look for the other opportunities that are out there. And as an engineer, looking at geology and showing you, I'm not going to tell you about the geology here and the details. What I can tell you, though, is that we have very large fault structures that come together, and that's really where Hammerdown was created. We have the same situation repeated several times on our property package, where we've had little to no exploration at all, but we can see quartz veins, high-grade gold, lots of copper as well, showing up on our properties. There's a lot of potential. We will get to it with cash flow from our mine, or we can, there's a parallel process that has to happen with that. But it is on the agenda for sure, later this year, early next year. But the focus for the company currently is development and execution. Even at the mine site itself, we don't have to go very far. We have targets within 100 meters of our main Hammerdown deposit that we know about, but we haven't drilled. We've got very good information from geophysics, some historic drilling, some that we've done as well. Hammerdown looks to be, for us, about an 8-year mine life at the moment, but there's potential with very little extra drilling to double that, also along strike and even at depth. So just on the mine site footprint itself, lots and lots of potential to grow this. The little green thing that we see there, so the yellow shapes there are gold. The green is a VMS horizon that kind of creeps into the footwall of the gold zones. We never really looked at that before because we didn't have a way to process base metals, and it just wasn't large enough to really get too excited about. But our Pine Cove mill, which is now operating, is a flotation plant next door to a port that's shipping products internationally already. I think this is a really interesting opportunity to maybe look at copper. There's copper in here, there's zinc, there's silver, along with gold. So potential along this whole belt here, not just for gold, but also critical metals. Something we don't talk a lot about because we haven't really done enough work on it. But it looks really interesting to us, so stay tuned. That could come into focus here in the next year or two. Finally, we talked about infrastructure, the Nugget Pond Gold Circuit. This is something we acquired from a company called Rambler back in 2021. This was the original gold mill that processed ore from Hammerdown when it was operating. Great facility, been kept in great shape. I think this is something that's going to be very valuable to Maritime in the future here. We're looking for ways to put ore in this mill, of course. I mean, as I mentioned, our target is to do 100,000 ounces a year as a company in the future, starting with what we have at Hammerdown. Lots of exploration potential. I can see this being used at some point. There's also opportunities for other companies in the area to look at it. We've had a lot of interest in the plant, so we'll see what happens. It's a very valuable strategic asset for the Bayvert district, and we were happy to pick that up a couple years ago. Finally, on the corporate structure, 11 seconds, here we go. We just raised $20 million. You'll notice we have a lot of shares outstanding. There is a 10-to-1 consolidation happening in about 2 weeks from now. Our major shareholders include Firefly Metals, Eric Sprott, Dundee Corporation, and several other institutions. You can see that we're very tightly held as a company, and we currently have about $18 million in working capital. And analyst coverage, SCP Resource Finance has a 22-cent per share target on the company, currently trading around 10.5 cents. So that's Maritime. Any questions, please see me after. Thanks very much.
Thanks, Garrett. Well done. Thank you. Thanks, Garrett. Appreciate you walking us through Maritime and kind of the upside with respect to the value drivers at Hammerdown. Next up, we're going to do a quick fireside chat with the Executive Chairman, Mr. Richard Williams of Bunker Hill Resources. Welcome to the stage.
Feels a bit close.
Alrighty. Thanks everyone for sticking around. As I mentioned previously, we have Mr. Richard Williams, Executive Chairman of Bunker Hill Resources. Thanks for being here. And I just figured we could kind of start and kick things off by giving the audience a bit of perspective on the asset, on the company, where you are within the development framework, and then kind of the strategic location of your asset, Bunker Hill, within the Silver Valley in the Panhandle in Idaho.
Okay, very quickly at a high level. We're a development project going into production in the next 12 months. We'll be producing 2 concentrates, a zinc concentrate, around about 50 to 60,000 tons of that, and a lead silver concentrate, 30 to 40,000 tons of that will be driving to Teck's Trail smelter. When in production, over our 14-year life of mine, as we look at it at the moment, the average EBITDA on conservative prices will be round about $45 to $60 million, depending on how much silver we're mining relative to the zinc. We're currently valued at around about $50 million. So if you imagine us going into production and you use a base metal multiple, you can see that when we're in production, there should be a pretty handy uplift. But we're a polymetallic mine, and the more silver or galena we can mine relative to the spharolyte, the more silver we'll produce. And Bunker Hill ran for nearly 100 years and had its own smelting operation on site, and was shut down in 1980 for environmental reasons. It couldn't keep up with the very good laws passed by Richard Nixon and others in the 1970s. Became the largest mining Superfund site, was completely cleaned up by the EPA. This, of course, crushed the local economy and also removed all the surface facilities around the mine. And so over the last 5 years, a team of us, primarily ex-Barrick, have come in and partnered with companies such as Teck and are building the facilities and have a 12-month plan to get it all into production from now.
Fantastic, fantastic. You mentioned your market cap, around 50 million. And then you mentioned Barrick and the team behind Bunker Hill. I'm just curious as to what attracted you to the project post your kind of COO tenureship at Barrick between 2015 and 2018. What were the attributes of the project that attracted yourself and the team towards Bunker Hill?
Okay, thanks. I spent time as Chief Operating Officer of Barrick, as you just mentioned, hired in by John Thornton, and then stepped down when he bought Mark Bristow and Randgold. And a number of us who'd been working together at that time had decided we want to find a distressed project that we could bring into production in North America and have it as the base of a new American mining company. The key guy, although I'm chairman, as always, the key guy is the CEO, a guy called Sam Ash, who at age 38, I gave the Lumwana copper mine to turn around, young age to do that, and it was losing $1 million a day back in 2016. And Barrick didn't have any money to provide him. We were focused on paying down debt. And so him and a very remarkable team that came from the copper group turned that around brilliantly in 12 months, while also doing the early work for what's now become the Lumwana Super Pit. He's a real superstar. Such a superstar, in fact, that I nominated him as my successor and then sent him off to London Business School to do what I jokingly refer to as a master in corporate politics before he came up to the head office. But while all that was going on, John bought Randgold and we stepped down. During COVID, we were reviewing all sorts of things, and at that PDAC where we all caught COVID, Sam and I shook hands. He went down, bought a house 25 minutes walk from the mine gate, and we started work. Into there have come a number of others, not just from Barrick. Our general manager, Tom Francis, came from being the ops manager at the Kennecott mine. Mike Iselin, our processing guy, ran all of Barrick Nevada's refractory processing plant, and one can go on. I'm very proud of the quality of the technical team that have all moved into Kellogg, Idaho, or its environs, Coeur d'Alene, to lead not just Bunker Hill, but be the foundational team for the expansion of the company thereafter. Once we've got over this first brand-proving hurdle of, with very, very limited amount of money, the capital markets are tough for little operations like ours, and turning around an asset and being the first mine
in North American history to restart in a Superfund cleanup site. All of these are big goals, and on the assumption the team can do it, we believe that we'd have proved our credentials as a team, and then seek to expand Bunker's value, but also beyond that.
So we'll get into the expansion potential beyond the current 14-year PEA and the 5-year PFS.
Yeah.
But I would kind of like to touch on the strategic significance of the asset, where it is located within the Panhandle, and how that kind of feeds the onshoring mandate with respect to the Trump administration. You know, zinc-rich, silver-rich feed going up to Trail and then coming back down to the U.S. for strategic stockpiles. Can you kind of speak to the strategic significance of the asset? Again, being a previous Superfund site within the kind of North American scheme of critical metals.
Sure. I zoom, orientating everybody into Bunker Hill's in the Silver Valley, Idaho, around about 30 miles long, and in the Silver Valley, Idaho, which produced 1.3 billion ounces of silver since the 1890s from underground mines primarily. You've got Hecla's Lucky Friday, you've got Tom Kaplan's Electrum's Sunshine, you've got USA Silver's Galena, and you've got Bunker. There are a few other small properties. When we're up and running, we'll be the largest processing plant at 1,800 tons a day with plans to go to 2,500. Now, where does the concentrate all go for all of those operations? It all goes to Teck's Trail smelter, just 7 miles north of the American-Canadian border in British Columbia. That smelter's run for nearly 100 years, that metallurgical complex, very well established, very effective, very large. Its primary feed comes from Teck's Red Dog mine, the world's largest zinc mine at the moment, up in Alaska. And its byproducts, its products from that Trail smelter are very interesting from a U.S. strategic perspective. It produces approximately 50% of the germanium and gallium and 100% of the zinc stockpiled by the U.S. Defense Department today. It should be seen as the discussions that Teck, I'm not Teck, has with the U.S. government, be it Department of Energy or others, as a piece of strategic vital ground for the United States government. If you look at it in the competitive sense, obviously we're all sitting in this particular moment in history where the US and Canada have taken views on each other with respect to trade, but we all know that there is an integrated metal supply chain in North America, that if there wasn't a border or there wasn't a dispute associated with the border with respect to tariffs, would move quite smoothly. So Teck's Trail smelter is really important for the US. It's also critical for Teck's zinc business. And although Red Dog is open pit, and in 6 years' time, as they declare it's going to go underground, they need to find reliable feed for it, so that firstly its economics work, but secondly it can continue to support the US and the Canadian metal supply chains. Now, they used to have Pend Oreille mine in Washington State, which shut 6-7 years ago. We actually bought from Teck their processing plant, moved it to site, and refurbishing it. And Pend Oreille was really useful to them because it produced really clean concentrate. And Bunker Hill will produce really clean concentrate. So although we're not huge, I mean, 100,000 tons of this stuff is not massive, and with respect to what Trail can do, we can provide clean concentrate that allows them to blend with other things and make better money that way. So the relationship between us and Trail is vertically integrated. Teck has not only provided us the processing facility or elements of the processing facility that we're putting in place. They've also, as we announced in March, are putting in a lot of equity into the business, and will be approximately, once an equity deal, which is ongoing at the moment, is closed, approximately a 24% shareholder of Bunker Hill. So our relationship with Teck is, I wouldn't call it father and son, but it's not far off. They're the big guy. We're just one of the components of a supply chain that they own, and the commercial relationship is very, very strong indeed. So there's a little bit of America, a little bit of Teck in there.
Right.
Yeah.
So you talk about the supply chain, right? And I'm just kind of curious your view on if we were to see Teck have more kind of strategic interest in vertically integrating and asset ownership down the supply chain with respect to zinc. Because to your point, Red Dog, the expansion would have to go underground. There's been no FID on that just yet, although it's 6 years ahead. There's fewer zinc assets coming to market within North America, especially within Western Canada. You think Foran, McIlvenna Bay. Outside of that, Teck has interest within the San Nicolas project with Agnico Eagle. But do you see an interest for smelters to have more ownership of zinc assets, similar to what we've seen in the copper side, because TCRCs have been so recently depressed?
It's a good question. And again, I obviously can't speak at all for Teck and its strategy. I'm just sort of taking a step back and saying, let's have a look at the history of refining in North America or even globally. And let's compare a little bit with China. China uses government money to fund loss-making smelting and refining capacity because they see refining and smelting capacity as strategic. It doesn't need to make money, it just needs to be disciplined. In the West, as a good capitalist country, no one's going to invest in anything unless it makes any money. And so what happened to refining and smelting in the US in the 1970s when those environmental laws came in? The standards required of refinery was more than the people who were running them could afford, so they all shut down. That was fine for the US because it could just buy its metal from overseas, wherever it may have been. But we're now in a position where you have excess smelting and refining capacity in China that essentially squeezes the margins down for anybody else that owns a refining and smelting operation in the downstream. There's a role for government in that, by the way. If we decide that refining and smelting onshore within the United States is important, and buddies of mine running alumina smelters in Louisiana or elsewhere are all in and out of the same US government offices I am, we should look at the US and the Canadian government, and I know in Quebec they're doing a bit of this, to look at actually how government money can sensibly keep those things up and running. That's the government question compared to China. With respect to us, private sector producers, whoever owns Trail Smelter, just use that as an example, which is Teck, wants to have as much reliable local feed as possible. And there's a number of, if we just use the polymetallic but zinc heavy projects that are around in North America and Canada in particular, a number of the speakers over the last few days have been talking to those. If you could bring all of those into production, then you're more than happy going to keep the Trail Smelter and others up and running. But as we know, there's all sorts of complexity relative to each particular concentrate, impurities and so on. So the relationship between those who own the smelter and those who want to secure the feed, well, they're often the same thing. So hence why Teck has put money into us and supported us. And hence why also they've done the same to one of our neighbors, USA Silver, in the Silver Valley. That's about 8 miles away from us. So you're seeing a major that owns a refining putting money into the upstream, which makes absolute sense. For Teck, they need to keep that operation running. For the US government, they need to get that operation running.
Yep, it's strategic, 100%.
Yeah.
So we're just coming up on about a minute left, Richard. Thank you for walking us through the strategic significance of the asset, of the location of zinc vertical supply chains. I'm just curious if you could kind of provide to the audience kind of a 30-second outlook in terms of catalysts for the company over the next 6 to 9 months, and what investors should be looking at.
Okay, really importantly, the critical thing is we are currently, and we announced it in March, we haven't closed it yet, we're hoping to close it now, closing the first phase of a 2-phase equity raise, where Teck is putting $2 in for every $1 we raise in the public market, concurrent with restructuring some expensive debt streams and royalties that we've had to take on in the business. That, hopefully, in the next 24 hours will close, and you'll see all that in the public market. I'd love to say that's us fully funded to production. It isn't. We wanted to go out and raise $20 million in the market, but we could only get just over 10. So we'll have to go back to the market again before the end of the year. Our project's currently 68% complete. By the end of the year, it'll be north of 90. And the next chunk of money coming in, and we want it to be equity, is really working capital that will get us over the finishing line. So if you're interested in it, it's the pre-production to production value-creating catalyst that you're going to test us on.
The re-rate to commercial production.
Yes, sir. That's what we're going to do.
Okay, great. Richard, thank you, sir.
All right.
Thank you for taking the stage. Thanks, everyone. That was great. Thank you. Next up, would like to welcome Mr. Matt Manson to the stage, who is CEO and President of Radisson Resources with their O'Brien mine within the Abitibi.
How you doing?
Thank you. Alrighty, let's get started. So Matt, thank you for taking the stage and sitting down with me for the fireside. We've got around 15 minutes. I'd like to talk through the asset, your background, and what kind of excites you most over the next 12 months. So we'll kind of unpack those different aspects. But first up, you've now just kind of been in the seat for over a year, having started, call it last June or so in 2024. Outside of obviously, and we kind of spoke about this yesterday when we had our one-on-one, the kind of jewelry box specimen pieces that we've seen from prior production at O'Brien back in the 20s to 30s. What was it that kind of attracted you to the project, to O'Brien within Quebec?
Yeah, so I'm coming from a mine development background. So I've done sort of 3 in my career. I was a lieutenant junior person at Aber when Diavik was built with Rio Tinto. I was then CEO when we built the Renard Diamond Mine, CEO of Stornoway, the diamond mine in Quebec. I was CEO of Marathon as we were developing the Valentine project that Calibre acquired and now Equinox. So for me, and also for everybody else involved in Radisson right now, Pierre Baudouin, and many people will know as the chairperson, Peter McPhail, who was my chairperson at Marathon, ex-Alamos, he's on the board, Michael Gentile is involved, big investor. You know, we see a mine here, right? There's got to be a mining project and a path to its development. We're not interested in drilling the thing for the next 10 years, right? So that's most important. That's first and foremost. And yeah, O'Brien is the asset. Ran as a producing gold mine between the 20s and 50s. Famous, as you said, for these museum quality samples of gold that are in museums, and the Royal Ontario Museum has a big collection of them. You can search their online database and see it all. And we're actually trying to open people's eyes to what O'Brien is, because the drilling is telling us it's a bigger system. Sometimes when you accentuate the grade of a deposit, you're implying that it's bespoke and small in scale. That's not what O'Brien is. We see upwards of 4 million ounces here, with the mineralizing system established at shallow depths, continuing down to a sensible floor for exploration. So that's sizable, right? And we think it's a mine right now, based on what we have, which is about 1 million ounces, and we see it getting bigger.
Fantastic. And so it's probably worth kind of reminding the audience when this asset produced, what it produced, and then, you know, if it was that kind of 500 or so ounces, where you see the upside towards that 3 or 4 million ounce number. Because that's, you know, from an Abitibi perspective, that's a good, you know, type of resource to get into production with.
Yeah, so the original mine did almost 600,000 ounces at half an ounce average grade. So we think the cutoff was in practice somewhere between 7 and 8 grams. So it was high graded. Our resource that gives us that 1 million ounces right now dates from 2023, lots of drilling for that. But that's also somewhat high graded. It was done at $1,600 gold with a 4.5 gram cutoff. So we're reimagining this mineralizing system using a lower cutoff, probably 3 grams per ton, and then thinking about what that gives us on an ounces per vertical meter basis. And then, okay, if this mesothermal gold system continues down to, let's say, 2 kilometers, and that's typical for the Cadillac Larder Lake break, and for mesothermal gold systems, we get between 3 and 4 million ounces, closer to the 4 than the 3. So the drilling now is proof of concept of that. We're doing these big gutsy step outs. We drilled the first hole in 70 years since this mine closed. Nobody had ever drilled below the final level, which was at 1 kilometer. We drilled a hole 500 meters below that at 1,500 meters. We're just hoping to see the right geology with no expectations. We went through an ounce of 8 meters, right? An ounce over 8 meters. We've now done 7 wedges off that hole to get a cluster over a 250 meter diameter area. We've published 3 wedges. They all hit. The other 4 have visible gold in the right locations. We put these graphics out in our press releases. So the proof of concept drilling is working, right? So I hope we're not just being overly ambitious with some of these numbers here. We're taking these big step outs of the drill hole. We've done it below the old mine. We're also doing it below the current resource. Stepped out 200 meters below the resource there, what we call Trend 1. Hit there as well. 27 grams over 6 meters and other hits. So yeah, this is working, right? And you know, we're going to continue doing this. We raised $12 million in a financing that closed just a few weeks ago. We have about $16 million in the treasury now, no debt, very clean company. and it's all going in the ground, right? It's all these big step outs with wedges, filling out this picture of this system going down to that depth.
Fantastic, fantastic. So again, you kind of think about that 3 to 4 million ounce inventory as your exploration target or informal exploration target. Where do you see the kind of the value creation with O'Brien and Radisson towards that? Is this an asset that, you know, would hypothetically produce 200,000 ounces, or where is kind of the optimal scale and size for this type of asset?
So, you know, putting a mine development hat on, the most important thing is to start with the correct production rate, which is driven by the nature of the ore body. So this is narrow, high-grade quartz sulfide veins, right? So don't be too ambitious on that side. It's going to be 1,000, 1,200 tons per day. We're going to bring that grade down with that lower cutoff, which gives us more ounces, better continuity. So we're probably looking at, you know, upwards of 80,000 ounces a year type production at those mining rates. Thinking sensibly about this, right? And from a development point of view, O'Brien, and many people might know O'Brien, if you drive Highway 117 between Val-d'Or and Rouen, you pass it. It's just off the highway, the town of Cadillac. Because of that infrastructure, it is best developed as ore supply to one of the several mills in the area. So there's two immediately adjacent to the project. There's La Ronde, Nico Ego, of course. That's where the Lapa deposit went between about 2008, 2018. And Lapa is the analog for us. Similar grade, similar metallurgy, in the Piché formation, quartz sulfide veins. And that did about 100,000 ounces a year for about 8 years. So a little bit smaller than what O'Brien is, but similar in character. So that went to the La Ronde mill. West of La Ronde, you've got Doyen Westwood, IM Gold. That's where our focus has been, and we have an MOU with IM Gold to explore the milling of O'Brien ore at that mill. That's an ongoing conversation and discussion under the terms of that MOU. So, you know, Pierre Baudouin likes to sort of stress the point that, you know, that 3 to 4 million ounce target means that this deposit doesn't need to go to somebody else's mill. It does have the attributes at that size of a standalone operation. We think it's best developed going to somebody else's mill. And of course, in the Abitibi, it's headframes and mills on the horizon, right? So there's 5 in the region, 2 immediately adjacent to us, and that's what our development focus has been.
Understood, understood. From a, you know, you spoke to the fact that, you know, 3 or 4 million ounces, you might not necessarily need to see an asset, you know, that material go to a separate mill. It could be developed by itself, given the scale, given the grade, given the proximity to surface. But obviously, you know, if there was a kind of a plan to process or you know, process at La Ronde or process at Westwood, that would make sense. And it's always good to have, you know, 2 folks in the room to keep competitive tension moving with respect to the asset. It's competitive tension 101. Are there any metallurgical preferences for the O'Brien asset as it would relate to being processed at La Ronde or Westwood, or how does that kind of work in terms of material flow sheet from you know, from the mill to, or from the mine to the mill?
Yeah, so under the terms of the milling assessment and the MOU with IM Gold, we published back in February a bunch of flow sheet options. And I'll say right up front that every mining project has a prejudice, right? Everybody likes to be an expert in everybody else's project. So the one on this one, which I heard coming into Radisson was, oh, it's refractory ore, right? You know, you can't process it. So, you know, and that's because in the old mine they used to have a roaster and it sat beside the highway, and as you drove along the highway you saw this rusting roaster for decades sitting there. So I think we bonked that one on the head. We put out a range of flow sheet options from gravity and whole rock leach, very simple, at about 86, 87%. If we do a flotation circuit, regrind a float con, leach that, we're up at 90, 91. And then if we sell a float con and we get a good payability factor with an off-take agent, we can be up to 93, 94. So we're in that 86, 87 to 93, 94 range, depending on flow sheet options. We know all of those options work at Doyen, right? They're currently doing just a whole rock leach there with Westwood ore, but Doyen has a flotation circuit, right? Doyen, of course, did the Doyen mine and the Musca mine and the Westwood mine. So it's set up with the capacity to do a bunch of different things. Similarly, we see optionality in other mills as well. So that range of flow sheet analysis we did is all out there. It's all transparent. And now the owners of the mills can get a sense of what that ore would look like in their mills, and we see lots of optionality there.
So is the focus over the next 12 months, is it more metallurgical, or is it more exploration that investors should be looking for?
I think we talk about the day job and the bigger picture stuff. The day job is the drilling,
yep.
Right? And you know, we've raised all this money, we're going gangbusters on that. It's 4 rigs, it's all deep, you know, and that's going to be most of our news flow, and it's all going well. The bigger picture is this development path. When we did the milling assessment with IM Gold, you know, the MOU begat the milling assessment. The milling assessment begat a mining study. So we do have now a sense of how many ounces this is going to be doing for how long on the existing resource, not counting any of the upside. CapEx, OpEx numbers, value, right? That study, again, contemplates the use of somebody else's mill. So how that study sees the light of day, still to be determined, but it's probably going to see the light of day, and it's pretty good, right? There's a lot of value here if you don't have to build a mill and you don't have to build a tailings facility. You're just building an underground mine, minimal surface facilities, moving the ore to an immediately adjacent mill. You know, Doyen is 21 kilometers away by road. LaRonde is 7 kilometers away by road. So I've lived the life of building mills and building tailings facilities. Wonderful opportunity to not have to do that in this situation. Just focus on the mining, just focus on the delivery of ore to an existing operation. So we know what that's worth to us at this stage, and it's healthy. The ore body is only getting bigger. So the bigger picture story for us is, how does that play out now? Well, what's the next stage for all that stuff?
Mm-hmm. And that kind of hub and spoke model, fill the mill within the Abitibi, has been a tried and true business model for, you know.
Tried and true. They're all like that, right?
Yep.
You've got Sigma Lamac, you've got now Malartic as hub and spoke because Morban's coming into that, and Odyssey is there. You've got LaRonde, you've got Bousquet right there, you had Lapa going through there, you've got LZ5, which is the ore body going through what's called the Lapa mill there. You've you know, Doyen, Musca, Westwood going through the Doyen mill. So it's always been that way. These mills have been around in some cases for decades now, and that is the most efficient way to do it. Succession of ore bodies and satellite mines going through that centralized processing facility. And we're just aspiring to be being the next candidate in that pattern.
Mm-hmm. Fantastic. Okay, so we're just coming up on a couple minutes left. Can you do a quick rundown in terms of what the audience should expect from Radisson in terms of drilling and exploration results over the next 6 to 12 months?
Yeah, so a lot of drilling results, all deep, pilot holes, wedges. How I describe our drilling is that there's been 2 recent ways to drill deeper gold deposits in Quebec. There's the Osisko way, where you do a lot of rigs and you get a lot of data, and that's been a very successful model there. And then there's what I call the Richemont way, which was back in the day with the Island gold mine. Richemont began drilling deep on Island with big step outs. And one way gets you a build-up of a resource very quickly with lots of data. The other way gives you directional guidance as to the way it's going with less money spent. We're doing the Richemont way. Both work, right? We've got very efficient drilling costs and very efficient productivity. So we're going to do the Richemont way here. Big step outs, and directionally guide you towards the overall scope of the project. And we think we're heading towards that 3 to 4 million target. So there'll be a lot of that kind of stuff. We're going to hold back on coming out with a new resource estimate until we've done that. We don't want to cut off the drilling and then do that and then have it immediately be out of date, because every drill hole is changing the story for us right now. So we've got, I think, 35,000 meters going on this year with the upsize program. Another 25,000, I think, for next year already funded. So we're gonna do all of that. Put out something at the end of that, which we think is going to be substantial. But in the meantime, again, putting our development hats on, thinking about that path, that's going to be something I hope we're able to talk about with more clarity shortly as well.
Great, great. So you're keeping busy, needless to say.
Yep.
Fantastic. Alrighty. That's all the time we've got. Thank you for getting up here, and thank you for walking us through where the upside is and the asset path ahead.
Thank you,
Matt. Thank you, sir. Okay, moving right along. Would now like to welcome Victor Cantore, President, CEO, and Director of Amex Exploration. Thank you.
There we go. Hello, everyone. Right, Amex Exploration. Hello, how are you?
I'm very good, thank you.
You enjoyed yourself this week?
Absolutely, a great conference, lots of meetings, lots of people from the industry. The mood is really good, gold up, everybody loves it.
And the silver guys very excited today.
And the silver guys too, all the precious metals, yes.
Right, okay, well, better start. Why don't you introduce yourself to everyone and maybe a little background on the company, where we're at today.
Yeah, absolutely. My name is Victor Cantore. I'm the president and CEO of the company, of Amex Exploration. We're an advanced exploration project. We've put out a new MRE just a couple of weeks ago. We have a historical PA, and we will be putting out a new PA coming up very shortly. And I got to do the waivers. It's, I am the CEO of the company. I will be making forward-looking statements. Please refer to all the waivers that's on our PowerPoint presentation. So let's get on with it then. Once this part's gone, then we can really talk.
The lawyers are winning.
Absolutely, they're all
brilliant.
on it.
Well, look, I think yours has been a sort of huge success story of recent years because you're drilling super high-grade gold. People were super excited about the potential of this thing, and then you went out and put out a maiden resource. What happened?
So I'll start off with, we've put in $125 million of exploration on this project. We put out the first resource, again, it's historical, it was 1.6 million ounces. Property-wide, it was about 4 grams. I think it was really misunderstood because people thought that we would have to go spend another $125 million to get it to a much higher number. But in reality, it is something that could be converted into a mine. At least, that's why we did the PA as fast as possible. So you can tell the economics of it. We've put in another 46,000 meters of drilling, and we've added 46,000 meters of drilling, and now the resource is quite spectacular.
Right. And the reason I'm asking you this is because I think there's a slight new paradigm in mining. We're seeing a lot of this where, because of the state of the markets, because of the absence of capital from the usual sources, companies are having to think about things a different way in terms of financing the future. Now, you've changed things up a bit. So what's the plan?
So the plan is very interesting. So I'll give you the numbers of the MRE.
Yeah.
So it's 2.3 million ounces. Average grade across the property is about 5.44 grams. But the real interesting part is what's in measured and indicated. So measured and indicated is 1.615 million ounces at 6.14 grams per ton. And within that, you have what we call the Champagne zone. It's got 831,000 ounces at 16.2 grams. So having this high grade, if you look at on our site, you would be able to look at dips around 89 degrees. It's almost vertical. This is definitely an underground mine. So the way we're going to stage this is do a bulk sample. We'll file our bulk sample permitting soon. That's usually a 6-month process. You do a one year build out, and the portal that you put, like you're actually putting a mining portal, like it'll be 4.5 meters by 4.5 meters as the historical PA that's only 6 months ago states, or 5 meters by 5 meters. And simultaneously we'll put out a new PA, but it's going to show 4 years of toll milling, and then with the full-on mine after that. So by the time you will have extracted your bulk sample, short time after that you'll be fully permitted for toll milling, and you can do the numbers. You can do the numbers on your. I'm not allowed to talk about the numbers, but you can do the numbers on yourself. Depending how many tons, when you're mining half an ounce, it could be very, very extremely profitable.
So, I did the math. It's a lot of ounces. It's a lot of dollars as well. But I want to kind of, maybe some people in the room are used to what I So when I first came in from banking days from Africa, from Australia and so forth, which was, you Canadian guys were nuts. You were like drilling and drilling and drilling and raising money and just trying to see how big these things got. That doesn't work now in all instances. So is that the rationale here for you?
Yeah, I mean, look, as an investor, if I put myself in an investor's shoes, if you're giving me an economic study that shows that you can build an economic mine with wide margins, then go ahead and build that mine. I'd rather you drill later on. I mean, look, the rocks that we're in are about 3 billion years old. What I'm proposing is that with the free cash flow, because you'll have substantial amounts of money, then I'll turn it into that thing. I'll turn it into Swiss cheese. I mean, we have 197 square kilometers on the property. We've barely, I could say, scratched the surface on this thing. So I'd rather find more ounces with the least dilution possible. So that's really where and I think more companies. I mean, you have to be well, you have to be lucky enough that you have a property like this. So when you look at those 830,000 ounces at 16 grams per ton, it's no different than you hear it all the time in the industry where people say, "Oh, I have a high-grade starter pit." Well, I got a high-grade underground mine that I can put into production, and getting a bulk sample. I mean, will cost you $35 million tops, and then it's ramp development after that. So in 2028, once you're permitted, you can start production toll milling.
So this is your answer to how do I fund my future growth? It's as simple as that.
It's as simple as that. And the other part that you're going to be doing, we will get a feasibility study for a full-on mine with all the open pits and everything else that goes with it. Timing on that will be further down. Now, what differentiates us from the other companies that in that period where you're permitting your open pits, your tailings management facility, if you have one, and your mill, well, we'll actually be in revenues, and you can use that money. I mean, two things to de-risk the project. You can use that money, you put it aside, so it de-risks it from a financial standpoint of view. And after 4 years of toll milling your Champagne zone, which is 50% of the M&I right now, you'll be able to know how the rocks behave. They don't always behave the way you want them to, and that's how you can properly size your mill.
Right. So, and one of the long poles in the tent here, is it just the permitting component? Because everything else seems fairly standard.
Yeah.
Right? You just got to make the decision to start the process.
Absolutely.
What's permitting look like?
Permitting for a bulk sample, which will permit you to open up your portal. It's a mining portal. That's usually it's a 6 month process. So what you do is you get a feasibility study for just the toll milling part. You should get that within 6 months because it's not very complicated. You're not talking about open pits, tailings management facility, any of that. And that will trigger, your positive feasibility study will trigger you to start all your permitting process. Permitting process without any, for just toll milling, without fast tracking anything, you're looking at maybe 2 years in Quebec. Your BAP process is usually 2 years. You start your environmental. So that would take you into 2028 if you get your positive feasibility study in early 2026. So right. You'll be a producer at that point.
Okay, so I think very quickly and very simply outline the plan. The market's heard the plan for the last couple of months. Since April, I think there's been a sharp recovery from the drop-off we saw after the MRE. Are you getting any pushback at all? It doesn't seem to be.
No, not at all. When you, at first, when this was proposed, the mining engineers, their eyebrows went up. What is this? And when you start breaking it down, and it really makes a lot of sense. You're staging your production. It's really, you're de-risking. You're actually de-risking it, and you'll actually get into production a lot faster.
Yeah, I mean, and I don't think this is a re-rating because you're going to call yourself a producer. It's the re-rating is coming from I've done the math. The quantum of with the ounces coming out of the ground at today's prices, and you're going to have to demonstrate, I guess, recoveries and payables from the toll milling, etc. So what's the timing on understanding the economics further with the fees?
Well, we've done metallurgical testing. If you look at the Champagne zone, it's quite exceptional. It's really free gold. We've been getting 99 in lab. We've been getting 99% plus recovery. We've used 95% for that, and that's where well, at least half of the M&I is there, so that's where you're getting most of it. The other zones, we've done the metallurgical testing also, and you're getting numbers of 97, 98% for the gold. And our silver, there is silver in the project. It'll just be credits. It's really all our economics is done only on gold.
Okay, you've had an extraordinary exploration phase. You're now talking about moving into kind of build phase. The team's going to have to evolve and change. You're going to maybe some new board members. What have you done about that?
Absolutely. So in our circular right now, you'll see there's Phil Brummett. He's an ex-Lundin person. He's worked also with Luca Mining and a couple of other ones. So he's been building mines for the last 40 years. We brought in another mining engineer that's working full-time with us that was at the Greenstone. He was at the Greenstone mine from feasibility right to first pour. He was there from 2019 to last year when we hired him. So yes, there's a transition that you have to bring in mine builders here, and we're definitely preparing for that. That's exactly what we're doing.
Are you going to be part of that team?
Absolutely.
Good man. Well, look, we're going to wrap it up there because we've been told to speed things up because we're running behind, folks. So I think hopefully the message has got across. I think it's a great story, one of our favorites for sure. So Victor, thanks very much for your time today, sir. Thank you. Cheers. Bye-bye. Thank you, everyone, and hope you enjoyed the show.
Okay, thanks everyone. I would now like to welcome, we're going to do a kind of Yukon Spotlight panel. And I would like to welcome Nicole Holler, co-founder of Nickley Communications, who's going to introduce the panel for us.
With strong government support, respectful partnerships with First Nations, and a richly endowed but underexplored terrain, Yukon delivers exceptional upside for investors in gold and critical mineral exploration. Only in Yukon does the government invest directly in promoting its mining sector. Through the Yukon Mining Alliance, public funding helps showcase our companies and projects to the world. Yukon Mining Alliance brings together 13 leading companies, all advancing the next generation of Canadian mining. From multi-million-ounce gold discoveries to massive critical metals resources, Yukon companies are building a new mining district in Canada. With modern roads, grid power accessibility, access to a deep water port, and a commitment to responsible development, the Yukon is built for success. Major mining companies and investors are already here. The Yukon offers security, stability, and scale. Gold and critical minerals drive the modern world. Yukon companies are finding them.
Welcome, everybody. Thank you for being here. I'm Nicole Holler, and I am here with my business partner, Liz Monger. We're in Nickley Communications, and we run the Yukon Mining Alliance. And we're here with our colleague from the Yukon government, Samson Hartland. It's my pleasure to introduce our moderator for today, the esteemed, shades of when I say that, Dr. Nicole Adshead-Bell. Nikki, as we know her, is a geologist with nearly 3 decades of navigating the wild and often bewildering world of mining and finance. She's dabbled in everything from geology consulting, fund management, and investment banking to resource company executive and director roles. Basically, if it involves rocks, stocks, and risk, she's probably been there, done that. Along the way, she's kicked rocks, literally, and sometimes with geologists still using a compass, on over 300 exploration, development, and mining projects across 6 continents. We hope you enjoy this panel, and we look forward to all of you having a conversation with these companies, reaching out to them after the panel, or certainly after the conference. Thank you very much.
Thank you very much, Nicole. Whenever I hear my bio read out, I realise I need to make it a lot shorter. But congratulations to you in the audience who've stuck around. We're on the home stretch. And for those of you that are watching in the video at a later date, there is standing room only in this facility. So well done to that. It shows the power of the draw of the Yukon. So why are we here talking about the Yukon? The Yukon, we've seen some amazing discoveries recently with Snowline. You have a very, very supportive government and regulatory framework. We've just had, interestingly, probably I think the first transaction in Canada where a First Nations group, the Selkirk First Nations, are in the process of acquiring a project out of bankruptcy, Minto Mine. We have had evidence of an ability to be able to fund, advance and build projects with the Minto Mine in the last copper cycle, and just as a point of economic returns. And thank you very much, Andrew, for pointing me towards this, but during the life of of Minto, it has paid in excess of $35 million to the Selkirk First Nation, and so a direct recent example of economic returns that have positively impacted communities. So enough about the Yukon, and moving on to our panel, because we're going to be talking about the Yukon a lot throughout this. To my left, we have Andrew Kahn, who's Vice President Corporate Development of Cascadia Minerals. Next to Andrew, Darwin Green, who's Executive Chair of Onyx Gold Corp. And last but not least, Rory Quinn, President and CEO of the Yukon Metals. So the three of you in the Yukon, starting with you, Andrew, why do you think the Yukon is one of the most compelling places to explore in 2025?
I think it really speaks to the geologic potential of it. I mean, everyone thinks of Yukon as this big mining jurisdiction. We've all heard of the gold rush. We know about this past and this history. But if you actually sit down and look at it from a modern exploration perspective, there's been surprisingly little focus in Yukon compared to a lot of other parts of Canada. So there's an ability there to make these new discoveries, to make them at surface in ways that I don't think exist in a lot of other places. You see great discoveries being made across Canada, but a lot of them are in districts that are really well known, where people are reinventing an old concept or something like that. But in Yukon, as you mentioned, Snowline, it's a brand new discovery. It's a remarkable one. There's so many of these being made in Yukon that I think just speaks to that untapped potential still present up there.
And sorry, one thing I thought, and I'd be interested in your perspectives on this as well, the recent MOU, very, very recent announcement between BC and the Yukon about connecting the power grid, because one of the challenges when it's talked about the Yukon is lack of power in terms of building out some of the larger projects.
Yeah. Well, I mean, I think first and foremost, it is the geological potential, the endowment there. It is just one of those, the rocks, the crust has got awesome potential to host big deposits, and we're seeing that with the exploration that's happening. I think the other piece is a government that gets it and understands the importance of mining, and I think communities and society as a whole, there's not a huge number of people that live in the Yukon, but I think mining touches each and every one in some way in the Yukon, and that means something in terms of just broader support. So I mean, those are the principal reasons for me why I like it.
I agree with your point on the government. We gave a short course there a number of years ago, and it was really interesting how many government representatives were there, and it shows a commitment to understanding what our business is and the business of mining. And Rory?
Yeah, I mean, I agree with the panel. It's just almost an absurd level of prospectivity in the Yukon. In my past life, I was with Wheaton Precious Metals for 7 years, and it was on site at really numerous developments across the Americas. I've never seen prospectivity like there is in the Yukon. And I mean, for an example, we have an asset called Star River, which is on an all-access road plowed by the government. You can drive somewhat up the mountain near the outcrop, hike for 10 minutes, and you can literally hack metal out of the ground. Right? You can trip over discovery in the Yukon.
Geologists get to be lazy, that's what you're saying. And fighting off bears. And I think with Snowline's discovery, I'd be interested in your observations about has that opened up the potential access to the investing community? Are you getting more incoming calls and interest?
Well, it's certainly been a benefit for us to have the Birdall family name behind it, the success that Snowline have had. I think it's fair to say developing now a world-class deposit. I think that those words get overused in the space. But I think if Valley doesn't qualify, then perhaps it has no meaning. Definitely, I think there's folks that invested in Snowline that have invested in us, and there's people that missed on Snowline that have invested in us. So yeah, we've had a great time of it, and yeah, it's great to have Ron Birdall involved, who really leans in with our group and our technical team, and we'll have a YMA sanctioned site visit soon, and Ron Birdall will be there, and we'll get to host a really good group of folks.
And Darwin, I mean, you have been exposed to various parts of North America, and Onyx was a spin out, and you're in Ontario and the Yukon. And what's your sense of, is there an increased level of interest because of the success that Yukon is having?
100%, like 1,000% really. I mean, I think you get, and it's interesting because Snowline itself is actually the product of 10 years earlier. There was a discovery, it was a Carlin-esque Nevada-style discovery. They didn't ultimately pan out the way we had all hoped, but it actually generated a tremendous amount of interest that you could raise capital for the type of stuff that's really hard to finance. And it's a challenge in our space, right? The grassroots work that finds the new discoveries that creates the most value, it's a bit of a paradox. They're often the hardest things to finance. And that ATAC discovery, even though it didn't fully pan out and still has a chance, it ultimately led to the core position that we have, and it led to what Scott and Ron did, and they persevered for 10 years. And in fact, even with Snowline, they weren't going out for a big bulk tonnage lower grade system. They were actually originally looking for higher grade vein systems, and then found something else. And so, that Snowline, in my view, is a direct Valley discovery, is a direct result of ATAC. It took 10 years, and I think Snowline's doing the same thing for other people right now in terms of being able to finance you. We spun out a company, we were able to raise $8.5 million in a really tough market, really all on the premise that we might have a chance of finding another Snowline.
Yeah, proximity effect. And Andrew, how have you found it?
Well, I mean, I think absolutely, just to echo what's been said here, it's bringing a whole nother level of attention, I think, to Yukon that's been absent for a while. And it's great to hear you citing ATAC, because our company is a spin out of that sale of ATAC to Hecla Mining Company. And, back in the day, ATAC, I think, did have a bit of an international stage presence there, following up on this new Carlin-style gold discovery. But, we went through a bit of the downturn in 2016 through 2020-ish, and a little bit of that interest faded away from the Yukon, I think undeservedly so. But Snowline's really bringing back that international focus in a way that's, I think, been absent from Yukon for a bit.
I mean, from my perspective, the lesson of ATAC, and I was working for a fund at the time, and we were investors in ATAC, was when you have a discovery and you have incredible parabolic share price performance, you need to raise as much money as possible.
We learned that lesson very well, yeah. And we raised a lot, but we could have raised more at the time.
You can always raise more. You raise as much as possible. And that would be my advice to Snowline as well. So obviously there is an elephant in the room. There's been some recent events in the Yukon that have perhaps been less positive for our industry, with Victoria Gold situation. And maybe could you all talk to just how has that impacted both investors' reaction to your companies, and how are you messaging your commitment to social license and being a good environmental citizen?
Yeah, I mean, it's been, a lot of people, I think, expect that it's been a huge challenge. For us, it actually hasn't been that big of a problem. We're exploring for copper gold porphyries primarily, so it is a different metallurgical technology than at Eagle, and we don't have to deal with cyanide, so that's made it easy from our perspective as a company. But I think broadly, there's an understanding in the investor base that incidents sometimes happen with certain projects, and obviously that's not good, and we never want to see that happen any time in our industry. But it's important to understand why that happened, and all collectively work forward to make sure it doesn't happen again. So we're very proactive about always reaching out to communities. As soon as we acquired the project that we're working on now, we built that dialogue. We've had community meetings, kind of all the way through that process of what unfolded with Victoria. And people are asking different questions now. I think about, there's maybe a little bit more understanding of mining technologies and things. They want to know about that earlier. But ultimately, I think that's a good thing, because it's leading to more informed communities who can be part of those conversations and actually have that understanding about what a mine might look like down the road.
And Darwin, do you find when you're talking to whether it's the regulators or community members that there's an understanding of what exploration is in terms of its impact versus a mine, or is there a proactive educating that you have to do in that regard?
I think you're always educating or informing, and I hate using the word educate, but it's ultimately what it is. There's an element of disconnect and of understanding what we're doing. projects are always looked at. You got a project, it's a mine. We've got a long ways to go to be a mine.
We wish that was the case.
In their minds, it's a mine always. And so, yeah, I mean, you're always trying to inform the people in the communities you're in, and I think it's in most companies' DNA now. It's just hardwired into all of us that you're doing the best you can in terms of informing people, engagement, building relationships, real relationships.
Yeah.
Not, and that's the starting point, because it's always, everything's a people business in a way, and I think community relations is a people business too, of getting to connect and communicate with people. And Victoria Gold, it absolutely did put a cloud over things last year. There was all this energy and momentum being driven from Snowline the previous year, and it impacted, I think, people's budgets and ability to raise money. But I think it's passing a bit, and it's really unfortunate, because I think that group actually had very good community relations. There was an engineering problem that failed, and we just can't let those things happen, right?
No, exactly. And Rory, with Yukon Metals, I feel like there's in the periodic table, you have almost every commodity that you have potential for on your project. And we've seen this over the last 5 years with this movement to net zero, and I think maybe a global realization that we need critical minerals, and governments waking up around the world that you actually need to invest in mining. And I think that has helped reframe some of the narratives around the negatives of mining. So how have you found that specifically? Because you're not just looking at gold, you're looking at copper and zinc and a whole bunch of other metals that form part of that critical minerals list.
Yeah, that's funny you mentioned that. So one of our assets is called AZ, and Ron Birdall named it that because he thought it would have every metal from A to Z, starting with antimony. And so, yeah, no, we're blessed with some wonderful assets that the Birdall family put together over 20 to 30 years. Relative to the gentleman's points about Victoria, I think it was really the elephant in the room last summer. Right, and so you'd go into, if you went into your meetings, the sales desk would be abuzz with, is there going to be an issue raising capital for Yukon stories, right? And so there definitely was that concern. I think they kind of viewed Yukon as a monolith, right, and not a vast territory bigger than the state of California, but with 40,000 people relative to 40 million people. Yeah, the territory is very, very different and diverse. We have had, I think, a lot of companies have had a pretty good time of it raising capital, and I think the market has voted with their wallet, right? We've raised $26 million over the last year, $11 million recently, and Fireweed have been able to raise money. I know Onyx have done very well. So it's, I think, I would say by September of last year, when we were at Beaver Creek, another very good conference, at Beaver Creek, I think people were really looking against the Yukon. We had 40 meetings. I would say a third of those were corp dev meetings of folks looking to gain access and exposure to the Yukon.
And I think the Yukon shows a real commitment to the sector, with Yukon Invest and Nicole and Liz being involved in it, and you mentioned the upcoming tour. So it seems like the government is very prepared to put, to some degree, its money where its mouth is, and to support things. So Andrew, your focus is on the Stikine. So can you just walk us through why this is important from a geological perspective for the geologists in the room, and what makes it a compelling opportunity from an investment perspective?
Absolutely. So yeah, Cascadia's focus is on exploring the extension of the Stikine terrain from BC into Yukon. And the Stikine terrain in BC hosts the Golden Triangle. It's got, very prolific porphyry deposits, Red Chris. It's got the KSM deposit that Seabridge is advancing. So, it's been very, very productive in BC. It's been thoroughly explored there. People are still making new discoveries, but that same package of rocks extends right up into Yukon. And people have a tendency to stop looking at the border because there's a line on a map. And we just looked at this and went, well, wait a second. This opportunity exists up here to look for the same style of deposits. And the nice thing about where it is in Yukon is the Alaska Highway just runs right up through the middle of it. So it's actually one of the more accessible parts of Yukon. It's just seen comparatively little exploration. So that's our focus. Our focus is being kind of the first movers in Yukon's Stikine to make these new discoveries in there that we can make close to infrastructure effectively at surface.
And I suppose all the learnings from the Golden Triangle, because there's been such a focus of activity that you can transport and translate.
Well, that's exactly it, right? You've got these great deposit models there. You've got understandings of how to take things from that early stage through geophysics and into the drilling. So we're kind of just following a recipe someone's already done the hard work on.
And moving on to your catch property, so it's in an area that there's very little historical exploration, and we do find in our sector when it's a new discovery, it's often not. It was, tires were kicked over 100 years ago. So number one, what attracted to you it, and what have you found from an exploration perspective so far?
Yeah, and I know what you mean, right? There's so many projects where it's a new take on the project or a new zone on a property. This is a truly new discovery. It was made by a prospector in 2020, and he was following up on regional silt data that the Yukon government has collected. And that's, I think, another positive thing in Yukon is there's this broad base of publicly available data that you can work off. So he was following up on that. He was utilizing the government grants that exist for individual prospectors to go out and do that work, and found significant amounts of copper mineralization effectively at surface. So this was back in the ATAC Resources days, and we optioned that property off of him in 2022, and started doing our own exploration on it, moving it forward. Then we spun out Cascadia in 2023 when ATAC got acquired by Hecla, and did our first drill program on the project that fall. And we've looked into it. There's no documented history of a claim ever having been staked there before, no recorded samples having been collected, and the closest ever diamond drill hole is 75 kilometers away. So we've now drilled into a copper porphyry there. We got 116 meters of 0.3 copper and 0.3 gold in the second ever drill hole into that target, which, if you know about copper porphyry exploration, you don't expect to hit right off the bat.
Congratulations. And so maybe you could just walk through how much cash you have on the balance sheet and the key catalysts that our investors can look to expect this year.
Yeah, so right now we've got about 1.8 million in our balance sheet. We do have an exploration program that's currently underway. We started a couple weeks ago. The drill started turning on Sunday, so it's an exciting time for us right now. We've got multiple porphyry targets on that property that are exciting, but for us it's a bit of a how best to prioritize our resources exercise right now. And at the end of last season, we had crews just following up on some interesting copper mineralization that was about 2 kilometers north of our porphyry target, and one of the samples they took returned over 1,000 grams gold from outcrops. So obviously that's attracted a bunch of our attention. We had a limited time to go in last year and follow up on that, but again, we got 187 grams gold, 140, all from outcrop samples, but it's telling us there's something going on there with an epithermal gold signature, which makes sense in relation to the broader porphyry environment. So that's our focus at the moment this year, as we are drill testing right now underneath that outcrop target, but we hope to a little bit later in the season get back to the porphyries as well.
Yes, hopefully the geological gods are smiling upon you.
I know.
On the subject of, sorry.
No, I was going to say, it doesn't get better, though, from what we've seen at surface.
That's true.
We're optimistic.
On the subject of gods, Darwin, with the proximity of King Tut, with the proximity of King Tut and some of the potential geological similarities to Snowline, how's that framed, how you're looking at it from an exploration perspective, and how you're messaging that to the market?
Yeah, what we have is, we were talking earlier, what we were looking for was a Carlin-style thing back when the claims were first acquired. We went through the Yukon government data set and found regional silt anomalies, so this was another kind of Greenfields type discovery at the time, and what we found was a really big footprint of gold in soils, 2 of them actually, separated by about 10 kilometers on quite a large property, and haloing 2 intrusive centers. And at the time, we said to ourselves, we know exactly what this is. It's an intrusion-related gold system, and the papers on intrusion-related gold systems and the models you looked at the time were generally sort of half-gram to 1 gram, sub-gram systems, and very attractive in their own right, but when you start to get sub-gram, the further you're away from infrastructure, the tougher it can be. So it sat there. We really liked it, hung on to it, and then along came Scott Berdal and the Valley Discover, and they rewrote the book on what intrusion-related gold systems can be. And it may be a one-off, maybe a rare one that is, 2 grams, 1.5 to 2 grams, but maybe there's something special about that area, whether it's the host rocks that these intrusions are coming in through, or something about the intrusions themselves. I don't know. All I know is they made a big discovery, and to your point, I think it is a truly world-class discovery, and we had projects that were basically readied in terms of having big soil grids on them right next door, so it made our job pretty easy in terms of raising money. So it's that intrusion-related opportunity. And when you get these things that are that fertile and you've got sheeted veining, it, sometimes takes a little while. We all think, oh, well, it's a big intrusion. It's all going to be an ore deposit. You still have to hunt around and find the sweet spot within them. But to be able to have that footprint to start gets you pretty excited.
Yeah, and I think maybe to your point is those of us that are geologists, and there's two of us on the stage. You're an engineer, aren't you?
Yeah.
That we can be very, very model driven, and so we like to put things in models and sometimes twist the rocks to fit a preconceived view rather than going from first principles. Maybe you can just talk to the initial exploration results, the scale, what's your exploration strategy in this moving forward? How are you prioritizing your projects in the Yukon versus Ontario?
Yeah, so I guess we hit the ground running. So we did all this work, I think it was 12 years ago when we created the company. And then we came out, had a bunch of money, and we had drills chasing right on us. And so we went out and drilled what we thought were our best targets, but we only really had a couple of weeks on the ground to get ourselves ready. And they were not bad places to stick the drill holes. It's just we didn't have the full breadth of knowledge on the property. And so concurrent with that program, we flew airborne geophysics. We had a mag survey across the whole property. We expanded our soil samples. We did more prospecting, and a much broader picture emerged out of that. One example is, so there's King Tut and there's Golden Mask. That's the separate intrusion, and we had there was a relatively small exposure of intrusive, and so that's what we thought was there. And we had the gold anomaly associated with that, so we put some holes into it, and they all hit, but they weren't 200 meters at 2 grams. They were more anomalous. They were interesting. Then at the end of the season, we got our data back on the airborne survey, and we found that the footprint of that intrusion is about 7 times larger. And what it looks like is one that's just barely becoming unroofed, and some of that you might not get as strong a gold soil anomaly when you've got a little bit of Hornfels cover over it or something like that. So we've learned a lot on that one, and it really needs more drilling. On the other one, our King Tut, we found that there's good sheeted veins. We actually secured a hole in our property that we didn't have. Snowline had it, so we did a deal with Snowline to pick that piece up. And what we found, there's a shoulder to that one intrusion that seems to produce a lot higher grade gold. So this summer we want to get out there and better define that, and if conditions are right, possibly drill it later in the year.
And the balance sheet question, how much?
Oh yeah, so it's interesting. So the Yukon story allowed us to get launched with $8.5 million in a raise 2 years ago. We've had a recent discovery in Timmins, which is a nice balance from a seasonality perspective, and 2 phenomenal jurisdictions, and we now have a discovery there that's allowed us to fill the tills. So we've got about 15 million cash right now.
That's great. In this in the junior world, that's yes, more than $1 million. So, Rory, so. Your portfolio has been built up over, is it 3 decades of prospecting by the Bedell family? You have a plethora of riches in the commodity complex. Maybe you could walk us through how are you focusing down and advancing your highest priority targets, and then what are your plans for exploration for this year?
Yeah, so the Birdalls had a vast portfolio, as you've referenced. They floated the primary gold assets in their family portfolio as Snowline. And what was the remainder was copper, gold, silver, lead, zinc, and critical metals. So there were 17 assets, which is too many, quite frankly. So we did need to bring some focus to what we were doing, and so we prioritized based on really 3 axes: high grade, potential for real scale, and proximity to road and power. And so we'll advance drilling on 3 exceptional properties in the Yukon this season. One is Star River. It's on a road, an all-access road that's plowed by the government year-round. I can fly to Whitehorse in 2 hours from Vancouver, jump in an F-150, and be on site in 5 hours. So the meaning, why that's meaningful for us having road access is we can bring in heavy machinery, rigs, people, we can expedite all by road, doesn't have to be helicopter supported. We feel we'll be able to drill well into winter as well with a winterized camp at Star River. So that's the proximity point. From the rock standpoint, we're finding almost 11,000 grams per ton silver at surface. I mean, you can literally hack galena with fine-grained silver out of the ground outcropping. There's 101 gram per ton, up to 101 gram per ton gold. We see galena and highly oxidized arsenopyrite overlapped in multiple outcroppings on the property. In one specific area, which we'll advance our first drilling program on, we have our highest concentration of silver grade at surface, our highest gold grade, 101 gram per ton gold at surface, our biggest magnetic response from doing the geophysics suite, roughly 400 meters across, this incredibly powerful response, and our biggest gravity response, 800 meters long, overlapping the same area. So I mean, really just a bullseye target for us. We'll drill 4,000 meters into that this season. We believe we'll be able to drill through a silver vein at surface into a gold-bearing manto roughly 50 meters beneath the surface. And for context, there was a mine in the area, a historic gold mine called the Quetzal gold mine, if you're familiar with it, and they were mining a gold-bearing manto, built their own processing facilities, haul roads, and et cetera. So yeah, I mean, that's what we think we'll be able to do at Star River. At AZ, we have 3.5% copper outcropping 6 kilometers away from the Alaska Highway. That outcropping is part of a 1.2 kilometer long Gossan zone that you can see from the air, rust-colored rocks all the way along, and you can really just walk that 1.2 kilometers, and there's just outcropping mineralization all the way along. That Gossan zone itself sits within a 5 kilometer long mineralized trend, at the end of which, at Maryland Creek, and we think this might be the source, the Birdalls delivered 10.3% copper in trenching. So real potential for grade here, 5 kilometers long. We'll hit that with induced polarization, magnetic gravity. Those tools will fly the property. It's almost 12,000 hectares. Takes 15 minutes to cross it in a helicopter. Vast territory. Finally, at Birch, we have an asset there that was formerly a Sean Ryan property at Ryan Gold, and he had a gold in soil anomaly. We followed up on that. We used really high quality mechanized soil drilling there, drilling a meter into the permafrost, so avoiding smearing at surface. And we developed a 1,400 meter long gold in soil anomaly up to 0.99 gram per ton gold. So almost a gram per ton gold in soil. I mean, as you know, gram per ton gold in rock is mineable in some cases. And so up to 0.24% copper in soil. It is mostly overburden there. But what we see, we also saw what limited outcrop, subcrop, and float there was, up to 14 gram per ton gold in rock and rock chips, and multiple samples of 2.4% copper. So we'll advance 3,000 meters of drilling on that this season. We believe we have an intact copper porphyry there, and so we're taking some big swings. I mean, this is.
And you've got the balance sheet to take big swings.
Yeah, fortunately we do, and look, I think we've really benefited from very patient capital, right, and so yeah, we've been able to, as Darwin mentioned, I mean, we've been able to cash up too, and we have over $17 million in the treasury. Our exploration program this season is $7 million, so we can afford to get more aggressive. But these initial holes are going to tell us so much, and these are all like incredibly underexplored areas that really haven't seen any modern exploration. So.
You made a good point about the seasonality, and this is a question to all of you, so anyone jump in, is how do you manage when you're an exploration company, your share price is driven by alpha and generally only reacts to positive drilling news. You will always have to raise money, but you've got a short season or a short window to produce results. So how do you look at that when you're strategizing around raising capital, capital allocation, and news flow? And the second part to that question, does that sometimes mean that you can jump into drilling too early?
Is that for
whoever wants to open it, and others can jump in?
I think it can make you jump into drilling too. But there is a positive to it. I mean, the investors don't maybe like it as much or it's not as obvious, but it does allow you to spend the time to think about your data.
Yeah.
You do all this drilling and you can do real geology work on that data, and I think that's something that's often overlooked because it doesn't sell the tickets as much when you're actually going doing financing, but it's critical to the process. And so
Yeah.
there is a benefit to having some time frame, but yeah, being honest, that can be a challenge. There's certainly projects in the Yukon that you can drill year round. Helicopter supported things are tougher.
Yeah, and more expensive.
Yes.
A lot more expensive.
Well, they can be. And I mean, it's been interesting, right? Because back in the past when I worked on ATAC resource, it was fixed wing and then helicopter. It was very expensive. But, our project right now, it is heli supported, but we're only 10 kilometers off the highway and we're staging out of a government gravel pit. We've got our crews staying in the local hotel that's owned by the First Nation, so we're already giving back to the community as much as we can by utilizing local services, but it keeps the cost surprisingly affordable for a helicopter-supported remote program. So, it's not always the end of the world to be using a helicopter. You just don't want to be completely reliant on it.
And what do you think is the biggest advantage of working in the Yukon, and what's the biggest disadvantage?
I mean, I'd go back to the earlier point about the potential, and I think you hear it from all of us here is we're making these new discoveries. I mean, our project, you can walk across basically a sea of malachite in some areas. There's nowhere else in Canada right now where you can find that degree of copper mineralization at surface. It's all been looked at already. So that's a huge advantage from my perspective. And I think another big positive is some of the things you cited earlier about the work government's doing to really promote the jurisdiction. And one of my pet projects has been this power intertie that I've been talking about for years, and it's so exciting to see that really getting traction. And there's been $40 million of federal money allocated to do the study work there to get to the point where they'll have a construction-ready decision on intertying the Yukon grid to BC. That is an absolute game changer for the industry up there, having a secure access to clean power. So I think that's just going to continue to build catalysts for Yukon. It's going to get more and more on everyone's radar. And all these Yukon companies are undervalued right now. There's going to be massive multiples there as more attention starts turning on the jurisdiction.
Yeah, I mean, there's a large number of projects that really what's only stopping them, it's infrastructure constrained. And I think, Darwin, I'd like to hear your thoughts. We discussed this during the panel about what the Yukon government could do in terms of small modular nuclear reactors.
Yeah, I mean, I do think it's, looking to the future, I think nuclear and small modular nuclear is a real, it has the potential to be a true game changer for the North, places where you don't have the infrastructure, right? And I think it can actually start with communities. I see on the U.S. side, they're looking at it in some of these, Army bases that are in the far north, and I think the Canadian government could look at that, because you need somebody to break the ice in the permitting process that's not mining. But if you do that, then it'll be net benefit for these communities that are reliant on diesel, quite vulnerable. It's very, very expensive power for these communities, and the technology's there. It's incredibly safe, and it's incredibly attractive on a lot of levels. And what's happened concurrent, I think, in the mining space is there's a real advance in technology of electrification of mining equipment. And so you've got kind of the two together, and it makes these what were once orphaned or isolated assets that have incredible endowment that are sitting out there that all of a sudden you can change because you can bring that power to them in a much more economical way and do everything. So it's kind of something I think government should do. I think infrastructure as a whole is a government responsibility. It's one of the places, permitting and infrastructure. And one of my other themes, if you give me just a minute here, is looking at the sort of North Canal Road, where you've got multiple types of commodities all sort of concentrated in one area, and you can take kind of a strategic look of, there's a lot of strategic metals, and there's a real economic concentration in one area. And what happens is you build those roads and you build the infrastructure, more exploration is born out of it. But you've got a tungsten deposit that's very critical. You've got a big silver lead zinc deposit in the SEDEX projects there, and you've got Snowline. And for us, the more of that infrastructure, the lower the threshold it takes to get something new online.
Yeah, and from the Yukon government's perspective is a plethora of resources. If you untap their economic potential with that infrastructure, the economic returns, and just again to highlight, because I think it's very interesting, because we see the dollar figures, the Selkirk Nation, and that's a direct recent example. It's a very, very material amount of money going into a relatively small group, a small population. So Rory, just to touch on your thoughts, what do you think that the Yukon government could do given that you're in the critical minerals complex, which is normally requires a little bit more complicated processing versus a CIL amenable gold deposit?
Yeah, I guess the politics have probably gotten quite a bit more complex over the last 5 to 6 months, but I think a bigger deep water port at Skagway is something that could unlock that potential. But I think there is a lot of senior processors and companies that trade and process zinc, for instance, and tungsten that are looking for offtake, right? And so, I mean, yeah, you see Sumitomo in the area. Glencore have a real interest in that area. They've got a smelter in Quebec that they want to be able to fill. I think for copper, and the likes of Western Copper and Gold, and being able to move copper, I think you need a big port that you can ship out of. But look, I think it's a double-edged sword when you mentioned that there's a seasonality in the Yukon, and I think and that's true. In some cases, you can drill much later into the winter or even through winter, but I think that's also the reason you have this vast mineral endowment that really hasn't been explored thoroughly at all, right? And yeah.
I think you made a very good point, actually, that I think sometimes us that are just looking from afar, that the Yukon also has this tick of international large company approval, and we've got sizable presence, and not necessarily that we always need the majors' tick of approval, but I think the outside community reacts to that, and governments as well, in terms of bringing some pressure to bear at higher levels.
Right.
So I was told, because on the copper panel earlier today, I went over time. Apologise for that. You never want to be that person. So we're coming to a close, and I think we're going to finish early. So I advise all of you in the audience, which again is very, very, very packed, standing room only, to come up and chat to these guys and find out more about the Yukon. And of course, we have Liz somewhere over there, and Nicole as well, that would be more than happy to talk about what's going on in the Yukon and the benefits of being exposed to the Yukon. And please join me in thanking our panelists.
Thanks, Nicole.
Thanks.
Thanks so much, guys. Great panel.
Thanks.
Thank you. Thanks, everyone. Hey, thanks. Alrighty, moving right along. Next up, we've got Matt Savard, CEO at Vior. Excuse me. We're going to have a fireside and just talk about the asset and some of the potential. So, Matt, come on up to stage. Alrighty, thanks for sitting down. Thanks for doing this. Appreciate it.
Thanks.
So a year ago, you were in a different seat.
That's right.
Right?
Yeah.
Got the band back together. Busy year.
Yeah, some part of the band. There's some in the room there, but it's been a crazy year. Out of October, who would have thought that we would be looking for a job early in the year? But we took a few months off, and then we considered options, and it became obvious for us that we wanted to do it again. And Vior seems like the right vehicle to do it again. Fantastic land package in the heart of the Abitibi, and pre-discovery stage. This is where we wanted to be to create. Do you have the most impact on the shareholder return? So we're pretty happy with the decision. It's been a little bit more than 4 months. And I didn't come along, or VPX Pascal, that used to be VPX. Cisco Mining came on board, and we're just getting started.
Fantastic. And you don't like sitting still, so.
Yeah, we get bored after a few months of just thinking what is going to be the next project, so let's do it. And
Fantastic. So can you kind of walk the audience through, just to kind of set the stage and give a bit of perspective, Vior's assets, Belletier, and kind of what attracted you, and if there's any similarities or differences to the old Windfall?
So we really identify Belter as a place where we don't believe that the potential has been tested by any means. When we start looking at it, we realized there was a former high-grade gold producer that was in production in the 30s, from the 30s to the 60s. And then we realized, looking at all the data available, that 90% of all the drilling performed in the entire district did not went below 200, 250 meters. So when you think about Abitibi, we all know that those systems are quite well rooted. Some deposit goes down to 3.5 kilometers. And that gives a lot of space in the three-dimensional to do a discovery. And then after, we look at what has been done, and you know, it's always the same thing. Without consolidation, everyone works their small post stamp without applying a systematic view on it. So the fact that Viewer was able to consolidate
and it's that much more difficult to raise capital on smaller postage stamps as well.
Exactly.
Right?
So we can apply a systematic approach and expose Viewer shareholder to more upside and discovery. So we got really excited about it, and it's in the backyard of Val-d'Or, right? It's only 100 kilometers south, so cost of drilling over there, it's around $160 all in, Canadian. So you can drill almost 2 meters for the cost of one. So it's a great place to be.
So old historic production, 700,000 ounces, around 10 grams per ton, Belcher. You know, depth potential, on-strike potential. Is there a difference to the exploration thesis or the exploration model that you're going to be applying now that you guys are in the seat, or is it going to be just continuing and stepping out and really just allocating capital a bit more efficiently?
I mean, if you look at all the recent success in exploration, it's often teams that are not using blinders. They are applying an approach, but you know, with an open mind, because you cannot replicate an image on a deposit. They're all different in some ways. So, and that's the value that is brought by a systematic approach, because you open yourself to additional stuff that you don't know what you don't know, obviously. So in the case of Belter, we're starting already to find gold in different lithologies, and you know, after the first program, initially Belter was known for vein type deposit. And now we're starting, in the last press release we did 3 weeks ago, we're starting to see gold in iron formation, for example, or gold values in the intrusive rocks, which open up a new sets of targets on the district. And, you know, in fairness, we're not there for the small stuff. We want to, you know, position ourselves as discovering another world-class asset. We're kind of getting addicted to it, and we want to do it again. So.
Addictive stuff. Being in the seat for 3 or 4 months now, do you think the team has a good understanding of mineralization controls? And for any geologists in the room, do you think they have it, or do you think the team has a good understanding of what's controlling mineralization and the vectors that you're looking for in terms of applying capital more efficiently into the summer and into the future?
Well, I think they do, but and we know what we're looking for. But the reality is, it's a work in progress. As we're getting more information and data, again, it's a district that has been overlooked for years, so we're still catching up on the understanding. But what we're starting to realize is, and this is where we're focusing, we pivot for the more fragile environment towards a more ductile environment where, you know, bigger deposits occur. So in the mine trend, for example, we did a pass underneath the former mine with mitigated result. The grade were there, but the thickness were a bit lacking, not to our taste with regards to our objective. So we moving towards the more ductile environment on the west portion of the mine trend. And this summer, you know, pending permits, we're going to drill a structure parallel to the south that exhibits more ductile environment, stronger alteration pattern with high-grade gold evidence at surface. So we're quite excited about that target that we're going to test this summer. As well, we're going to test also towards the east of the package, the contact between the Pontiac and the belt itself. You know, and you know, a reminder, Canadian Arctic sits on the Pontiac, right. So, and that area has never been properly explored either. So we want to expose our shareholder to really grassroots targets, and we believe we can create that value. But we're not going to stop there. You know, as we discussed with our shareholders, we want to add on the portfolio because we believe that we can definitely benefit having, you know, 2 or 3 projects to work on. Personally, I don't like to put all the eggs in the same basket, so we want to make sure, but we're going to be keeping focus. We're going to be really active, probably adding another 50,000 meters in Belter in the second half of the year, and I do believe that by December we should have a pretty good idea if we're on to our objective of 3 to 5 million ounces.
Fantastic. So you kind of think about the valuation of the company right now, trading, close to cash, if you will, right?
Yeah.
Valuation, upside and potential is clearly there. What catalysts do you think the market should be looking for the next 6 to 9 months in terms of either drilling? Obviously, you mentioned the 50,000 meter program. Where are you going to apply that capital specifically, and how is it going to be, released to the market in terms of news flow?
So with respect to creating wealth, of course, we have basically 3 catalysts coming up. The first one is the exploration at Belterre itself on the second half of the year. The second one is the project we call Ligneris. It's east of Amos. It's a discovery that was made in the 90s and never really properly followed up afterwards. This discovery hole was 14 grams over 11 meters into a VMS-style mineralization combined with more structurally controlled gold. So we're going to give it another shot probably in the fall, or probably it's going to overlap in the new year. And on top of it, as I mentioned, as the third catalyst, we're looking to add on into the portfolio, and only if we see a potential to that could get close to our objective. So we're not there for the small stuff. Not that there's no judgment there, but we want to make sure that we attract the big companies, and we create competitive tension, and with the objective of bringing shareholder value and benefiting the discovery curve.
Understood. So when you think about trying to find packages and assets that still provide value, how do you kind of force rank where those projects are, what type of exposure you want to provide shareholders to with respect to potential M&A?
Well, I mean, initially we had a long list of jurisdiction, obviously, and at one point you need to, even though there's probably 4 or 5 in North America that fits our parameters, at the end of the day you look at the capital intensity required to develop an asset like that, and it always goes back to probably Quebec, Ontario, and maybe Newfoundland, because we realize that the permitting process is quite easy over there. So, but it's going to be in Canada. I don't want to necessarily close it down too much to give any insight, but we're looking at district scale stuff, and someplace where we can add value, and with the speed we're renowned for, we want to develop these type of asset fast.
Similar type metal exposure, or would you be looking for anything critical metal associated, or anything different?
Gold.
Understood. Okay, I think I've been told that we're running a bit behind schedule, so I appreciate you taking the time, and thanks everyone for listening.
All right, thanks.
Thank you. Thank you. Thanks, Matt, for the fireside. Next up, I'd like to welcome Kieran Patenkar, President, CEO, and Director of Maple Gold Mines. Kieran. Thank you, sir.
It's cool. Good afternoon, everyone. My name is Kieran Patenkar, President, CEO, and Director of Maple Gold Mines. It's a pleasure to be here in Quebec City. It's a pleasure to be back at the mining investment event, and thank you to the organizers. It's a great event, gets better every year, and we look forward to being back again next year. Let's talk a little bit about Maple Gold. First, we're going to make some forward-looking statements. I'm sure everyone's familiar with these. This is the 3 million ounce gold project in the heart of Quebec's Abitibi Greenstone Gold Belt that you need to know about. We've got 3 million ounces at our Douay Gold project. If you're looking for, an asymmetric value opportunity, especially with the rising gold price environment that we're in, one that reflects value from a risk-reward perspective, I think Maple Gold, you'll see as we go through the presentation, ticks every box. It's got the established ounces. It's got the district scale land package that straddles a first-order gold-bearing structure in the Abitibi. It's got a past-producing mine complex, which was Agnico Eagle's first producing gold mine in the region. It's got infrastructure. It's got a great, capable new leadership team that's delivering. We'll talk about some of the drill results that we returned in early April here shortly. We can't overstate the partnership that we have with Agnico Eagle. They've been incredibly supportive. We have turned this company around completely over the course of the last 18 months. We could not have done that without the strong support of our fantastic Tier 1 partner. Organic growth catalysts for 2025 were fully funded. A lot of work went in last year to restructuring the company, restructuring the joint venture, raising the capital to allow us to do high upside drilling this year. So we have a full pipeline of organic growth coming up in 2025. And of course, the shareholder base, right? We've brought a lot of good institutions, long-term strategic focused shareholders, including our insider group. So again, despite all of that, the Maple Gold's trading currently at $8 an ounce. That obviously, I think I heard a lot of companies here talking about how the junior gold equities have not fully priced in the realities of greater than $3,000 per ounce gold. The fact that we're trading at below the peer group average in Quebec, I think, is what represents really the asymmetric opportunity. So what have we done? We like to talk about results and deliver results. So, you know, it's taken, admittedly, everything on this side of the milestones achieved in 2024. That is 18 months of taking an admittedly bloated and stagnant company and turning it into a dynamic one that is constantly improving and innovating. Certainly the restructuring and the financing, but really it's important that we've taken a fresh look at the data. You know, geology is a process. Our observational skills are what really drive value, and seeing value where others have missed it in the past is clearly one of the goals of what we did with our Rethink program, which I talked to investors and talked to the audience about last year. We're delivering results based on that rethink of the project. At the same time, you know, we've taken a bloated company, we've dropped our cash G&A, we run the company for $150,000 a month corporately. So we've streamlined things, set the company up for success, and made critical enhancements to the leadership team where we needed to. More importantly, what are we focused on for 2025? We have what didn't change, even though we had this restructuring work to do, was the geology, right? And so we're in a fantastic jurisdiction. We've got all the elements of a potential world-class gold system, and we see visibility really to grow this deposit from its current 3 million ounces at Douay to something that approaches 5 million, which is a clear, you know, inflection point for most exploration development companies. But we are also de-risking the ounces that we have with an updated resource estimate planned. It's in progress. It's going to be delivered by year end. We're also doing some scoping study optimization trade-off level work on our deposit. Expect a lot of that news coming over the course of the next 6 to 18 months. Our resource expansion drilling program for 2025, we've just completed 12,000 meters of drilling at Douay. We released the first 5 holes in early April. The stock has traded extremely well on good volume based on the initial results, and there's another 16 holes pending with results coming this month. We'll transition into our Joutel drilling program, the first of its kind, later this in the second half of the year, 3,000 meters fully funded. And then we've got discovery potential across the property that remains as yet unexplored. Just a few words on the partnership and the restructuring we did with Agnico back last year. We did regain 100% control and a clear path of Douay and Joutel. So we didn't put a drill hole in, but we did gain 1.5 million ounces attributable, as well as 100% of Joutel. Agnico retains an interest strategically in this type of an asset. There's a lot of analogs to some of the deposits and the projects that they're currently operating. But they've got a 1% dilution NSR, a back-end right. Importantly, they invested in the equity of the company, increased their ownership at a premium. And if you look at our current market cap of $40 million Canadian, Agnico's total investments between money spent in the ground and money going into the equity of Maple Gold is roughly $25 million. So again, that's over the last 3-4 years. Great endorsement by a major, and they are a strategic partner. They're technically savvy. They spend time with us at the project often, so it's great to have that partnership. We're located in giant elephant country. This project straddles the Casa Berardi, which is one of 3 principal gold-bearing structures in the Abitibi. It ticks every box in terms of the recipe and the elements of what would make for a world-class gold system. This is the reason why a major like Agnico has taken a real interest and put good money behind really realizing that full potential. As I mentioned, we have excellent infrastructure. I think in this gold cycle that we've entered into, not only companies with established ounces, but ones that have infrastructure. In our case, you know, we're in gold country. We've got mines to the west of us, mines to the east of us. We've got a highway that runs right through our property. We've got grid power that's, Hydro-Quebec, relatively inexpensive power. And we control a massive, land package that's almost 500 square kilometers in a key region. So again, infrastructure advantages is another box to tick to say, why is this trading at such a discount to its peer group? This is the progress the team has made. I'm very proud of, as I said, geology is a process, and the results from, previous drilling and previous, under previous leadership at Maple had fallen behind. The stock price had lagged, and the value wasn't being created through the drill bit. So, we took 18 months, really the last 2024, and rethought the data, streamlined the operations. I was asked to step in as the general manager of the Agnico Maple joint venture. We did all of this. We relogged 25,000 meters of drill core and came up with a better targeting and exploration model to understand what's happening at Douay and Joutel. We budgeted $6.3 million for this year. We've, as I've said, completed 12,000 meters, so lots of catalysts coming from Douay. It's really focused on expanding the existing resource at Douay, upgrading the resource, and focusing on the high grade in the shallow, upwards of 500-meter portion of the Douay deposit. We upsized it. Our team, including Ian Cunningham-Dunlop, our VP Technical Services, did a great job with the program, did it efficiently, so we were able to increase the size of the program from 10 to 12,000 meters based on drilling costs coming in under budget. That's a new one for Maple. And our planned activities for the second half of the year, as I said, are resource updates, scoping studies, and additional drilling at Joutel. The property is a large district-scale land package. It straddles an important strategic splay in the Abitibi, with the Casa Berardi breaking into a north zone and a south zone. Both zones go through the Douay and the Joutel projects respectively, and there's a lot of upside potential across the property. If we had unlimited budget, obviously we'd be drilling like crazy, but 12 to 15,000 meters this year is just about right. The team has come up with a proper model for why. I think that was a hard thing for Maple to explain in the past, is what is actually driving the mineralization at Douay. There's too much to go through here, but I think you can see there's a proper structural interpretation. We're verifying that with all the oriented core that we're drilling this year, and again, the results speak for themselves, which we'll talk about here in a second. It's important to note, and I talked about this last year when I was here, that there has to be a model, right? This is about as simple as we can get. I'm a geologist and an engineer as well. I'm not an explorationist, but this is about as simple as it can get for how did we decide the drill targets that we drilled in this early program after not drilling for 2 years. They sit right in the middle of that bullseye. Also, they've got enough room and size to really grow the deposit, and they've got a additional filter of what moves the needle from an economic and a return on investment standpoint. The greatest hits, it's a 6-kilometer by 2-kilometer system at Douay. We did return the 5th best intercept ever drilled on the property with our first 5 holes. The share price certainly reflected that, the volumes, et cetera. But there is a high-grade tenor here that we're focused on. When you look at hole 338, it was a thick, continuously mineralized high-grade intercept in a 300-meter down plunge step out from what was the previously best hole drilled in that zone. These are the holes that we've drilled thus far, and the ones in yellow have already been released. We've got a lot more coming. I'll show you a few sections. I think this is the real compelling part about Douay, is that it's been drilled off in the top 500 meters, but there's still 100 to 200 meter gaps in the resource. The purple represents high grade. You see an outline of a target model of Odyssey, Goldie, Agnico's Malartic project. This has the footprint of Malartic and Detour. It has a fraction of the drilling, right? So we've gone in, instead of going for these deep moonshots that the company had taken before, we've really tried to vector on what's controlling high-grade mineralization and had very good success with our first few holes. This is the one in particular that got the market talking. It was really the meat of that intercept. The broader intercept was 1.5 grams over 170 meters, but the meat was 109 meters of 2 grams with 3 grams over 56 and 5 grams over 17. So very good intercept, still open, lots of follow-up testing since. We've drilled some wedge holes trying to determine the orientation and plunge of this zone. Again, stay tuned. We've really focused on the alteration corridor at Nika to try to drive this zone to really adding some significant ounces at that zone. We've taken a proper geologic approach. We look at the structure. We look at, this is core from that area. We see these intersections of these fracture-filled pyrite-rich gold-bearing zones with the sericitic quartz, calcite, plus or minus chlorite. And there's an orientation there. That plunge mirrors the zone that we've just defined, potential bulk tonnage underground at Nika. It's also guiding some of the additional exploration we've done elsewhere on the property. We did have good success at Porphyry East. There's some high grade. If this had only been the only results we released, I think it would have been successful, but obviously the 338 was a real standout. The resource itself is a snapshot. We're looking at optimizing this resource now, but as I said, there's 500,000 ounces in indicated, 2.5 million ounces in inferred. We do have some underground inferred, but I think there's going to be some more optimization coming out of that over the next 6 months, so stay tuned. We do think as well, by the way, back to the resources, that we have the opportunity to potentially include a first-time resource at Joutel. In terms of development, we're looking at optimizing higher grade. We've got a head frame here. We've got early metallurgy on the project that shows very good recoveries with comminution, whole sample leach, and cyanidation, mid-80s to high 90s. Just a few words on Joutel before I run out of time. This was Agnico's first producing gold mine. It's actually how they got their name, Agnico Eagle, for those that, if that ever comes up in a trivia night. What's really interesting about the deposit is it mined 1.1 million ounces at 6.5 grams from 1974 to 1993. When we got that data, we have a treasure trove. I mean, Maple Gold has a lot of gold in the ground, but a lot of the gold that we have is in the data. We got a lot of information that was sitting in bankers' boxes in Val-d'Or back from Agnico. They digitized and QA/QC'd this model when we were a joint venture back in 2021 at a cost of $600,000. You can see there is some very high-grade material here. A lot of the gray is what was mined out, and there are still lots of areas with upside that are 3, 4, 5, 6 grams, right? It makes sense that that wouldn't have been touched when it was $300 gold, but now that we're tenfold increase in the gold price, there's a lot of potential here. Few words here just to see what the site looks like. It's set up like a mining site, so obviously there was intent to go into production here at some point. I think that's the focus that we have going forward. It's not a science project. We want to ultimately mine here. In terms of the people, the entire management team has been turned over the course of the last 18 months. They're doing a fantastic job. We have a great board that has a tremendous amount of major mining company capital markets experience. Just lastly, on our capital structure, there's 456 million out. We're trading at or near our 52-week high. Gives us a market cap of just under $40 million, but we're trading, importantly, significant volumes. The volumes, it's been validated, in terms of a breakup by real accumulation, and the volumes have increased from 150,000 a day on the venture to over 600. Good analyst coverage, strong support of shareholder base, including Agnico, Fidelity, the Caisse de Depot, and Placement en Quebec, and a number of other institutions. So just in closing, I think this is a very compelling opportunity. I'm very proud of the cultural shift that we've instilled, driving process and team-oriented, results-driven culture. We've got the control of a big district with established ounces, with a high-grade past-producing mine complex, lots of upside potential, the right location, the great Tier 1 partner. You couldn't ask for a better one, and we're fully funded to deliver a lot of growth in 2025. And as we say at Maple, we don't just talk about it, we just do it. So thank you very much for your attention. I appreciate it.
Okay, moving right along. Next up, we've got Amandeep Singh, VP Corp Dev at Apollo Silver Corp. I'm going to welcome him to the stage, and we're going to have a little chat on the assets and Apollo.
Right on.
Thank you, sir.
Thanks, buddy. Yeah, where do we sit?
Just these middle two. Okay, let's get right into it. I'm curious to ask you, and just to kind of spread a bit of perspective for the audience. Can you walk us through the two assets in Mexico and in California, and kind of give kind of a quick look in terms of what they are, where they are, and upside?
Yeah, certainly. So I think that's a great place to start. We are a silver exploration development story. We've got our flagship asset. It's the Calico project out in California, San Bernardino County. There's always a tale of multiple Californias, and people are a bit weary of investing there, but we're in San Bernardino County. We're located between Rio Tinto's Borax mine, and on the other side of us we have Castle Mountain, Equinox's Castle Mountain. There's about 161 million ounces of silver in the ground there. It is the United States' largest undeveloped primary silver asset. Moving forward, we also just recently signed an option to acquire the Cinco de Mayo asset from MAG Silver. This is an asset that most people are very familiar with. At one point in time, it was MAG Silver's flagship asset until access was lost there for a number of reasons in the community, and we certainly look to turn that around and unlock that value. And I also think if you look at in our history of being a company, I think the acquisition of those assets kind of speaks to our skill set as a team. We're well versed in M&A, and those are two transactions that we've done with two of the premier silver companies out there.
Right, right. So we'll kind of get into Cinco de Mayo, the kind of Mexican renaissance I think we're kind of seeing.
Absolutely.
With the likes of, not necessarily just Discovery, but, some of the, obviously the MAG transaction, Luca, Heliostar. There's been the gold price has effectively acted as a bit of a fuse for some of the more junior explorers and kind of, smaller producers in terms of multiple expansion. But can you kind of give the audience perspective on the team and some of the recent additions that have kind of come on the board and advisory roles?
Yeah, absolutely. So we've been very fortunate to attract the likes of Ross McElroy to take on our CEO position. Ross McElroy, obviously a fission uranium fame, just sold a company for $1 billion at the end of last year. So we are more than excited to have him. If you kind of look at our recent share price performance, I think he's got quite a following and has brought in some key investors with him. Jackie Przybylowski was added to our board, and a lot of people know her as a very, very recognized award-winning mining analyst. So certainly, we have a lot of bench strength on our board that can help us further our ambitions.
Great, great. So Cinco de Mayo, just kind of want to get into the weeds on this one. And, you kind of think about what makes success stories within the exploration and development framework. And it's rocks and people, right? You got to have the right rocks, you got to have the right asset, but you got to have the right people to unlock it. So obviously you kind of started off and you mentioned that there's been, a couple issues with the asset with respect to, working within communities and whatnot. So what do you think the team, and what are the strengths of the team to kind of unlock the value of Cinco de Mayo differently?
Yeah, absolutely. So I think we've got a great technical team to begin with. So, once we are down on the ground, I think there's a lot of opportunities, a lot of targets we have to follow up on, and I think we're well equipped to do so. But we don't really have technical risk there. We've got some social situations that we've got to resolve, and I think we are a team. And if you look at our overall group, Andy Bowering's group, we have done this before, and that gives us the confidence that we can do this again. Prime Mining being a directly analogous story. The Los Reyes asset was held by Minera Alamos. It was a similar situation where the community was opposed to any operations happening there, and by and large, people thought that this was a situation that could never be resolved. We managed to purchase that asset for $9 million, and we walked away with 30-year mining agreements with the community. And this is based on a tacit approach to community engagement, investing in the community. And if you look at Prime Mining now, that's it's become one of the sort of class-leading blue chip exploration stories with phenomenal shareholder base, and it's 300 million market cap in a very short period of time.
Yeah, and so I'm kind of happy you brought that up because this year we've seen the developers and the explorers work in the market, right? I think that's no one's doubting that. But given where we are now and kind of taking a forward-looking view, how do you think investors should look for value within the explorers, and do you think there's still multiple expansion to be had within the silver tape, within
Sure.
smaller assets?
Absolutely. Well, I think there's a few things that you have to look at. You have to mitigate your risk. So you got to look at, is it a team that's got a track record of doing this? Obviously, our silver is no better than anyone else's silver. We don't necessarily compete for the end client. We compete for capital. So the ability to raise capital, I think, is something that is a team you should go with. We have had we've had tremendous success raising money. On top of that, liquidity. You should look for our stock trades quite well. We do about 1.5 million shares a day, which I think is, in excess of our peers. And again, look for who are you co-investing with. I think at Apollo Silver, when you look at our shareholder registry, you look at our major shareholders, you have the ability to co-invest with some of the best resource investors out there. Jupiter Asset Management is our largest shareholder. Sorry, our chairman is our largest shareholder, Andy Bowering, followed by Jupiter Asset Management, Commodity Capital, Terra Funds out of Australia, PrimeVest, and that's just to name a few. And certainly we are attracting more and more of that institutional following.
Great, great. So kind of back to Cinco de Mayo. I realize we're kind of jumping around the place here, but I'm a big fan of carbonate replacement type deposits because I think there's kind of, you know, a quote unquote Lassonde curve loophole in terms of building value, right? You can de-risk the project from a technical perspective, from a financial perspective, but you can also continue to build value through exploration, right? So you can kind of go back and continue to build value as you're, you know, getting multiple expansion with respect to those cash flows towards commercial production. Can you kind of walk us through the strategy for value creation with respect to Cinco de Mayo? And is there any kind of technical meat on the bone left in terms of any exploration upside that's worth highlighting or speaking to?
Absolutely. So for starters, from just a strict value standpoint corporately, we look at the Cinco de Mayo asset, again, a well-known asset. When Mag Silver lost access to that asset, they lost nearly $400 million in market cap in 2012. It is not a stretch to think regaining access, getting on the ground should restore, you know, most, if not all of that 400 million. But to address your concern about the what is there outside of that? Well, it's a 23,000 hectare land package, and it's large enough to have a fully intact CRD system, where, you know, there are skarn targets there. There's distal epithermal targets yet to be drilled off, and you know, one of the biggest value drivers for any exploration company is discovery. And you know, you'd be hard-pressed to find a company that can guarantee you a discovery. And we like to joke around the office that we will guarantee the market a discovery. And that comes from the fact that if you look at the story or the work that Mag Silver did, just prior to losing access, they drilled this area called the Pegaso Zone. The Pegaso Zone was 61 meters of massive sulfides at tremendous grades. Unfortunately, some of the turmoil in the community made, you know, more prominent headlines than drill hole results. So by and large, the investment community has forgotten about this Pegaso Zone. We look to go in there, and our first sort of targets are to drill this off, bring that new discovery into the broader attention of the markets there. And I think it's a spectacular opportunity. It is outside the existing historic resource that is on Cinco de Mayo.
Gotcha. Guaranteed discovery. I'm going to hold you that.
Absolutely. No, and you guys heard it here. You heard it here first. That we will certainly bring that into the limelight.
So just on that, can you walk the rest of the audience through what to expect in terms of drilling catalysts, in terms of other market-facing catalysts, and how you're going to manage news flow over the next 6 to 9 months?
Yeah, certainly. So I think, you know, we're taking a two-pronged approach to this. I mean, our California asset is certainly something that, you know, commands attention and has a lot of value. So we're doing certain things there. We're doing a barite resource. Barite was just put on the critical metals list. By bringing the barite resource current, we think that we're going to get some permitting relief or maybe some sort of fast tracking with the new policies in the United States. That's happening. We should have an updated resource towards the end of the summer. Outside of that, we're going to start a PEA at Calico at the end of the year. Hopefully the results of that will be out in the first half of the year. But from a Cinco de Mayo standpoint, what we're looking at is, you know, we will have the restrictions on mining overturned. I think that will be a big news item. You know, negotiating a surface rights agreement, I think that'll be, you know, give the market comfort that this isn't just a one-off, that we're allowed to go do some drilling or what have you. And then certainly go in there and execute on the 20,000 meters of drilling that will satisfy the option to acquire the asset.
Fantastic. Okay. Alrighty.
Yeah,
thank you, sir, for doing this.
Well, yeah, guys, thank you so much for having us.
Thank you, Amandeep. Okay, thanks guys. Next up, I'd like to welcome Mr. Michael Rowley, CEO at Stillwater Critical Minerals, advancing the Stillwater project, or the project next to Stillwater in Montana. Mouthful. Sorry about that.
That's all
Thank
right.
you.
I'll take it. We good? Can we hear me? Thank you. Very glad to be back in the Belle Province de Quebec, and thank you, Joanne.
We are indeed Stillwater Critical Minerals. We are focused in the Stillwater complex. We are beside the Sibanye Stillwater mines that are the namesake of the district. It is a forward-looking statement to say that we're the future of critical mineral supply in the U.S., and I will be making other forward-looking statements as well. However, there's a good basis for that. We have a total of 5 property interests. Really, it's Montana that's driving things, and that is why Glencore invested. That's why we've been able to attract talent from Ivanhoe as our senior geologists, and that's basically everything we're going to talk about here. We do have interests in 4 other projects. 2 of those are critical minerals projects, as shown here, Duke Island, Alaska, and Kluane, Yukon. We have a back-in right on a past-producing mine in BC, and then we have the Ontario Gold Project, where Heritage Mining is currently doing really good work. They had some nice-looking core on LinkedIn a couple of days ago. Looking forward to the assays on that. They've earned 51% of that project now, and that gives us good exposure to the gold space, letting us focus in Montana. Why Stillwater? In the Stillwater complex, the Stillwater West project, we have scale. 33 kilometers, we have half of the Stillwater complex. We have grade within that, as you'll see. We have the geology of the Stillwater complex. Location, this is a historic, productive American district that's been producing critical minerals for longer than they've been critical. Timing of the project, we have over 40,000 meters drilled to date, and we're advancing this as a primary source of critical minerals in the U.S. as fast as we can, with producers beside us. We have a terrific team, as you'll see, and the history of the district speaks for itself. This is very much about critical mineral supply in the U.S. We are the largest nickel platinum group metal project in an active U.S. mining district. We have 10 minerals that are listed as critical in the U.S. at present. And there's a picture of the drill and the lovely Montana scenery. The board and senior officers of the company speak for themselves. I'll let you do a deeper dive. This is available on the website. I will call out a couple of names on here. Bradley Adamson, from Glencore on the right-hand side there. Vice President Business Development for Glencore. It's unusual for them to take a board position on a 60 million market cap junior, and that shows their interest in the project. Also point out Nora Pincus. She's been a very good addition, lawyer, mine financier out of Montana. And then Danny Grobler, Albie Brits joined us from Ivanhoe. Danny Grobler was the chief geologist from the Platte Reef Project, South Africa. Very meaningful to have him as our Vice President of Exploration to guide us in our expansion in similar rocks in the Stillwater Igneous Complex. We are in very well with the U.S. government. We've been partnered with the USGS for many years now. We're on a technical committee with Glencore. We've got $2.75 million US in government grants in place from the DOE. One of them with Grishma Gatikota pictured here, and also with Berkeley Lab pertaining to the Montana project. They don't give us a lot of money, but they show that we're in the right place in government. Speaking of government, it means a great deal when you can fly your actual congressman around the site in a helicopter, and that's exactly what happened in October. The picture above that is me with the entire federal delegation from Montana. These guys are all pro-resource. It is a marvelous place to operate. You've got Ryan Zinke on the right, Steve Daines, me, Troy Downing, and then Tim Sheehy, the newest senator. Can't say enough about what it means to have a direct line to them and be able to educate them directly on critical mineral supply chains, geology, mine building, and to have their support. Montana, more broadly, has a long history of mineral production, oil and gas and coal on the east of the state, very much like Alberta to the north. And in the west, you get a lot of copper production, and in the south, it's the PGM metals and chrome, actually, historically. We share the Stillwater Igneous Complex in the south of the state with Sibanye. However, we brought Glencore in as a 15.4% shareholder, which brings an interesting go forward, if you'd like. More broadly in the state, we touched on long history of mine production. Most recently, in that box at bottom left, there's been really good activity on prioritizing mine projects here, including a $1.6 billion loan guarantee for a oil refinery project in Great Falls, 2 projects on the Fast 41 mine permit program, one of them being our neighbor's mine, and the Black Butte copper project getting permitted to go into production. If you look more closely at our site, lovely shot by a drone here, the Stillwater Mill in the foreground, and a historic chrome mine on the hill on the left-hand side, subsidized by the US government in the 1940s and 50s. Really good place for this, and the district is known for critical minerals. That picture was taken right on that spot there. Stillwater Mine 1986 is labeled here, looking north. This is the Stillwater Igneous Complex, 48 kilometers on surface by 8 kilometers. We share it with a $5 billion producing major. It's a very rare position for a junior to be in. It reflects quick work by a young mind in 2017 who spotted an opportunity and staked some ground, and we quickly built on that and worked with him. The JM Reef is what my neighbor is mining. It's a skinny 1.8 meter wide reef horizon. It spans the page there as that purple line, and they're running 3 mines on that one deposit. If you take a slice, and it's the highest grade of its type in the world, is worth mentioning. It's about a ½ ounce per ton, palladium platinum grade. Negligible amounts of copper nickel, perhaps 0.04%. But it's worth noting that they run 2 sulfide flotation mills that could potentially be relevant to us. If you take a slice through the rocks just there by the red line, you can see the location of that East Boulder Mill in the river valley, a 3-mile adit down into the mountains through the Stillwater Complex, the green rocks there, and then arriving at the JM Reef, which is that 1.8 meter wide reef deposit that they've been mining. Largest palladium platinum deposit, sorry, not the largest, largest in the Western Hemisphere, 100 million ounces, highest grade in the world. Below that, where we are, under our claim block, you have the Platte Reef setting. And what's very compelling about this is that the JM Reef deposit was discovered by direct application of the Bushveld models. It's in the exact same location in the stratigraphy as the Marinsky is in South Africa. So they simply applied Bushveld models to Montana to find the JM Reef. We're doing the exact same things in those bigger magmatic events below that in the stratigraphy. A further difference with the Bushveld here is that this has been tipped up by the Laramide event and Wyoming to the south of us. It's all at a very mining-friendly 60-degree angle, as you can see here. So if you look more closely, what does it mean to be Platte Reef and these bigger magmatic events? We are only about ½ a kilometer from a producing mine underground, which is very significant. Ivanhoe's Platte Reef deposit, and from where we stole our current VPX, 8 billion pounds nickel and copper, 95 million ounces of platinum group elements and gold. Just entering production now. They just reached, in a production capacity, the ore body. Mohalaquena right beside it, in the same stratigraphy as us on relative terms, producing since 1993, 152 million ounces of platinum group elements and gold, 15 billion pounds nickel and copper. It's hard to comprehend the staggering size of these magmatic systems. This is what we're applying it to Montana. Key point about these mines is that they're large, they're polymetallic, and they are profitable in almost any metal price environment. Ivanhoe is projecting about $700 per ounce 2E, so profitable even at these prices. Anglo is running a little more than that, but still profitable at these prices. And that's a key point we have against our neighbor, Sibanye. This is the kind of modeling you get when you bring Ivanhoe capacity and skill set to the Stillwater Complex. The lower Stillwater Complex had never been modeled in this kind of detail. You've got the surface projection of our neighbor's deposit there as a skinny red line, and then you see the layers below that. The lovely lavender color is the peridotite zone, and that is the focus of our work. For the first time ever, we've been able to map the mineralization, the high grade, east to west. The continuity is there. That's not surprising. Our neighbor's deposit is continuous across all that. And we've got soils above that that speak to a very well mineralized district. And in fact, if you look closely, the soils are conforming nicely to the geophysics. There's lots of room to grow this. There's an even better image. I won't spend too long on it, but you see that layered still water complex sitting at 60 degrees. You see the quality of our modeling. And most importantly, in this image, you see those bright orange conductive anomalies from last year's MMT survey, mobile magnetotellurics. This is us targeting grade within the Stillwater complex. As was famously said by Bob Moriarty, drunk monkeys could drill this project. Everything is mineralized. What we're doing now is better targeting grade. We can find that high grade and that mid-grade component. And this is what we will be drilling this summer, is these large conductive targets. We're looking to expand these resources, and this table also does a good job of describing the 3 grade categories. We have high grade at a nice 0.7% nickel equivalent cutoff. We have, that's within the mid-grade, which frankly is Glencore's focus. We have 120 million tons at a 0.51% nickel equivalent cutoff. That's recovered nickel equivalent. And within that, around all that, is that broader bulk tonnage, 1.64 billion pounds, nickel, copper, cobalt, 3.8 million ounces, PGEs and gold. So how do you break out the component metals there? We are nickel dominant. This is done at a $9 nickel price, so this is probably more like a 44, 45% nickel at current prices. Over 1 billion pounds of nickel. 500 million pounds of copper, that's half a kilometer from a producing mine in the US. This is very attractive. Cobalt, 91 million pounds, and then the PGMs. To have over 1 million ounces of platinum in a district that's known for platinum production, very significant. Palladium, rhodium, gold. Not included in the economics is chromium, and we have a significant amount of chromium, 2.3 billion pounds. We have this as high-grade narrow structures, and we have this as disseminated as well. This is, of course, one of the critical minerals that the district has been looked for historically. What's next? We've drilled 4 campaigns. We're looking forward to drilling our 5th this year. We're ramping up for that now. We will do metallurgy, and we will deliver production level studies on this in the coming year and the years after that. This looks very much like it wants to go into production. We've got Sibanye next door. We've got Glencore interested. There's a way these pieces want to come together. You will also see updates on our non-core assets. We've been busy. This is a new slide, and it's an important one, maybe not so much for this crowd, but for people that are less savvy on mining stocks. Where does the growth potential happen in these mining stocks? This is basically a modified Lassonde curve. We've taken away the left-hand side, and we're assuming now that we have a resource and we're underway with Glencore on board. From here, growth comes from growing the resources through the drill bit, and that's shown here as a 2 to 5 times potential. But you also grow by de-risking those ounces. And it might be a little hard to read there. You're welcome to read this on the website. But as you move from resource valuation to a feasibility stage valuation, you actually gain tenfold. If you look at gold projects as a precedent, you get typically $20 per ounce gold equivalent, and that moves to $200 per ounce gold equivalent. There's a lot of value to be had in advancing and de-risking a project. And that's what we aim to do next, grow the resource and de-risk the asset. Bigger picture, in the gray box, you've also got potential from the broader commodity markets as well, and the general groundswell of improving commodity prices. Share price, we're up nicely. We're following markets. The venture index is finally up nicely. We're finally having the kind of action that we thought would happen years ago. Speaking as someone who's been running a company all that time, it's nice to see everything up. We're up, and we have a good position by Glencore, 15.4%. Myself, management along with me, we total about 20%. And I'm here at the show, and I'm grateful to take questions anytime. Come by and see us. I'm in 102, and Jenny and Joanne have my card. Cheers.
Thanks for that, Michael. Next up, I'd like to welcome to the stage Mr. Jeff Swinoga, President and CEO at Exploits. Jeff, stage is yours.
Well, great. Well, thanks very much for attending my presentation here. Honestly, a great turnout here. It's fantastic to be here in Quebec City again. Joanne, who runs the conference, well, with many help, she's a good friend. And again, great to see this conference getting bigger and better every single year. So I'm the CEO of Exploits Discovery. We actually have gone through a bit of a transition. Things are going extremely well for us, and I want to walk you through this story. This is super fresh. We just announced a couple properties that we've optioned in Quebec just 2 days ago. So for 4 years, we've been exploring in Newfoundland along this Appleton Fault with Newfound Gold. They came out with a resource of about 2 million ounces. And literally within about the last month, we've announced a option agreement for the Hawkins property in Ontario, which has over 300,000 ounces. And it's a historic resource, but we want to target to grow that to 1 million ounces. It's around a lot of major companies. I'll kind of walk you through that. And literally, as I mentioned a couple days ago, we also optioned another 3 properties actually in Quebec, Wilson, Fenton, and Benoit from Cartier Resources. A great company, but that company's been focused on their flagship property and less so focused on these other exploration properties. So combined, they have about 300,000 ounces as well. So we're super pleased. So right now we've got an option agreement for about almost 700,000 ounces of gold in Ontario, Quebec, and Newfoundland. World-class jurisdictions, and we're very, very pleased. Eric Sprott owns about 14% of us. Right now our market cap is about only 8 or 9 million. We've got about $4 million in cash and a very experienced team, and we're looking to, I'll roll out some of the plans that we have for you. But just from a value proposition perspective, again, I mentioned a lot of these points already, but our shareholders are going to benefit from this exposure. Here we have a situation where gold has moved over 3,000, hopefully moving to 4,000, and we've now got option agreements for these gold ounces in the ground. So we're super pleased. And if you look at from a enterprise value situation, so $8 or $9 million in market cap, $4 million in cash, equates to only about $6 per ounce. So from a valuation perspective, looking at some of our peer group, that number is typically around $40 to $50. So we have a real opportunity to re-rate this company into a higher market capitalization. So our capital structure, as I mentioned, cash of 4, 185 million shares outstanding, no warrants. We've raised money in the past. We haven't had to issue warrants, so that's very good. Some options, and shares are very liquid. We trade on the CSE and the OTC, about 500,000 shares per day, and actually the last couple of days our volumes have been quite high due to the announcements we've had. Again, Eric's a great supporter at 14%, and we have a lot of high net worth individuals and retail. The leadership team, my background, I've been in mining for about 27 years. I am getting older. I've been working for large companies like Barrick, Hudbay Minerals, Torex Gold, and so forth. Ken Tiley, a fantastic VPX that joined me a couple years ago. He's used to running big teams, big budgets. He worked at McEwen before he joined us, and also worked at Goldcorp and other companies. Shanna does our corporate development and IR. She worked at Abitibi Royalties before, and she's doing a fantastic job. And Fiona's a great CFO. Our board, Doug Caters, our chair. He was the former VPX, Vice President of Exploration for Kirkland Lake, and he's looked at hundreds of different properties. And with the board's help, Siri does ESG, and Rod is a great economic geologist, and Larry's a wealth advisor. With the board and the management team, we've looked at probably over 100 different projects before we decided on looking at getting into these option agreements in Quebec and Ontario. So we've done a lot of work, a lot of due diligence, and we'll be rolling out plans how we're going to hopefully grow each of those resources. So let's start off with the Hawkins property. This geology is very similar to Hemlo. You can see Hemlo there, big, great historic mine in Ontario, produced over 20 million ounces of gold. Hawkins is very large. It's about 60 kilometers long. The resource that I mentioned of over 300,000 ounces, that's within only 1.5 kilometers. I like to think of that red part as a sirloin steak. So it's near Timmins. It's a great jurisdiction, as I mentioned. It's been drilled in the past. The company that had this before spent probably about $10 million in exploration. So a lot of geophysical surveys. Also, this option deal came with $2.4 million of assessment credits. So all this property that we have, we don't really have to worry about doing some work on the fringes. We can actually focus on building ounces. Here's what it looks like underground. You can see, I forgot to mention that these ounces are near surface, so within about 200 meters. So that gray part that you're seeing, that's the resource, the inferred resource that I mentioned before. And what we've seen is our team has actually looked at where the opportunities are at depth. And you see the yellow shaded portions there. So there's lots of grade here. It's disseminated, which means that you see hits and then you have shoulder grade on the side of it. And what we're going to go after is the higher grade portions. We sat down with the resource estimators and actually walked through the model with them, found out where the trends could be. We haven't announced our drilling plans yet as to where exactly we're going to be drilling, but you can see there's lots of opportunity at depth to actually kind of build on that resource. A little history lesson on Hemlo. Hemlo sort of looked like Hawkins back in, say, 1980, 1981. It's only when they started drilling deeper that they found the higher grade, and that's what kind of made it sort of one of Canada's best historic gold mines. Also, another opportunity here is on the east side. They did some trenching in the past, hit some nice grades on surface, but they never drilled below. And the interesting part there is you see, so for some of the geophysical surveys, you can see there's the pink, sort of the ruby high mag, and then you get the low mag in blue. I wish I could zoom it up for you, but if you can see the trend line, so you have the resource on the left-hand side, and you see the trend that's on the right or the eastern side. That low mag area is where the contact points looks very interesting, and a couple short holes there. If we can actually get some more ounces to build out that resource, that would be fantastic. So the goal here is to add ounces either at depth, along strike, and actually look at this like a cookie cutter model. So again, this is only 1.5 kilometers of a 60-kilometer trend line. So if we can actually start applying this across and be successful, this could be fantastic for us and our shareholders. Looking at the Quebec properties, I'll go through each one of them just very briefly. So Fenton, Benoit, and Wilson, great jurisdiction, of course. I mean, great to talk about Quebec properties in Quebec City. These properties are about 2 hours north of Val-d'Or. There are some mills close by. The Windfall is also close by, a great project. The closest mill to these, we believe, is Bachelor Lake, which is about an hour away. So looking at Benoit, Benoit's got about 240,000 ounces historically. Really good grade and really good widths. It really hangs together well from a continuity perspective. You see the widths are like 4 or 5 meters, grades like 25, 30, 12. And we see a lot of opportunity at depth, and we see some opportunity along strike as well. I'm really focusing on the bottom right-hand portion of the cross-section, if that's what I'm referring to. And Wilson. Wilson, again, I'll refer to the bottom right. You can see it's almost like these golden pipes, if you will. So good grades, fairly good widths, and multiple opportunities along that trend line on that strike. Fenton, similar. Same thing, look at the bottom right, you can see almost like these golden pipes or chutes that are going down. Very nice grades, very nice widths. And these both, I should mention, both Wilson and Fenton, they have historic resource that's non-compliant because it hasn't brought up to today's standards. But it just shows how prospective these other two properties are. One thing I should mention too with this option agreement, we built in a lot of flexibility. So for example, if we find out that Wilson is getting really a lot of success at Wilson, we can actually defer spending money on Benoit and Fenton, but yet still retain the whole package because we have to spend a certain amount to retain everything. So we can also drop one or two of these properties. If, say, Benoit is getting bigger and better, we could drop Fenton and Wilson. Or we could keep all three and just keep spending the required amount. So we're super happy with the flexibility, super happy working with Karcher Resources. They've done a good job here, and we're just continuing the good work that they had historically. Newfoundland, still got great properties in Newfoundland along the Alpton Fault. The Alpton Fault is like a feather, you know, it sort of goes like this, and it's like the early days of the Abitibi. Newfound Gold has been the big exploration company there. They came out with 2 million ounces just recently. They want to do a PEA. We've got property. They're in blue. We're in gold or in yellow. So you can see we've got lots of property right near them. They've been drilling sort of close to our bullseye property, and then they've had good success at Dropkick and getting closer to our gazebo property. So we don't have a resource yet on our Newfoundland property, but we've had 2 gold zone successes so far, one called Horseshoe, one called Saddle on bullseye. So we're super pleased, and we're rooting for Newfound Gold to keep finding gold around our properties. Near-term catalysts. So the goal here is, this is so fresh. This just happened in the last couple of weeks, of course, these 2 option agreements. We need to do the necessary permitting. We've done a lot of due diligence on each of these properties already. But once the permitting's done, we want to get into drill plans. And then so the vision here is, the plan is to start drilling on both Ontario and Quebec in the fall. So we have multiple drill programs going, multiple news flow, and then we're keeping people informed. So we'll be doing some teaching, technical webinars on what we plan to do over the next month or so to kind of show people how the vision here is to grow each of these areas into 1 million ounces. And also, we do have some non-core assets that we're looking for joint venture partners. And we had this list of 100 projects we were looking at. And once you start a process, it's hard to stop it. So I'm not saying we're done, but we're really happy with what we have. But if another opportunity comes up, we might entertain it as well. So anyway, you guys are probably the first big audience I've presented to about this, so I'm super pleased that you're hearing this. And also, we're very happy that to announce, getting into almost 700,000 ounces of gold in a short period of time at a high gold price, all for the benefit of our shareholders. So thank you very much. Oh, sorry, and I think Joanne's going to come up now. There she is, the lovely and amazing Joanne. There we go. Great. Yeah, thank you.
Thank you so much. All right, we're almost at the end. I'd like to thank everyone for being here. And before we get to the student programs, I do want to talk a little bit about our SHICO initiative. You know, when we started this conference 4 years ago, we knew that we were going to be a very different beast and that we were going to be a conference with a conscience. We wanted to make a difference. You know, no matter how small our contribution, we launched the SHICO initiative in 2023 by supporting 2 young women from Afghanistan in the completion of their mining engineer degrees at the University of BC. Last year, we contributed to a drum circle at a grade school in Newfoundland and Labrador to help traumatized community and immigrant children. This year, we asked Sean Rusin of Osisko Development to help us choose a group that would fit our initiative. So please help me welcome Sean, who will be announcing our charity initiative for this year.
Thank you very much, Joanne. And I'd just like to take a moment to put our hands together and thank Joanne for her great organizational skills in getting us all to this conference. She literally works her off to get this happen and make us all enjoy this venue and this city. So we really appreciate the fact that somebody has put together a conference that fits here in Quebec and the great event of the North. That is not solely and exclusively to one entity, but offers opportunity for many institutions such as Glencore and the rest of the sponsors to come together on this one. On behalf of Osisko Development, I'd like to thank Joanne for having gotten us this charity event that we can donate to a cause that we at Osisko Development hold quite dear to our hearts. This goes to a group of people that work tirelessly in Quesnel, which is our home community. It's the Quesnel Education
and Employment Society, QDES. And they focus mostly on people's educational and vocational voyages as they try and acquire skill sets to take advantage of the area that they live in, which is resource intensive between mining, logging, ranching. So we are going to be donating this prize to them, and I will be personally matching it with a similar amount of $5,000. So there'll be $10,000 going to QDES. And a call out to our host communities. This organization is run by the Kuzo Dene First Nations, the Latako Dene First Nations, and the Naxo First Nations. And this is all about pride and purpose and getting capacity building into the communities that host our resource projects. And I encourage everybody in the room to try and find a way to help host another investment into the people that are trying to work in our communities and build the pride, the purpose, and the capacity that we need for these communities to host us in our efforts here. And thank you very much, everybody. And at that point, I'll leave it all to the very meritorious students that are about to receive their awards. Thank you.
Thank you, Sean, for that generous donation. So we will be giving $10,000 to Sean's charity this year. And now I am absolutely thrilled and delighted to introduce the class of 25. I just wanted to say that this year Glencore is the sole sponsor and is the diamond sponsor for our student program. We have introduced 150 students to the mining industry since we started this program in 2023, and we plan to continue it with other sponsors, and hopefully Glencore will be back next year, but there are many people interested in this program, and I think the students are really benefiting. So with that, I would like to introduce Annie McDonald of EVR to the stage to announce the awards given this year for the Glencore student sponsorship. Annie?
Hello, everybody. Thank you, Joanne. So as Joanne said, my name is Annie McDonald, and I work for EVR, which is a Glencore company based in British Columbia. It's been so great here this week to have the opportunity to represent Glencore, who is the proud sponsor of the Mining Investment Conference Student Sponsorship Program. We had a really great week connecting with such a diverse group of students studying in many different disciplines from across Canada and further as well in beautiful Quebec City. It's been a really great week. So to talk a little bit more about the program and what it looked like this year, students were placed in 10 groups, each with 5 students in a group, and they brought their differing perspectives from so many different backgrounds. We had engineering, economics, finance, HR, lots of engineering, geology, geotechnical engineers. It was a really, really diverse group, ranging from first-year students to PhD students and some new grads as well. So a really great group. And so the project was a case study where the team was the hypothetical capital allocation deployment unit for Glencore and had to choose how to invest up to $1 billion, choosing from 8 different Glencore projects. When making their decisions, they needed to consider financial return, carbon impact, stakeholder cred score, and risk mitigation. They then presented their case studies to the judges on a poster board and gave us a little presentation about their decisions as well. All of the judges were really impressed by the collaboration, teamwork, and effort put in by all of the students. So on behalf of Glencore, I wanted to say a huge congratulations to all participating students. Nice work, everybody. All right, on to the awards. So to start with, there's an MVP award. And so we invited all of the students, so 50 students, to recognize a peer who they truly felt went above and beyond during the conference. So whether through leadership, collaboration, professionalism, or a consistently positive attitude, the student really demonstrated all of these attributes. So as voted by the students themselves, we would like to announce the Student Sponsorship Program's MVP. So this year's most valuable participant is Anna Dalmont-Framst. Come on up, Anna. All right, for the overall team award. So this was a really challenging decision as every team showcased and presented their data and decisions in unique and creative ways. So much effort was put in by everyone. One team really stood out to us. They demonstrated excellent communication, collaboration, professionalism, and teamwork. They did a lot of research, and demonstrated their data in a logical and organized way, and every member of the team spoke during their presentation. They were well versed on the projects they were investing in through their independent research. The risks were well calculated and well communicated, and they really highlighted safety considerations. As safety is so important to us at Glencore, this really stood out to us as well. They were also the only team with a team name, which was comprised of an acronym of their first initials. So without further ado, the winning team for the Glencore Business Case Study is Team ACE, or Team 9. Come on up, Team 9. So a lot of students had to leave to go back to school, unfortunately, and so that team did have 5 students, and just to give the students recognition, so I'll say everybody's name, and so the ACE, which was ACE Capital Collective was their team name, and that comprised of Alp Tastikin, Anne Presley, Inez Agbash, Chao Feng, and Edouard Comtos. So congratulations to them. Okay, so for the Outstanding Students Awards, so we recognized 2 students that really stood out to the judges. And so this is the Glencore Outstanding Student Awards. Again, really tough decisions because everyone stood out in different ways. But 2 students really stood out to us during their presentations and throughout the conference as well. They seemed to really immerse themselves into the opportunity. They networked, they attended sessions, they were well-spoken and knowledgeable on their case studies and answered the judges' questions with confidence. So for the 2 outstanding students as recognized by Glencore this year, I'd like to call to the stage Aisha Mohammed from the University of Waterloo studying geological engineering, as well as Alexander Strazazar from TMU studying economics and finance. And finally, I wanted to give a huge shout out to Brett Booker and her team for organizing this amazing student event and pulling it together so seamlessly. She did a wonderful job. They all did a wonderful job. This whole conference has just been a wonderful experience for myself as well. So thank you again, and congratulations to everybody. We are going to call everybody up on the stage, so all the class of 2025 who participated in the student program, to come up for a photo op, and we'll give everyone a well-deserved hand of applause, because they worked incredibly hard, spent a lot of their time at the conference putting these together. And we have the poster boards as well, which we'll showcase for everyone. And yeah, if you'd like to take a look. So everybody please come up for the student photo. Thanks again to all the students. I'll pass it back to Joe. Yeah, it was great. It was nice to meet you. Yeah, thanks, Adam. Thanks for all your help.
All right. Well, ladies and gentlemen, mesdames et messieurs, that is an official wrap for the Mining Investment Event of 2025. We did it. And I would like to thank my incredible team. I could not have done any of this without them. Thank you once again to all of our sponsors and all of our participants. Again, an incredible, incredible team that I have. We will see you next year, June 2 to 4 in 2026. Goodbye, everyone. Thank you.